Right. Thank you, Prashant, so much for joining us on the show. And that's an important advice that's coming in for the viewers as well. In fact, let me also now go to Parag Bhai, who's in the studio. Parag Bhai, times of uncertainty, yes.
Yeah.
But from the market perspective, there are opportunities, and that's what the word on the street is right now, right?
Sure.
How are you looking at it? And from your past experience as well, how would you advise an investor to navigate this situation?
Yeah, so first of all, I would like to thank Indian government and our defense and armed forces. Because of them, we have this luxury of discussing markets. Yeah. So first of all, and I'm really sad that this thing has happened. And so many civilians have lost their lives. So it's a very sad thing. Now coming back to markets, I think what we in fact did is we created some cash, 10 to 12% cash in the portfolio. And so we would like to deploy it if market corrects as it is shown in the GIFT Nifty, say around 300 points down. So we will deploy 25% of the cash, out of 10-12% which we have created in such panics. Generally, we try to do this that when market is going up continuously, we raise cash. And when market falls big time, like this on this kind of events, we try and deploy some cash. That is how we try to give risk-adjusted alpha to our investors. And I would like to say that one should, in such times, actually one should remember that India is best placed in terms of macro. If you leave aside this geopolitical problem, see, crude oil is below $65, right? Current account deficit is good. You know, banking balance sheets are strong. Corporate balance sheets are most under leveraged, I would say. So I would say that remember the positives of India and keep investing in such big falls. And of course, you cannot expect tomorrow everything will recover. But over a period of 6 months to 1 year, you will make good money, especially in the stocks where you will see good earning growth.
So where would you deploy cash right
now? So I'm a very big bull of cement right now. I would like to say it publicly that in cement, finally, the senses have prevailed, and after 5-7 years, we are seeing pricing discipline in the cement industry, and that is led by a very simple reason. See, if you invest, if you put up a new plant, it costs you $80-90 per ton. For 12% ROE also, you have to make 1,000 rupees per ton EBITDA. So if a weaker player also transition towards 1,000 rupees per ton, the cost efficient players already can go to 1,200, 1,300, 1,400 rupees per ton EBITDA. And then that is a big delta to the profits. So I would say that a company like, for example, and disclaimer again, this is a company which I own in the portfolio. I would be a buyer on dips also. And I would say that, see, for good companies during bad times, always do strategically good things. So for example, a company like Remco Cement, right? Now they are increasing capacity from 25 to 30 million tons at very low cost, $35 per ton, because they had front loaded their capex. They have already reduced debt by 400 crores and they want to reduce debt by 1,000 crores. So on one hand, your improved pricing will increase your operating profits, EBITDA, and on the other end, you will reduce your debt. So next 2 to 3 years, you will have a completely different Remco Cement to get put together.
So top two picks are Ramco
and India Cement.
Ramco and India Cement. Kush, what are
these are my portfolio stocks, and I would please advise your viewers to take it from long-term perspective, not trade, and especially in current volatile environment, and take advice of their financial advisors before you buy.
Today is an opportunity if you're a long-term investor to bet on the India story. Yeah. And not just because you're patriotic Indians, but because there is real value and fundamentals there. Let's be clear. We're not telling you, you know, just, you know, you're feeling patriotic today, come and put 1% of your money or whatever. There is real reason for what we're saying. Kush, what are your picks this morning?
So as I have been doing for the last week or so, I'm still going with a long and a short idea, and the shorts have really been, you know, paying off as you would expect in a market like this. But as you said, it's a good time to accumulate good stocks which you're getting at, you know, fairly decent prices. So Jyoti CNC continues to shine. You might get it at a, you know, slightly softer note this morning, but on the whole, the structures are very positive. We've seen a good traction in the entire space, the likes of Power Mix also. So Jyoti CNC for targets of 1225, 1265 with a stop loss around the 1140. 145 mark. If you want to factor for the volatility, you might even push the stop losses a little lower, but that's the kind of setup that the stock is showing. On the short side, I've got Tata Chemicals. I mean, who's ever made money in Tata Chemicals, right, for the last 5-7 years, maybe longer. So continues to remain on a sell on rise kind of a setup. 790, 777 are your targets on the downside. 815 is where you place that stop loss.
Okay. Let's pull up something like a Tata Motors, because the news that you saw overnight, and we took you through that as well, is the UK-US deal. Of course, it is perhaps the initial stages of a conversation on trade between these two countries. But it was seen as beneficial for Jaguar Land Rover from the perspective of lower tariffs being levied on cars imported into the US, which is a significant market for Jaguar Land Rover. Parag bhai, this is a stock that is down today at the start. Maybe it will react differently once markets properly open. I'm just wondering, based on the reaction that you've seen over the past few sessions, it has been moving higher because some of those headwinds seem to be dissipating. Would you go out and buy? Is it valuable for you?
We don't own it right now in the portfolio, but we are considering it now that Trump is also diluting his stance on tariff from UK, and we are hearing that there will be a trade deal with UK very soon. I think it is a good contra buy. It has fallen significantly from its high. So definitely it is under our consideration list.
Anything on the charts, Kush, just to round out that conversation on Tata Motors?
Well, from a medium-term perspective, this is offering a good risk-reward ratio where 600, as we've spoken multiple times, has been that support zone, has been that stop-loss level. And on the upside, you've got 750, 800 plus kind of levels. So maybe not something immediately because the stock's already run up quite a bit, about 10%, a little more than that. But yes, from a medium-term perspective, with that kind of a bottom in place, it now offers a good risk-reward ratio, and you could start accumulating.
Start accumulating at Tata Motors. That's going to be interesting. L&T, that's one stock. How are you looking at it, Parag bhai? Because, right now when you're saying that probably this is the time where you should be looking at accumulating, L&T is not a trading bet. Usually, people find opportunities to look at L&T from a long-term perspective. Taking the way numbers have come in, because they've raised their FY26 core EBITDA margins to 8.5% versus 8.25% last year. Good revenue growth. It's beat a guidance of 15%. Does that tell you a story that this is the time to look at L&T?
Yeah, I think we already have L&T, good portion. I think we are equal weight in L&T, and we continue to like the stock based on the current order book prospects, and I think with steel prices, with cement, I would say that commodity prices also are being lower, so the margins can improve, I think. The only thing is that oil below 65, how it will shape up for them in terms of Saudi Arabia and Middle East orders, that is something which I would like to monitor very closely, because generally the Middle East and Saudi Arabia budgets are made at, by taking crude oil at $70, $75, and crude oil is now below $65. So I think going ahead after 6 months or so, you will have a little bit of this issue coming into L&T, that, and this is what I assume, that the Middle East orders, which are right now in full swing, in fact, can slow down a bit because oil prices are low. And so that affects their budget.
But having said that, oil prices have spiked in the last 24 hours in the hope that there will be an a US-China trade deal. So, you may see
so oil might be at the bottom, we don't know.
Gold has in fact come off. Because
so
of
oil
this.
might be at the bottom because generally at around 60, unless there's a global recession worry, a big recession worry, it should not fall below $55, $56 in my view.
Correct. Just looking at how pre-open has eased off before we go in, just about 4.5 odd minutes for markets to close. So you are 1.5% down. And that was expected, between 1.5% to 2% on the key indices, and that's okay. You are opening below 23,400 to be expected. The advanced decline ratio is going to look skewed. You're going to see equal weights of pressure in Nifty Bank, Nifty IT, etc. Just look at what's working. Even if you look at the Nifty 500 and your top 3 gainers, I'm seeing a Bharat Forge there, 1.5% up. L&T, Bharat Dynamics. So that, of course, will keep changing. I'm just wondering, Parag bhai, this question coming to you. Is there a defense play here today that we need to look at very closely? Bharat Forge also up because there is a quote from Baba Kalyani saying that his team has been called to Delhi. But, procurement doesn't begin in the middle of a war. that is, we're already well set, and the procurement cycle is 5 to 10 years and more. You know, what we're using today, we have planned about it half a decade in advance, or at least 2-3 years in advance as the timeline is. Is there a defense play today, or is there a momentum play for defense stocks today?
So basically, as you very rightly said, we don't play into narratives, because narratives generally take too long a time, and market stretches valuations in the first and then realizes that, oh, narrative is not playing out as it was planned. It has happened in so many cases in retail, for example. So I would say that we stay away from narratives. We focus on earnings and cash flows and valuations. And that way we were comfortable with HAL in our last correction, and that I already mentioned. We hold around 4.5% weight in the portfolio of HAL and around 3.5% L&T, and we'll continue with that. It is not something that today, because there is a war kind of situation, we are going to buy defense stocks today.
The problem with, just to complete that point, the problem with narratives and Chinese whispers, unfortunately, is that by the time you hear it, it's possible that the message has changed.
No, but the other aspect that we need to consider is from a forward-looking perspective, where the replenishment will start happening in terms of the overall system.
Sure.
And that's when your orders will start kicking in. The new cycle in terms of order books could come in, and probably you could see a revision from a longer term perspective in terms of the order book and the revenue guidance, taking this into consideration.
Absolutely.
Right? So probably a long term bet, but very quickly, Kush, anything that looks interesting on the charts from the defense side?
I'm afraid not, and as counterintuitive it is, a lot of defense names haven't really done as one would expect. So I would wait it out. Perhaps something like a BDL, which is and BDL and a BEL, which are still holding ground, are the ones to consider. But I wouldn't really play them just now because of the kind of situation that we've got. They've not played out in terms of the price action.
Specifically, Kush, on Bharat Forge on charts.
Again, a wait and watch, because you're seeing some consolidation. There is a bit of a gap up opening, but I'm not sure how sustainable that is. So I would, in fact, as a strategy, I would want to wait for the first 15-20 minutes, maybe even half an hour, to see whether we regain any lost ground, which I think there could well be a possibility by the close of the session today. But if things slide further, you might want to just sit this one out today.
Okay, very quickly, Parag bhai, I know that defense play, we've already answered that question, but I'm just wondering, companies that manufacture artillery, is that something that you would look at?
No, Bharat Forge has fallen significantly, so Bharat Forge can be considered. Right now, we don't have it in the portfolio because generally we were a little bit concerned about this Trump tariffs having a overall growth impact on the world economy, and Bharat Forge is very linked to world because it is a large manufacturer of CV components, right? And CV depends on economy. So that's why we have waited till now, but it's a good stock.
Weren't very pretty.
Yeah. In fact, their defense portfolio itself was a major drag in terms of this quarter.
But see, remember, due to that defense thing, it went up to 1850, and now we are at 1100. So you have to remember one thing, that all these things, that narrative, when the artillery gun order was expected, it was just rising and went up to 1800, right? And now it is 1100. So I think.
Pre-open indicating that Bharat Forge will be in action. Just about 12 seconds to go as markets open. Be set for volatility in the beginning. I mean, if you don't see a drawdown this morning in opening, it would be very, very unusual. We have seen an escalation of conflict, unprecedented escalation of conflict and aerial battles between India and Pakistan last night, attempt to attack our cities. So you are going to see that drawdown, just about 1% down. Not bad at all. This is not a market that is panicking. This is a market which is understanding what is happening. We're above the 24,000 mark right now. It's about 200 points down, which was expected. The Nifty IT about 0.5% down. That's all right. Bank Nifty showing some signs of weakness. This is the only one in the green, right? The Nifty defense, as one would expect to see. Even the Sensex just about 0.5% down. Actually, I don't know if it's too early to show an intraday for the Nifty, but would there be some recovery coming in? Because your index is actually looking pretty robust in terms of how it's climbing. That drawdown reducing rapidly or above the 24,100 mark. Is this Indian investors coming and saying, we're buying India right now? Even VIX has come off. You were seeing the VIX at above 10% up, about 6.5% up. So of course, above 22, that means that volatility is high. But I would say that this is a market that is not looking that nervous, considering the kind of night that we've all had. Let me pull up the heat map for the Nifty very quickly and just give you a sense of what is happening there. So, okay, Okay, you have 4 stocks in the green as was expected and a whole host of red also as expected. But what's working? Titan. Numbers were good. Stellar numbers on Titan. That has been heartening for the street. L&T, we've talked about again a good set of numbers. Bharat Electronics, BEL, you're going to see some action on the defense front as could be expected. Kotak Mahindra Bank, Tata Motors, they're on the edge of maybe turning positive in just a few minutes from now, perhaps. What is really not working? Power grid feeling some pain, Eternal, Coal India, but see the maximum drawdown, even on the top 50 stocks on the Nifty, is about less than 3%. So I would say, all things considered, this is not a bad start this morning, even as we'll have to watch very carefully whether the Nifty can stay above the 24,000 mark. That's one key level to watch out. Of course, you've had a gap down opening, which was to be expected, Alex. I think it'll be also important to see what kind of a move on the broader markets. But this is the line graph I was just waiting for. Look at how you've plunged down in the opening. And of course, it's just been a couple of minutes. But having said that, the recovery that you're seeing thereon. So we have to see if this stays
Sustains.
robust. Yeah.
Let's pull up the broader markets as well, just to give you a sense. And remember, yesterday you saw a sharp drop in the equity markets. Of course, you are off the high point, off the low point for the broader markets as well. The mid-cap index trading now with cuts of less than 1%. Small cap index still about 1.5%, 1.4% lower. The market breadth at the open understandably a little bit weak, but then it might just change. That texture might change over the course of the morning session. And there you go. So you have the sectoral heat map. This kind of gives you a similar picture to what the Nifty 50 heat map was telling you. A majority of the screen in the red, but the defense pack understandably in focus, gaining about 1% or so. Consumer durables as well as a pack gaining about 0.75%. On the bottom of the screen, again, not too much in the way of sharp declines. You have the realty pack, the oil and gas pack that are under a little bit of pressure. They were in trade yesterday as well. That continues, but cuts of about 1% or thereabouts. Nothing really to worry about. Now, let's pull up the list of stocks that are in focus, and this is primarily the watch list that we were telling you about before the start of trade. Let's pull up something like a Z and talk about a majority of these stocks in the context of the earnings that they have put forward for the quarter ended March. Z is up and about. Good set of numbers coming through for this company. Lower costs and, in fact, lower taxes paid during the quarter have aided that bottom line, and that is reflective in the way that it is seeing buying in trade today. Union Bank of India, let's pull that one up from the banking pack. Strong PAT growth. Profitability is improving. This is something that is evident in a few banks where they've seen an expansion in the NIMs, and the profits have, as a result of which, gotten a bit of a tailwind. It's up about 3.5%, reacting to the numbers as well. Brigade Enterprises, it's set to develop a new property, or rather a new project, worth 2,000 crore rupees in Bengaluru, as I understand it, down about 0.7%. And that realty pack as a whole seeing a little bit of pressure. So this might really be a reflection of that pressure in the realty pack as a whole. You also have Kalyan Jewelers that might be reacting to its numbers. It's a decent set of numbers. It's a robust same stores sales growth that the company has reported. It's up about 0.33%. Biocon, EBITDA and margin have beaten the estimates, and from the pharma pack, it's gaining only about 0.5% or thereabouts. But in the context of what we're seeing today, a positive move is telling. What more? REC, this is on the downside. You have a miss on the guidance, which is something that the street is not going to like. Remember that the power financiers have been in focus, but the guidance looking a little weak is not something that the street is going to like. Pidilite, the EBITDA is a miss on account of higher marketing spends by this company, but still it's reacting positively. It's up about 1% or so despite that Q4 miss. Couple more stocks. Muthoot Microfinance has seen its credit cost rise on account of asset quality woes, and that is reflective in the kind of selling that it's seeing, 8% lower at this point. And finally, Fine Organics, once again a weak quarter for this company. It's seeing selling. You have had a worsening of the operational metrics for this company. That's reflective in how the share price is reacting. So broadly, you have understandable reactions to key developments. The tone seems to be a little cautious ahead of that weekend, Hiral.
Absolutely, the tone is cautious, but what's interesting is the kind of stocks that are holding out as well. Though if you talk about the advanced decline ratio, absolutely in favor of the bears. Around 240 stocks which are on the advanced side on NSE versus 2000 upwards kind of a number on the losing side. Let's just pull up Titan and Kalyan Jewelers as well. Titan, a 4% up move that's coming in on that counter on the back of earnings. And with that, L&T is also zoomed. Parag bhai, a quick view in terms of the jewelers, Titan and a Kalyan Jewelers. The way Titan is buzzing, is this a sector to be in, taking into consideration the way gold prices have panned out? Probably concerns that could come in terms of volumes going ahead.
Yeah, so basically I am not very gung-ho about this particular theme because gold prices have gone up significantly. And but Titan, of course, full credit to them. They continue to do well and they continue to surprise markets. So Titan is a stock which I would definitely keep on my radar on every dip, but no other jewelers for sure.
Okay, so that's with regards to Titan and Kalyan. Anything from this pack, Kush, that is coming to your radar? Any opportunity you're seeing a breakout on a Titan? 3,500 is where it's at now.
So definitely a clear breakout on this one. 3,400 was the level that it was resisting around for some time for the last week or so. Today we've got a good breakout. The volumes at open are quite strong. So I think this momentum could well last. But from very near-term perspective, I think if you've had a position, then it's a good time to book some profits partially at least and take some money off the table. And if you want to enter, then closer to the 3,400 mark, 3,430 mark is when you should re-enter. Just a quick word on the Nifty. While we did mention very briefly just before open that we might end higher at least compared to from where we are starting off, and we're seeing that. What is also interesting is that if you look at the last 10 minutes data for yesterday's closing, the heavy short selling actually came from 24,300 to 24,250 mark, right? So anyone who shorted very heavily around those levels in the last 10-15 odd minutes is still making profits. So what we're seeing right now is a bit of a covering of that only. Whether this is sustainable and you don't see any further shorts, that remains to be seen. So just while you take heart from the fact that yes, we've already recovered quite a bit of ground from where we opened, I wouldn't call it out of the woods yet. As long as we hold above the opening lows, I think the markets are in good state.
Okay, pull up something like a Mayur Uniquarters. And this is something that my colleague Mahima pointed this out. It's doing well in trade today, up about 10%. And just pull up the numbers on the screen if we can. The revenue is up as much as 13%. The margins have expanded just a tad bit, 22.7%. The PAT number is as much as 30% high at 41 crore rupees. Any coverage at all? Have you looked at this company, Parag bhai?
Yeah, I have looked at this company in the past and it's a decent company. And they were about to get orders from Mercedes and at least that is what till my memory goes. But it's a genuine good business, good company into good products. And I saw the results just today morning and results were looking very good.
Anything on the charts that you would say on Mayur Uniquarters?
Good move, and it's coming on the back of some consolidation that you've seen, but consolidation with a positive bias over the last few sessions, in fact negating the market trend that we've been seeing. So a good move on this one. 505, 507 levels were a bit of a resistance, and right now it's sustaining above that. So as long as it stays above this, I think you've got a good up move coming along its way. Remember that the stock's actually fallen off a cliff from those 650 odd levels late 2024. So the risk reward ratio for you will be fairly favorable. So if you have it, you should continue to hold. If you want to buy afresh, you could still buy. Keep your stop losses around the 500 mark. On the upside, you're gunning for targets of 535 and about 555. So a good move on this one, especially on a day like this. If you get a strong close, then yes, further upsides in coming days.
Just want to highlight what's been happening in the last few minutes. The breadth has improved. Just pull up the advanced decline ratio. The breadth has improved in the markets. There's a clear focus on defense, and this is something we spoke about before market started as well. What's also coming to mind is Titan. Look at the run-up in Titan. It's not half bad at all. Titan about 4% up this morning. Larsen and Toubro also in focus, and we'll get you detailed reports on what exactly is there in the numbers, which has got the street excited. But a Zentech about 5% above Bharat Dynamics, BEL, HAL. Now, I know we've been speaking about how this is a momentum play, but the fact is it is a momentum play. Kush, what would be the strategy on any of these? Would you buy into this momentum? Because this is something that we're going to be seeing for the next few days at least. You're going to see this focus on defense, on geopolitical and regional concerns.
So, if I look at it from a purely technical perspective, just keeping everything out, look at the price setup for some of these, even when, the tensions started, they actually saw a bit of profit booking. Today, you're seeing some sort of recovery. Why not choose a stock which has actually seen a positive bias and an up move in the recent days for the last few sessions, and that is Paras Defense. This stock did not correct. This did not see any kind of profit booking or any kind of consolidation with a negative bias. Today, also, if you see the stocks actually moving higher, up by about 3.5%. So, if I were to bet purely momentum, then Paras Defense is the stock to go with. On the upside, you're looking at 1440, 1475 kind of levels, and there's a support zone near the 1355 mark, which has acted pretty strongly over the last few sessions. So yes, the BDLs and HALs of the world could continue to rise after the kind of profit booking that you've seen. But if you're going for a pure momentum play, Paras Defense is your stock.
Okay. How are you looking at Idea Forge, a drone manufacturer, seeing gains of 9.5%? Numbers have been good as well, and that's one of the reasons why you're seeing this kind of strength built up on this counter. A good buy at current levels? Kush? Yes.
Well, I think it's already starting to show in the price. You look at the volumes that have stacked up yesterday, and today we've only been about 10-15 minutes in the open, and the volumes have already crossed yesterday's entire day's volume on this. So I think this is a play that the streets already sensed. It's given a very clear breakout above the 395 mark. I think this is going to sustain the kind of momentum that you're seeing, and a good strong volume backed move. It's the theme as well. Currently. So I think you could well continue to play this even after the kind of rise that you've seen over the last 2 days, yesterday and today included so far. It's far away from those overheated levels. So yes, there is a good chance that it could move higher. On the upside, 455 and about 480 are your targets, and the resistance level of 395, the erstwhile resistance level, will now start acting as your stop loss.
On that note, gentlemen, thanks so much for joining us, Kush as well as Parag Bhai in studio. We are off the low point of the day for the benchmark index, the Nifty 50, trading with cuts only about 0.6% right now. The Nifty Bank also off the low point of the day. We'll be back on the other side to get you action from the banking space and everything else that you need to know about live markets. Do stay tuned.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
इजी मेंटेनेंस है।
आपको मालूम है इसका फेस वॉश का खर्चा डबल है। तो देख मेरी आंखों के नीचे पहली बार तेरे को डार्क सर्कल है। एक मरे हुए मुर्गे में अगर जान डाल सकते हैं ना तो डिलिशियस बनेगा।
Friendship came first or the idea came first?
Abhay, he was my friend. We also had.
I was.
Okay, this time. Actually, he landed in my office with this whole.
Welcome back. You're watching India Market Open. Quickly on to a management and on to a big voice from the PSU banking space. We have K. Satyanarayan Raju of Canara Bank joining us with regard to the Q4 numbers of Canara Bank. Good morning, sir. First off, I want to start off by understanding growth. It's been strong for you in FY25. Can it sustain in FY26? And will you prioritize deposit growth? Is that also going to be the priority?
So last year the guidance what we are given for credit is 10%, and the deposit growth is 9%. As always, we give little conservatively the guidance and we surpass the targets. This year also proved our stand is correct, that the advances growth as against the 10%, we achieved 11.74, near to the 12%. The deposit growth also is as against 9%, we could achieve 11%. With this growth, our CD ratio is, as on date, it's around 73%. If you can continue with that 9 to for the next financial year, we are given the guidance of credit growth is from between the 10 to 11%, and the deposit growth is between the 9 to 10%. Why we are given that growth is, even with this growth percentage 10 to 11 and 9 to 10%, our CD ratio may go up to 75%, which is also is very comfortable for us. We have that cushion, but at the same time we don't want to be complacent on mobilizing the deposits because of the situation in the banking industry, that some banks are finding it difficult in mobilizing the deposits. We continue to give the priority on the deposits. Don't mind maintaining at 73%, but we continue to grow it. But though we are given it's 9 to 10%, the guidance is only to keeping in the minds that the CD ratio.
Got your point, sir. Where do you expect margins to bottom? It's a rate cut cycle.
We are given a guidance of 2.75 to 2.80. For the previous year, we could achieve 2.80 cumulatively, but the December quarter, it was 2.70. For March quarter, it was little slightly improved to 2.73. Now, gradually from 1st April onwards, the cost of deposit on the bulk and the CDs are coming down gradually, but still we should see the downward revision in the retail term deposits. Once that starts, then I think the interest rate on deposits also will continue to soften. Then our reaching that 2.75 to 2.80 may not be problem. But first, because already 2 times the RBI has reduced that repo rate cut is there already, 25 basis points, which we are extended to all our 44% of that book immediately. And we are also expecting that another 2 times may be there in the rate cuts in the current financial year. So that also will be passed on to that 44% of the book. But the same level, the same thing cannot be passed on to the deposits. There will be a gap of almost 4 to 6 months time to pass it on this downward interest rate movement in the deposits. That to that extent we have to absorb that. That's why in first quarter and second quarter we may continue to be at 2.73, 2.75 that, and we are confident, we are hopeful that this third quarter and fourth quarter will help us in maintaining the 2.80.
Right, so the understanding is you've recovered around 1700 crores from Bhushan Steel, and if the SC ruling is to be followed, you might have to reverse that recovery that you've made. When do you expect, will it be a provisioning firstly? When do you expect the provisioning? Q1 or Q2?
Actually, on this particular account, I don't want to comment on that because it's too early to discuss about that. It's a judgment has come. There are several opportunities, offers, the chances are there for all the stakeholders. Everybody is in the discussions mode. I feel that it is too early to discuss about that.
So sorry, but what do you mean by offers? Do you expect to get a better value for the asset?
I don't want to comment on that this much earlier. So it's too early to comment on that particular specific account.
Okay, so point taken. So with regard to FY26, what's the credit cost guidance like, and how comfortable are you with that guidance? What's the recovery number going to look like as well? Give us perspective.
See, sir, it's actually the credit cost what we are given the guidance for next financial year. It is a 0.90. This is also, again, let me say that conservative figure only. Why we are given that conservative figure is 2 years back we have taken a stand that though we were at 87% compared to the peer banks PCR of 95 to 97%, we want to come above 95% in the shortest possible time. You can see that the just concluded financial year, almost we improved our PCR 360 basis points. That's the reason actually our credit cost is looking at 0.9 or 0.91%, whatever it is there. Otherwise, in actual purposes, if we don't provide that additional NPA provisioning, our credit cost will be much, much below. Since still we are at below than the 95%, we are at 92.70%. Our efforts to continue the strengthen the PCR will continue. That's the reason, keeping in that mind, we are given the credit cost at a conservative type of 0.90. But definitely, even after making the provisioning, improving the PCR, our credit cost will be much better than what we are given the guidance.
Well, and recoveries, what's the FY26 target?
See, our always last 2 years we are given a guidance that our recoveries and upgradation together will be much better than the slippages, and we have proved continuously, except to the June quarter, we have proved in all the quarters that our recovery and upgradation together is much more than the higher than the slippage. This tempo will continue, and there won't be any change in this, and we are confident our systems have been matured. We are able to achieve those things quarter on quarter, even month on month. But the only thing with the benefits what we are getting, it will continue. I want to say that in the technical return of recovery. Last year when we said that we recovered 5,900 crores in the technical return of accounts, everybody has asked us that whether it continue or it will be a one time. When we confidently told that it's an ongoing process and it will continue, since our return of book is still about 70,000 crores, and that has proved in the just concluded financial years we could recover almost 6,800 odd. So our recoveries, technical return of also, earlier also I given a guidance that the minimum 5,000 crores per annum can be recovered, and our recoveries and the upgradation will be much higher than our slippages. That is the reason our guidance in the gross NPA, we have given it from present 2.94 to 2.50, and the net NPA has further reducing that point from 0.70 to 0.60.
Well, sir, the other piece is with regard to other income, it's witnessed sharp growth. Any one-offs there? Is this sustainable?
There is no one-off such issues. If you see that quarter on quarter sequentially, there is a fee-based income is increasing it. The reason is because of the regulatory guidelines, last year, 1st April onwards, all the penal interest, whatever we are collecting from our borrowers, that has to be accounted under the fee-based income instead of interest income. To that extent, though there is a dent in that NII, but it doesn't benefit in the fee income. We got it, it's only account reclassification. The second benefit what we are getting is the interest on the fee-based income. All our service charges have been automated 100%. Now there is no human intervention in collecting the service charges. That has almost mitigated or minimized that leakage of income. That is also helping our fee-based income on that. Nowadays, we are considering a non-fund-based business growth also as a part of our business strategy. And while giving that outlets, we are giving special targets in the non-fund-based, that as a part of our business strategy to improve the fee-based income. We also started one vertical in the collections, that is like a NACH mandate or ECS or something, that to help the corporates in getting it done. That we have started 15 months back. In the last 1 year, we got almost 130 crores additional income. I'm sure that this year we are targeting it to match it with around 300 crores from that vertical, single vertical only. And our card business also is growing year on year. That also will help us in getting the fee-based income. Wherever possibility is there, we are exploring that possibility, and we continue to focus on the fee-based income.
So, just trying to sum this up, no NIM pressure from Q4 levels. You seem confident with regard to other income. OPEX is well controlled. Credit cost to be at the same level as now. So 1.25% ROA is what you've clocked currently. Why give a guidance of 1.05? Where's the gap? Can you do better? Is there an upside surprise to ROA?
See, we are given a guidance again in this where ROA also is a conservatively at 1.05. But in the December quarter itself, 1.09, we could achieve that. This conservativeness we have given it for conservative, but actually our net profits are, if you see that last 9 quarters ka journey, no quarter we could show a lesser profits than that previous quarter. So our progress, steady growth in the net profits will continue. And our operating profits also simultaneously, you see that it is growing in the double digit. The year on year, if you see that we have grown March operating profits are also more than 12.24%. These are all that will help us our return on asset definitely be above the what we have given the guidance. I'm sure that it may be around 1.10 also it will be there cumulatively if you see that.
Interesting. Thank you so much, sir, for joining us, giving us those views and perspectives. Canara Bank up 1% in trade post numbers which actually came out yesterday. So per se, it looks like a decent set. But with that, we'll actually slip into a very short break. More on the other side. Stay tuned.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
इजी मेंटेनेंस है।
आपको मालूम है इसका फेस वॉश का खर्चा डबल है। तो देख मेरी आंखों के नीचे पहली बार तेरे को डार्क सर्कल है। एक मरे हुए मुर्गे में अगर जान डाल सकते हैं ना तो लिशियस बने।
Friendship came first or the idea came first?
Abhay, he was my friend. We also had.
Was.
Okay, this time. Actually, he landed in my office with this whole meat idea.
Actually मैं बताया नहीं, मैंने शराब पी के इसको बोला था कि ये करना है।
Have the conversation in his office. He doesn't take it too seriously.
इसको मैंने बुलाया घर आजा भाई, दोपहर को आया अपने महंगे वीसी वाले कपड़े पहन के। दरवाजे पे घंटी बजी, वो भैया ने इसको सोन पापड़ी के डब्बे में मटन पकड़ा दिया। तो इसके महंगे कपड़ों पे थोड़ा वो छलक गया। तो
Was it tough initially to get people to buy into the story?
I come from actually Baniya vegetarian family and my parents, my dad side, मैं मतलब लोगों को क्या बोलूँगा?
The best thing is if a friendship survives a business pitch, I think that should be a true test of friendship.
हमने एक दूसरे को ये लिख के वादा किया था,
अगर बीवियाँ भी लड़ लें तो हम झगड़ा नहीं कर सकते।
मर जाएंगे बट नहीं हटेंगे।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Welcome back. You're watching India Market Open, and I would say markets are down, but some recovery from the kind of start that we have had. I just want to pull up the stock of Bharat Dynamic, 7.5% up on Bharat Dynamic. It's all about the defense play this morning, even as India has successfully thwarted an attempt from Pakistan across the coastline and across the border shared between the two nations. So 7.5% up on Bharat Dynamic. That's the stock to watch this morning. So is Zentech, about 5% up. Bharat Electronic, L&T on the back of numbers. Data Patterns about 3.5% up. In fact, let's pull up the components of the Nifty Defense Index as well, because that's the one that's really firing. What's not firing, of course, is banks, as one would expect, that you would see an overall pull in the markets after what has happened last night. But among Nifty PSEs, even defense stocks firing more than anything else. Canara Bank doing fine because of its numbers. You just heard the management on the channel. HAL also doing pretty okay. But I wanted to look at the defense index actually. KPR Mills also in focus this morning, but 5% up. Union Bank on the back of numbers also looking pretty robust. L&T is the stock to watch, about 4.5% up. Titan is the one that's truly shining on the back of numbers. Titan is about 4% up, and you'll hear from Ashok Sonthalia just in a few minutes from now on NDTV Profit. You're also seeing Tata Motors. I want to pull up the Tata Motors stock for a second, because the US-UK deal that has been inked yesterday, the trade deal, has ensured that the overhang that Tata Motors was seeing with JLR's exports into the US has now come off, which is why you're seeing an up move there in the Tata Motors stock as well. But Hiral, I think what is important to note is that the advanced decline ratio has improved in the last 15 minutes or so since markets opened, and the Nifty managing to stay above the 24,000 levels. Yes, 0.75% down, but still managing to stay on.
Yeah. And let's just pull up India VIX as well, because the way India VIX, Tamanna, spiked in those last 15 minutes of trade really told you some story. And there you go, the uptick continues. You're 6.5%, 7% higher. You're above 22 as well. 22.43 is what you're tracking in terms of India VIX. So there is that kind of uncertainty, volatility and underconfidence that does prevail in terms of where markets go. And that's what the VIX story is telling you overall. Apart from that, let's just pull up our MCX on the screens as well, because in times of uncertainties, you do see that pressure coming in on a MCX, taking into consideration a commodity exchange that is trading at the day's lowest levels with cuts of around 6% coming in there. Poly Medicure is another one which is seeing a beating for a second consecutive session. EIH Hotels, Indian Hotels, these are a few of the other names which are down and about in trade. And on the gaining side, Idea Forge is an interesting one. Zen Technologies, KPR Mills, and you have a Union Bank which is reacting to the numbers. So overall, an interesting day of trade. A lot of stock-specific action is what you're seeing. However, there is that some bit of support and resilience at levels of around 24,000 in terms of Nifty 50 as well. But let's shift focus to Titan, as Tamanna was mentioning, an interesting play on the back of earnings. In fact, we spoke to Ashok Sonthalia, CFO at Titan, to decode their quarter gone by. Let's quickly listen in to that conversation.
Overall, your jewelry margins have improved, and this is of course on the back of a one-off, which is due to hedging. Just wanted to get a sense of how the margins would have been if that one-off would not have been there. And secondly, what is the outlook like in terms of FY26 margins?
So, yeah, thank you very much, Mahima. I think we are quite happy and satisfied with the Q4 performance. As far as margin is concerned, just minor correction that while it was a combination of operating leverage through better cost management and hedging gains, which came through the forward premium. And they are also, part of it is permanent and part of it can get reversed, going forward. FY26 started well. Akshaya Tritiya was this time in the month of April, and it has gone well as far as we wanted it to be. Gold price increase, unrelenting increase, has been creating pressure on various aspects of the business, including consumer sentiment. And therefore, sometimes it is difficult to predict FY26, but still we believe 15 to 20% growth range for the company. And for jewelry division, we have guided 11 to 11.5% EBIT margin band we should be able to maintain if everything remains the way they are. Lot of uncertainty going around us. So to that extent, we must understand that these things can undergo change if things really doesn't improve from here.
Right. And just on that, because gold prices are on the rise, a lot of these jewelry companies I, read, even in terms of their business update, there was a trend that I've observed is that gold coins and gold chains are something that have really picked up. because people are not now willing to pay that making charges part, right, in terms of buying gold coins. Just wanted to understand, because for you also gold coins was a significant growth of almost 64 odd %. Is that a trend, a structural shift because of the rising gold prices that you are seeing, and is that here to stay?
So when gold prices have all of a sudden went up, in last quarter also, while for last 12 months they have been going up, but last quarter again saw another burst of price rise. People generally, the investment orientation takes center stage, and at that point of time, coin or low making charge jewelry becomes a preferred vehicle for people to invest money. Adornment takes a bit back seat. But as we move into quarter one, and we all know that this quarter one compared to last year quarter one have much more spread wedding days, etc. And weddings would require ornament and adornment kind of jewelry. There people will not be looking for coins and simple chains, etc. So we think it's a temporary thing. Once people get used to this level of pricing, because right now there is still expectation in the mind of consumer, perhaps some correction would come. And it may not be completely unfounded, but if that doesn't happen and people still get used to this level of pricing, then I believe again adornment would start taking center stage.
Understood. And in terms of your overall gold lease cost, that has moderated, and even that has, overall has had a positive impact on your margins. Just wanted to understand as to what this means in terms of improvement going forward as well, and overall, how does that impact your financials positively?
So gold lease actually, Mahima, has been a great product for Titan to get into, the gold procurement and our working capital management. We have been enjoying very, very fine rates, best in the industry, and availability of limit is also pretty generous for us compared to some of the competition. What happened after the US tariff situation started escalating, in a knee-jerk reaction, GOL cost actually doubled, more than doubled in February, March, which has started settling down back to the level, but still it is 75 to 80 basis point higher than what it has been in FY25. So to that extent, this development is will create some pressure on the interest cost. It has settled down. It might further settle down if situation improve. But otherwise, just in economic or financial term, FY26 will see some higher interest charges in our P&L because of the dual interest rate.
That's huge. That is a biggie. It's out of there.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
इजी मेंटेनेंस है।
आपको मालूम है इसका फेस वॉश का खर्चा डबल है। तो देख मेरी आंखों के नीचे पहली बार तेरे को डार्क सर्कल है। एक मरे हुए मुर्गे में अगर जान डाल सकते हैं ना तो डिलिशियस बने।
Friendship came first or the idea came first?
Abhay, he was my friend. We also had. Okay, this time. Actually, he landed in my office with this whole meat idea.
Actually, मैं बताया नहीं, मैंने शराब पी के इसको बोला था कि ये करना है।
welcome back. On our corporate radar this morning, we're talking to Sula Vineyards on their numbers in Q4. A bit of a muted growth on revenue and EBITDA, but in line with expectations. Slowdown in urban consumption has been responsible for the decline in revenue as well. We're joined by Rajiv Samant, CEO of Sula Vineyards. Rajiv, very good morning. Thank you for speaking with us here at NDTV Profit. How do you recap Q4?
So Q4 has continued to see some the urban slowdown, as you mentioned. We are, though, however, seeing some green shoots. We had always guided that Q1 would look better because last year Q1, if you remember, there were elections. So we had national elections and we had state elections in Maharashtra. So, fingers crossed, cautiously optimistic that Q1 should be a better show. And we do believe that the worst is behind us.
Tell us what the overall demand is looking like, because urban demand that you're saying is slowing down. Are the fundamental factors pushing behind that really changing? One would argue not really, Rajiv. So when you're saying the worst is behind us, I'm just trying to understand why.
Sure, you're right. So, a couple things to remember here. You have the sort of the bigger factors playing out. And yes, there's still that slowdown. We still see that. And now, of course, we have some amount of heightened uncertainty given the situation. However, having said that, we did have specific factors that impacted us. So you always have wider macro factors and then you have micro factors. So yes, in the case of the macro, we are still not out of the woods yet. We do hope that, the tax cut, interest rate reductions are going to come into play pretty soon. However, at the micro level, things like the elections, then we had the Pune shutdown, etc., which really impacted us in FY25, and those are firmly behind us in FY26.
Rajiv, sorry, just one question on your margins. The slide that we've seen from 24 to 22.6%, this was because of these shutdowns you've mentioned. It's because of volumes coming down, or has there been pressure elsewhere?
Well, when you don't have a significant sales growth, it does impact on margins. Our business is pretty sticky. Grapes, you got to sign long-term contracts, and if sales slow down, you already have the grapes that you're looking for. Some of those grapes are more expensive grapes. They end up going maybe into cheaper wine when you don't sell as much of the wine as you expected. So you do have sticky costs. However, looking ahead, we've really taken a hard look at our cost structure. And we are very confident that we're going to have a good bounce back in terms of profits and a good reduction of costs vis-a-vis the top line in FY26. So we are adjusting to the new reality, and we're confident about it.
Good morning, Hiral on this side as well. So clearly, the concentration now for you is going to be your premium segment, which is almost 77% of your total revenues. Taking that into consideration and the efforts that you're making on the cost side, how are you expecting FY26-27 to then pan out, not only from a margin perspective, but also from a top line perspective? What will be that growth range that you should look at? Because 25, yes, it has been slow with a 2% growth. Let's be honest, it's been a slightly tough year.
Good morning to you, Hiral. Yes, FY25 has been what I would call a reset year. So after 3 excellent years, yes, we have had a slower year. 2% was not what we were hoping for at the beginning of the year. We were hoping to do much better than that. But looking ahead to FY26, we do feel that the worst is behind us, and we should see a much better sales growth. And definitely, what we are looking for is we would be disappointed if we did not deliver a double-digit earnings growth.
Okay, so double-digit earning growth is what could be on the cards from here on. Apart from that, if you have to look at the demand in terms of wine, how are you seeing that pan out? Because recently, in terms, if you have to look at IMFL versus beer, that's where the juices, where people are talking about how the shift has happened between these two. Now, if you have to look at wine as the third component, how are you looking at the demand picture?
So we're looking at a stronger demand picture for our more expensive wines. So, we broadly categorize into four: popular, economy, premium, and elite. And our elite wines have shown the strongest performance this year, which is really good news for us, because these are wines typically between 1,000 and 2,000 rupees. There we've seen double-digit growth. All the other categories, unfortunately, have been impacted by the urban slowdown. And also there's been some unsustainable discounting in these segments that we can see it sort of drawing to a close or definitely reducing. We ourselves have cut our sales and distribution expenses in Q4 and again in Q1. And so, we are confident that things are getting better on the discounting front, which should benefit us. But our elite wines, that's been a big success story, especially our Source range. That's been our standout. So we see good times ahead for that.
Okay, so good times ahead with regards to where overall demand goes. Any new launches planned, Rajiv, in terms of FY26? And if so, in which segments would they be?
So very interestingly, for around 5 years, we did not have a new launch in our premium segment, the classic Sula series, the really well-known Sula Sun. And we heard our clients, we heard our sales force. And so in FY25, we launched our first Merlot as a Sula Merlot, the classic, not in the Source and Rasa range. And I'm happy to say that you can expect within this quarter itself, hopefully, one more launch within our Sula Classic range. That's all that I would like to say for right now. There's more ahead. But again, we are strengthening this time our sub 1,000 rupee portfolio, because, the bulk of our consumers, of our clients, are ultimately in sub 1,000 rupees. Maybe we've neglected that segment for new launches a little bit over the last 5 years. So we're going to make up for that.
Right. So I think that's what I think consumers will be watching out for as well. But thank you, Rajiv, so much for joining us on the show at NDTV Profit. Always a pleasure to speak to you. So clearly, as Rajiv was mentioning, a reset here in terms of FY25, the stock being slightly resilient today with marginal cuts of 0.8%. If we can just quickly have a one-year chart as well to understand what the journey has been so far, because clearly the year was not something that the company appreciated themselves as well. But there you go, 45% is the kind of cuts that you've already seen on the counter. But moving on, another pharma major, Biocon, that has announced a good, strong set of fourth quarter numbers. Varsha joins us with the details. Varsha, in terms of where Biocon goes, the stock is now under pressure with cuts of 1.5%. What has worked, what has not worked, and what are the key highlights?
Yeah, thank you for that. So, Hiral, technically good set of numbers. Technically, operationally, company has given good set of numbers. If you see, profit did beat estimates, but the revenue growth that you are seeing is led by their biosimilar business and the generics. So, generics was the highlighting factor when it comes to overall Biocon. But the surge in net profit that you are seeing, so net profit was up almost 155%. But this is because of the exceptional gain that the company has achieved. So, exceptional gain aided net profit, and the lower tax, if you see, lower tax also helped profit to grow this much. So tax was around 6% this quarter versus 48% last year. And a company has also approved fundraise of rupees 4,500 crore through issue of securities. Now this is for the Biocon biologics, because of the lot of biosimilar launches that the company is expecting. Company did say that the sequentially, if you see, all segments reported growth, and the R&D contribution was 7% of the revenues, and Q4 has been the strongest quarter when it comes to generics, and company is expecting a surge in global demand for insulin, and FY25 has been a year of consolidation, but on companies on the path of accelerating growth. So overall, here the con call was also good. They're expecting good launches, and Biocon and Biocon Biologics will actually be merged with Biocon. So overall, good set of numbers, good con call.
Okay, Biocon, good set of numbers. Stock about 1.5% down. Meanwhile, L&T, the construction giant, has posted profits higher than estimates thanks to more international orders. Stock is 3% up. All the domestic orders have remained weak. Anushi is breaking down the L&T numbers.
Well, it's a strong beat that we are looking for L&T for the fourth quarter now. If you look at all the three key metrics which are there, that's order inflow growth, the EBITDA margins, as well as revenue, it was a beat in terms of where the FY25 guidance is concerned. While we did see in the fourth quarter that the revenues and margins were in line, net profit did beat estimates. Q4 order inflows, if we see, were led by higher international orders, while the domestic ordering has remained on the weaker side. Now, do note that revenue growth for FY25 beat a 15% of growth guidance, which is given with a 16% of a revenue growth that the company reported. If you talk about the order inflows for the year, they were up around 18%, exceeding the 10% of a growth guidance. So it's a big number, big jump that we are seeing in terms of where the order inflows were concerned, thanks to the international business. And in the last quarter, what we saw more orders coming from the Middle East side of the business. Also, what is interesting to watch is they've raised their FY26 core EBITDA margins to 8.5% as compared to 8.25% of guidance given last year. Just quickly walking through the Q4 numbers, we've seen about 11% of a growth in this quarter, while margins have seen about a 24 basis points of an improvement to 11.02%, and net profit saw about a 25% of a growth. Do note that this also included an exceptional gain of 475 crore in L&T special steels and heavy forgings. Now, talking about the order book positioning is an interesting one. Now, Q4 order inflows were up 25%. Again, a lot of orders coming from the Middle East side of the business with a ultra high order that we've seen this quarter. FY25 order book, if we see, that was up at 22% at 5.79 lakh crore. So even on a high base, we have seen higher orders coming for the business going forward. But what is interesting is the outlook forward on this high base also that we are seeing. Now, if we see order prospects pipeline, that has been raised to 19 lakh crore, which is up around 60% compared to the last year levels that we are looking at. Domestic constitutes about 7 lakh crore of this composition, while international constitutes about 12 lakh crore. Revenue expectations for next year is 15% growth is expected here, while core margins will be in the range of 8.5%. Now, what essentially the brokerages are saying, Investec on L&T, they've maintained buy and hike the target price to 4,155, citing decent results. And however, domestic was muted, but international has remained exceptionally strong. GS has remained neutral on the company. This did see that Q4 was a solid order inflow, while FY26 prospects also shows good visibility going forward. But macro uncertainty and increasing international mix is something that has kept the rating to neutral, and Bernstein has also maintained an outperform rating with a target price of 3,922, citing that FY25 was the first time that the company has beaten guidance across all metrics that it has seen. So this is the overall picture that we are looking for. L&T, a strong quarter for the business and a strong commentary for FY26.
Right. Anushi, stay with us. Strong commentary with regards to FY26 as well. Anything that you can give us in terms of the defense book, the defense business, the way the order book has panned out, and any benefits that you're seeing taking into consideration the Indo-Pak situation right now from what L&T would be supplying to them?
Right. Hiral, while in the conference call, this was highlighted on the recent tensions that we've seen in India, Pakistan, the country did, the management did say that for now it is too early to comment on how the orders would pan out, and they have refrained to give any sort of commentary based on that. But also on the overall, if we see the increase in the defense spending that we've seen from the Europe side also, they did see that there would be higher order inflows coming out. But so for now, the outlook for the defense segment remains uncertain. So that is something that we should be watching out for. The commentary was more towards the infrastructure side that they were bullish on rather. So L&T did not comment much on the defense side of the business. So that is something that we should keep in focus.
Okay. Thank you for that. L&T in focus. So is Bharat Forge. I mean, the numbers by itself were not great. It was a bit of a muted fourth quarter earnings. Puneet is joining us with more, but the stock today is up not because of its numbers, Puneet, it's because of its defense play. Let's focus on that.
Well, definitely, thanks for that, Tamanna. Definitely the defense play is something that, driving the stock up today, because largely nothing too much in results. In terms of defense, they mentioned that they've got order win momentum for defense has been led by, the artillery guns segment for the company, as well as the new ATAGS order. 3,700 crores what they've accrued over the last couple of quarters in some of domestic artillery guns, and that could see some positive momentum going forward as well. Apart from that, the executed order book is now 9,400 crores, and largely 70% of that is defense, and hence that move that we are seeing on Bharat Forge today. But apart from that, there's not so much to write home today. There's like 3 key points that you need to know. The first one is, of course, that they're expecting the passenger vehicle business growth to largely be versus industry versus which was outperforming last year. So that business has slowed down. The other key aspect is that they did not provide any kind of outlook for exports in FY26, and that's largely because of geopolitical tensions. And they've also mentioned that most brokerages coming out today and cutting EPS estimates by roughly 6 to 8%, but largely seeing that because the stock has corrected so much over the last, it's down 12% on a year-to-date basis, but even in the last year has not moved as much. They are mentioning that the defense business gives near-term visibility, but the longer-term focus as well as projections might be difficult. But the defense business is definitely giving a lot of impetus in terms of growth over the next couple of quarters.
Okay, thank you for that. We'll get that interview with Amit Kalyani up shortly. And though it didn't focus on the defense angle, they can't really talk about it, to be honest. It'll be interesting to hear what he has to say. Now, some relief on the FMCG front as Britannia's fourth quarter numbers actually ended up beating estimates. Stock is also up in the green. Mahima tells us why Britannia seems to have fared better than their peers.
So, as you rightly mentioned, the numbers have clearly beaten estimates for Britannia. In terms of overall Q4 EBITDA, that was a beat on the back of lower employee cost as well. In terms of revenue, it was up 9%, net profit was up 4%, EBITDA improved by 2.3%, and margins at 18.2%, which were expected at 17%. So a big surprise there. In terms of where actually the growth came on, it was a value-led growth. Value grew around 9% for the counter. They have taken strategic price hikes, and this is the second quarter for Britannia where they have taken price hikes. They've also saved cost by around 3% and overall in terms of what brokerages are penciling in, Macquarie has maintained an underperform with a target price of 4,600. They believe underlying Q4 volume growth stood at around 8%. So while volume growth was 8%, value growth was around 9%. Although still volume growth of 8% is way better than what FMCG companies have already posted their volume growths in terms of their numbers. Overall, Macquarie awaits clarity on EBITDA margin profile. Their con call is set on Monday. That's when we'll get more clarity. And lastly, Macquarie says that input costs have seen healthy corrections in the last few months, and that poses a slight upside in terms of uptick in their profitability as well as margins going ahead as well. So this is the overall view as to how the quarter has panned out for Britannia.
Right, so that's with regards to where Britannia goes. Stock seeing gains of around 0.8%, and this is going to be a sector which is going to be crucial as well, taking into consideration the last two trading sessions where it did see some bit of pressure, but again, that was on the back of the Indo-Pak escalation. Today, some green shoots that are emerging as well. But let's also welcome in Vinod Karki, Senior VP Equity Research at ICICI Securities. Vinod, good morning and welcome to the show, and a pleasure always to speak to you at NDTV Profit. Vinod, how are you seeing the current geopolitical situation evolve? In turn, the kind of impact it could have in terms of markets, because there is some bit of resilience which is still there. You have the FIs which are still coming in. The DIIs have continued to remain strong as well. What's the mood check looking like?
Yeah, good morning and thanks for having me on the show. So if you just roll back, I mean, last 2 months, if you take the 2nd May as the reference point, 2 months rolling returns on in terms of USD returns for FIIs. This is probably the highest returns in the post-COVID period, almost 14% returns for FIIs on USD terms. And out of that, almost 3% odd is coming from the INR appreciation. I think from just a short-term returns perspective, the market needs to kind of cool off a bit, given the sharp rally. And the global rise in global geopolitical issues that we have been seeing gives a perfect, a reason for the market to get into some kind of a consolidation phase after this sharp rise. I guess that's how we're looking. because even on the valuation front, the Nifty P, which had gone to reasonable levels in the recent past, has now nudged above 20 times, 20.4 to be precise. So I think we are in now for a time where the market should consolidate after this sharp rise. That's how I look at it.
Vinod, good morning. Tamanna here, and always great to speak with you. I'm wondering what are the opportunities that we're seeing here, because when you look at the Indian markets, these kind of opportunities are far and few in between. And you see that uptick coming in fairly quickly. At this point, would you be more cautious? Would you be sitting on some cash, or would you look at dips like we're seeing today, or perhaps in the next few days before things settle in, as opportunities to build positions?
Well, see, there are two, three things. One, from opportunities growth, where if you see the results so far, we went into this result season with fairly low expectations, and that's showing up. As per our analysis, the number of beats have been higher as compared to the misses. And within the companies which have shown higher than nominal GDP growth and which have kind of beaten estimates, most of them are from the cyclical sectors, while the lag, or in terms of growth as well as in terms of downgrades, we have seen more from the defensive sectors like IT and FMCG. So I think just from a growth perspective, if due to this geopolitical crisis, some of these companies which are posting good results on the industrial space, commodities, even financials, I think that will be a good opportunity, because growth is not disappointing on that front. And if this bout of geopolitical risk results in lower prices, I think that should be a good opportunity. But having said that, as I said, the FIIs have been loading up over the last several days. We have been seeing that, and 14% on a 2-3 month period in USD terms. I think that's a fairly good return in a short period of time. I think market should be in a phase of consolidation for some time before moving on to the next level.
You mentioned, Vinod, that corporate results have actually come in better than expected. That has been heartening. In terms of the kind of review that we are seeing of corporate results, what are the sectors that you think have surprised on the upside?
Yeah, so as I said, it is largely the cyclicals, be it some metals, cement, and industrials, infrastructure. Even the large banks didn't disappoint too much. So I think most of the some auto companies, this is where the results have been heartening. The growth is above nominal GDP. So energy companies, OMCs, power, and those kind of things. And where the disappointments and the growth itself, growth is subpar. The economy is growing at 10-11% nominal GDP, and if something grows at 4, 5, 6% around that, it's obviously subpar. And on top of that, you're getting downgrades to those growth itself. We're seeing that in IT and some consumer large FMCG companies where growth is struggling. So I think the pockets are very clear where growth is better off, basically.
So, Vinod, which are the sectors you would say is the time right to avoid? And 2, if you're holding any position to exit?
Well, I think where the valuations are high and growth is disappointing, like we see in some consumer companies, where valuations are pretty high, 60, 70 P and those kind of things, and growth is coming out to be pretty low, and outlook is not also improving. I think that's the space one should be getting lighter, because there are pockets where the growth is improving. And valuations are reasonable. I wouldn't say valuations are very cheap anywhere overall, except for, I guess, there are only 2 pockets, I think, where valuations remain quite reasonable. One is the large financial space, banks and all, and to some extent, some of the commodity companies where valuations are reasonable.
In terms, Vinod, of the core staples, banking, financials, how would you look at those right now, considering on balance the numbers have not been half bad? Would you look at a sort of a resurgence now in PSU banks, or you'd stick with the tried and tested private banks?
Well, I think, see, as long as the performance continues, and I don't think anything is extremely expensive in this space, overall financials. With some ebb and flow, they should continue to do well, I guess. An NPA cycle is still not at a point where things are going to go bad from here onwards significantly. So I think it will depend on each company, and we have been seeing that there have been some differences in performance of companies, even within PSUs or this private, and that way overall. But I think overall financials are looking good, in terms of valuations to growth angle. Obviously, there is a concern on the NIM compression because of the rate cycle. But with the RBI going into accommodative, mode, which is obviously to say that it will be more concerned on, accelerating growth from here on. So I think one should be, positive on the growth aspects also going forward. Right now, there are some concerns on growth and NIM and all. But I think as the year progresses and we see a lot of these effects of these stimuluses that were done earlier, one was the whole liquidity infusion, and then the rate cuts, and then the tax effects. Tax stimulus will start affecting this year, and next year we'll have the pay commission following up with on top of that. Plus the post-election capex should be good, both from the private and the government going ahead. So I think things are looking reasonably good overall for credit growth. And the accommodative stance of the RBI will ensure that rates are lower and liquidity is ample.
Right. So that's with regards to, what you should be doing in terms of the action from a market perspective. But thank you so much for joining us on the show, Vinod, and sharing your views.
Thank you.
Let's shift focus to one stock, Bharat Forge, that is up nearly 2% in trade today. And Tamanna, it's the defense pack, if you think, has been really on a seesaw ride. 2025 as a year started off slightly on a weak note, but then it's taken off. Last couple of trading sessions as well, if you see the defense pack, the stocks didn't really move that much. There was a week where we saw some smart moves.
Yeah.
And today, they're back in action.
They're back in action for obvious reasons, because we're in the middle of a regional conflict, and the Bharat Forge stock up over 5%. But it's also back in action because this is the first big test of the Make in India policy on defense.
Correct.
India has traditionally been an importer of all defense requirements. This was the first test of Make in India, and it's come out with flying colors. So, which is why this is also a thumbs up to the capability of Indian defense companies. Now, we're talking about Bharat Forge. There is, a lot of buzz on it. Its Q4 numbers were out as well. Q4 numbers were so-so, but it's interesting to listen to this conversation my colleague had with Amit Kalyani of Bharat Forge on the numbers.
I just want to start off first, in this particular quarter, we were expecting that the standalone business, will have roughly flattish growth, but it's maintained its EBITDA margin in a difficult time. Where there has been a lot of speculations across the globe. So just wanted to start off, if you can just give us a few highlights for this particular quarter, both on standalone as well as the consolidated, and then we'll get into the segmental performance.
Yeah, so I think we had a fairly decent performance in quarter four. We had a total revenue of 2,163 crores, which was slightly higher than last quarter. EBITDA grew quite nicely, and margins grew by about 100 basis points to 29.1%. Our PBT was about 494 crores for the quarter. On a full year basis, standalone was about 8,800 crores with the EBITDA of 2,524 crores with a margin of about 28.5%. Again, 100 basis point expansion. Our balance sheet remains strong. We have cash net of loans of almost 1,330 crores. Our ROC was about 18.1%. At a consolidated level, the Q4 revenue was 3,853. This is a little lower than last year because some of the defense orders are lumpy and they happen, it's not every quarter always the same amount. But EBITDA moved higher, margin expansion of about 170 basis points. The consolidated revenue was slightly lower than last year by about 3.5% at about 15,123 crores. But margins increased by about 180 basis points to reach 18.2%. We've secured new business during this year of almost 7,000 crores across all our different business areas. Defense was 5,000 crores and between BFL and JSA was about 2,000 crores. And our total capex for this year was about 750 crores. Our overseas subsidiaries, the EU aluminium has started stabilizing but given the unfortunate European situation, utilization is not yet at high levels. Our US operations are in the black for Q4 with a recording of profit, a positive EBITDA of 4 crores. And we expect that this year we will have a significantly improved performance. We are already at positive numbers in EBITDA and we hope that this will translate into positive numbers in PBT as well in the US market. In Europe, we recorded an EBITDA of about 96 crores for the year. Our US operations have substantially reduced their EBITDA loss and utilization in the US is at about 70%. And we expect that with this whole Make in America kind of situation, we see a lot of potential going forward. We continue work on cost reduction and restructuring in Europe, and this should show results in the next 3 to 4 months.
Sorry, Mr. Kalyani, if I can just interrupt you and apologize for that. I just want to take forward the export market point with you. Specifically for Europe, what's the current scenario on the ground? Because while for this year you mentioned that the EBITDA margins were roughly 2.5%, they're slightly lower than last year. So on the ground, what's currently happening with demand? Because we've seen a renewed focus on defense as well in Europe for protecting themselves. So what could we expect from Europe in FY26 if you can quantify a little bit?
Right now there's a lot of talk about make defense equipment and systems in Europe. They have to rebuild the entire manufacturing ecosystem for defense in a large way. We see a lot of potential in this. Forgings are an integral part of most defense equipment. So we are definitely going to look at whether we can play a part in this. But right now, if you look at our European subsidiaries, they're largely focused on automotive and commercial vehicle. And both those areas are under some amount of pressure, but they aren't, collapsed or anything like that. So right now, there's a lot of uncertainty because of the continuation.
All right, that was Amit Kalyani. But just to get the latest of what's happening in ground action, here's Shiv Arur.
Things are very tense right now. Things are extremely volatile right now. Remember, Pakistan's attempts twice over 48 hours to conduct attacks directly on military establishments, here in Srinagar and in different parts of India, Jammu, Ludhiana, Pathankot, Kapurthala, Chandigarh and elsewhere where we've been hearing air raid sirens today, suggests that Pakistan cannot be trusted to wind things down and de-escalate, even though India has repeatedly given them that option diplomatically. This is a country that clearly needs some kind of a face saver, and therefore India is completely on high alert. There's no question of letting the guard down. A worst case scenario of another escalation is always factored into India's every move. Pakistan has already indicated that it wants to do that because over overnight as well after, a bad drubbing in the air thanks to India's air defense systems. They've been continuing to send in drones according to the Indian Army's official statement this morning. The Chaukibal, where I reported from last evening, saw heavy shelling overnight. So have Uri and Kupwara. So you can expect that things are going to remain hot today as well. There may be a possibility of things de-escalating, but war planners, military commanders, the political leadership are expecting things, always plan for the worst in this kind of a scenario. And that's what's really going to happen right now. Rajnath Singh, the defense minister, has of course met the three chiefs and the chief of defense staff. The prime minister is in touch with all his, security establishment chiefs on a real-time, hour-to-hour basis, because this is an evolving scenario. And as we know, the prime minister, is fully plugged into every little decision that is being made at this point of time beyond the operational freedom given to the armed forces. So, expect an escalation, and let's just hope that things will actually calm down.
That's the latest coming in. We will, of course, be waiting for the official word from the Armed Forces representatives and the Ministry of External Affairs on what exactly has happened and what we expect for the next few hours.
Absolutely. And I think from what Shiv is mentioning as well, and from the guest we spoke to, the next 48 hours are absolutely crucial with regards to the escalations and the tensions that unfold. But completely out of time, but with that, it's a wrap on this edition of India Market Open. From Tamanna, myself and the team that put the show together, thanks for watching, and you'll keep getting live updates with regards to Operation Sindoor and what's next. For any of your queries in terms of your stocks, please log on to Ask Profit, and there you'll be getting all your queries answered. Please stay tuned to NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
इजी मेंटेनेंस है।
आपको मालूम है इसका फेस वॉश का खर्चा डबल है। तो देख मेरी आंखों के नीचे पहली बार देखो डार्क सर्कल्स। एक मरे हुए मुर्गे में अगर जान डाल सकते हैं ना तो डिलिशियस बनेगा।
Friendship came first or the idea came first?
Abhay, he was my friend. We also had.
Was.
Okay, this time. Actually, he landed in my office with this whole meat idea.
Actually, मैं बताया नहीं, मैंने शराब पी के इसको बोला था कि ये करना है।
Have the conversation in his office. He doesn't take it too seriously.
इसको मैंने बुलाया घर आजा भाई, दोपहर को आया अपने महंगे वीसी वाले कपड़े पहन के। दरवाजे पे घंटी बजी, वो भैया ने इसको सोन पापड़ी के डब्बे में मटन पकड़ा दिया। तो इसके महंगे कपड़ों पे थोड़ा वो छलक गया। तो
Was it tough initially to get people to buy into the story?
I come from actually Dania vegetarian family, and my parents, my dad said, मैं मतलब लोगों को क्या बोलूँगा?
The best thing is if a friendship survives a business pitch, I think that should be a true test of friendship.
हमने एक दूसरे को ये लिख के वादा किया था,
अगर बीवियां भी लड़ लें तो हम झगड़ा नहीं कर सकते।
मर जाएंगे पटनी घाटे।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew. With me is Mahima Vachajani, and we'll take you through the next 1 hour of trade. If you're tuning in for the first time today on NDTV Profit, our thoughts and prayers, as always, with everybody that is on the border and our armed forces that are ensuring that activity like what we're doing today, and in fact the markets, go on undisturbed. So our thanks and prayers with them always. We are opening the phone lines to you, and as we normally do, we would request that you maintain a little bit of sensitivity when you ask your questions. So do refrain from making any statements outside of questions that you might have about stocks that you are either invested in or intend to invest in. To that end, let's take a look at where the markets are right now, and understandably there's quite a bit of chop and churn, and you have cuts of about 1% or so for the benchmark Nifty 50, but there are pockets of strength. We'll get to that in just a bit. The Nifty Bank trading with cuts of about 1% as well. The broader markets have come off the low point of the day. The mid-cap index trading with cuts of about 1% or so, and the small-cap index down about 1.8%. Understandably, the market breadth is tilted in favor of the declines, and this is likely on account of the fact that people are unwilling to hold on to positions ahead of the weekend in a situation that is in a state of uncertainty and flux. There's a lot that is happening at the diplomatic level and at the military defense level, and so a lot of people are waiting and watching on the sidelines. This show, of course, is supposed to give you understanding on how you should position yourself. And of course, the statement that has come through from a lot of market veterans is that this is not the moment to panic. If you've got long-term portfolios, continue to hold, because the fundamentals of the Indian economy and of corporate India remain unchanged. The pockets of strength that I was talking about, understandably, are the defense pack. If we can pull up the sectoral heat map, just to give you a sense of what is moving right now, the defense pack is up and about 2.4% higher. You also have PSU banks that are up and about 1/3% higher, and consumer durables doing well. What is not doing well is the realty pack, which has been under a little bit of pressure over the course of the last few trading sessions. It's down about 3.5% or thereabouts. You have the Nifty Finance Index that's down about 1.4%, and oil and gas that is down about 1% or so. In fact, let's pull up the realty index and take you through what has happened over the past week or so. If we can do that, just pull up the line chart for the last week, and you will get a sense of how this pack as a whole has underperformed. It's down about 7.5% or thereabouts over the course of the week, and most of that taking place in trade today. I believe we've got Jatin Gedia who's joined us already. Jatin, very good morning to you, and thanks so much for joining us. Sameer Dalal will join us as well in just a short while. We want to understand from you just at the start, before we get into any individual stocks, how would you position yourself ahead of this weekend amidst this uncertainty, and how would you trade this?
First of all, what we believe is that the market has now entered into a consolidation phase, or a correction phase, I can say. This is on the back of 24,500, 24,400 not being decisively able to reach above that resistance. So we believe that now the Nifty is likely to trade with a negative bias till the levels of 23,500 on the downside. 23,500 coincides with the 40-week average and also the 38.2% retracement level. So we believe that the rally, which started from around 21,740 odd levels, now we are into the retracement of that rally. So we are only seeing a retracement. This is not the start of a fresh leg of down move. It is only a retracement of the rally, and once we are close to this 23,500, we are expecting the next leg of up move to start. So yes, there is some amount of correction or consolidation that is likely during the next couple of weeks, but overall we still believe that around 23,500 we are likely to witness the resumption of the next leg of the up move. So yes, from current levels, yes, there is a downside possible, but we are expecting it to hold around 23,500.
23,500 is the support that Jatin is observing on the charts right now in terms of the downtick that is expected. For viewers who are tuning in right now, you can either call us or WhatsApp us on the numbers that are flashing on your screen. The number that's flashing in the lower band is the number that you can use to also call us and ask us all your queries. All right, the first question of the day is from Rahul, who is writing in from Panchkula, Haryana. He's holding IDFC shares, bought 1,225 in quantity at 73 a piece. Wants to know whether he should continue to hold from a longer term perspective or exit now. Samir, a very good morning to you. What do you think is the outlook for IDFC? Should he continue to hold?
Good morning, Mahima. So fundamentally, yes, it is one of my top picks in the banking space, in the big cap banking space. So I would say continue to hold on to it. I think it has great long-term prospects. It's gone through a bit of pain because of the problems they've had with the microfinance and one loan asset on a toll asset. Where I think they've taken the provisions that are required, and now anything that will happen will be right backs. So as things go forward and the company continues to grow, the deposit base is growing at a very good pace. We believe the loans could comfortably grow at 20+%. Plus the NIMs will increase because they have high cost borrowings from the erstwhile IDFC, which will get replaced with deposits. So as that happens, NIMs increase, the profitability will also increase, the operating leverage will play out, given the fact that now the capex going in will be lower. So I say definitely hold on. But one thing I would like to add, Mahima, as a disclaimer before we start this show and we talk about individual stocks, that all bets go off the table if something escalates between the India-Pakistan wars. We're talking about purely fundamentals, but the fundamentals can change very, very fast if something were to go terribly wrong.
We'll have to react as and when that does come through. A lot of the experts that have been on this channel so far, and these are former army officers, have indicated that the next 48 hours are going to be crucial to watch, both from a military standpoint as well as from a diplomatic standpoint. And the Indian administration has very clearly stated repeatedly that if there is a de-escalation from the Pakistan side, then that will be matched by the Indian forces, and the opposite is also true. So we'll watch and give you those details as and when they come through. The next question coming through is from Zahid, who's asking about BHEL, which he's acquired at a price of 329. He's got nearly 6,000 shares is what he's pointed out. And Jatin, on the charts, how does it look? Would you hold on to this? Because he's undergoing quite a bit of a loss right now.
I think the investor should exit his positions because the rally that we saw in the month of March, April has hit the 40-week exponential moving average resistance, and thereafter we are witnessing a sharp decline. So there is weakness. It wasn't unable to cross above that 225 to 30 mark, which was the previous swing high and the resistance. So the structure still remains negative, or we can say weak. On the downside, we are expecting the stock to slip towards 192 to 186 odd levels. So I think it's better to exit at this point of time from BHEL. So exit is the suggestion.
Okay, exit is a call on BHEL. We've got a first call of the day. Ramesh is calling us from Hyderabad. Good morning, Ramesh. How can we help you today?
Yeah, good morning. I have a Tejas network of quantity of 100.
Okay.
So I'm just looking for whether it's a time to average the stock or exit from the stock.
Ramesh, what's the holding period that you had in mind?
I can hold, but I wanted to average, looking for the average, but whether it is the time to enter or average at the time or exit from the stock.
Yeah, no, I am asking about the holding period because it will help me understand who to ask the question to. So is this a fundamental?
I can hold for 2 to 3 years.
Okay. All right. So Samir, based on the fundamentals, how do you see Tejas Network? If I remember correctly, the numbers were not particularly good in the fourth quarter, and the share price has taken a bit of a beating post that. What do you make of the stock? Would you hold? Would you average?
So Alex, we don't have coverage on this one, unfortunately. So can you take a view?
I can take a technical view. So, but Jatin, on the technicals, slightly longer term, if you're saying 2 to 3 years, would you average at this price?
No, I would wait for the price to slip towards 550 odd levels. So technically, if I see a weekly time frame chart, because the investor has a holding period of 2 to 3 years, I think there is a decent amount of downside that I can see on the higher time frame charts. The weekly Bollinger Band is placed around 550, so that is a crucial long-term support around which he can consider averaging. Overall, the structure is still negative at this point of time. Rally fizzled out at the 20-week average, so that is again not a bullish sign for the stock in the very near short term. So don't average at current levels. 550 is the level around which we can consider averaging.
Keep in mind those levels for Tejas Network. Stock has been under a little bit of pressure. Now, we have promised to give you updates over the course of the day, and we've been bringing you live updates of the Operation Sindoor. Now, here's what has come through with regard to what took place last night. There was an attempt by Pakistan to attack several military bases in Jammu as well as in parts of Punjab, several other places as well, and that was countered and neutralized. And this is on account of the air defense system, and part of that, of course, is the Sudarshan Chakra, which is the S-400 air defense system. Shiv Arur joining us to tell you what this means and how this came into play. Shiv, what are you picking up?
What we saw yesterday captured on civilian mobile phones, flooding the internet after 8 p.m. yesterday, starting with airspace over Jammu, then Pathankot and various other places, was basically a symphony of India's integrated air defense system kicking into action and intercepting, a multiplicity of incoming Pakistani projectiles, including loitering munitions, attack drones, possibly some short-range missiles as well. This was a very, very complicated operational scenario where India's integrated air defense system, which consists of the S-400 principally, but many other systems, including the Akash, Indian Akash system, the Spider system from Israel, and a few others, all of it integrated using Indian know-how and technology, working incredibly in unison. These are images that people have never seen before, but at the heart of India's air defense shield, and perhaps our most formidable air defense weapon right now, is of course the S-400 that was ordered some years ago. It was finally delivered during the COVID pandemic. Yesterday was the first time we've seen the S-400 being used in anger. In anger is of course a phrase to describe being used in an operational live war-like scenario. Now we don't know which of the videos that came out actually show S-400s intercepting, but we know somewhere out there in the darkness those missiles were swooping up to intercept incoming enemy projectiles to protect so many Indian cities in the north and the northwest. And the S-400 is an incredible piece of weaponry. It's an air defense system that is acknowledged by the acknowledged world's biggest arms producer, the United States, as a formidable air defense weapon. The presence of the S-400 on the ground gives even NATO countries and the United States pause, makes them change their plans, flight paths, things like that. The S-400 has a capacity to, engage incoming projectiles, many of them at the same time using its highly advanced tracking radar. It can conduct interceptions out to ranges of anywhere between 40 and 400 kilometers. A very intelligent group of systems and computers, live track in real time incoming targets and then intelligently assign the correct missile, the correct location to actually fire at and intercept and destroy in the air those incoming targets. So it's a mind-bogglingly complicated symphony of moving parts, electronics, sensors, and then finally the actual kinetic missile that goes up there and intercepts those things. It's like, shooting a bullet with a bullet, really. And that's really what happened yesterday. Think of it as, thousands of bullets or maybe hundreds of bullets coming at you and, a group of systems creating a shield across the country, killing each one of those bullets individually.
Yeah, Shiv, thanks so much for that imagery, and it paints quite the picture. In fact, we don't have to paint a picture for you. The visuals that were being played out on screen will tell you exactly how this air defense system was activated overnight, and it's kept families in India safe. We spoke with retired Lieutenant General S.L. Works, and what he said is that it functions in a form of layers. Listen in.
there is no single system that does air defense. Air defense of a country is the responsibility of the Indian Air Force. But you need to understand that there is an integrated air defense grid that has been established. It will have, in layers, many weapon systems that will be deployed. Like, for example, at the forward edge, you will have the handheld ground-to-air missiles, manpairs as you call it, that will get deployed. Beyond that, some increased range weapons like Akash missiles, etc., will get deployed. And beyond that, you will find the S-400 variety of weapons that will get deployed, which has got a range of 400 kilometers, which can cover the entire Pakistan's depth. So it is a layered kind of air defense. It is a grid patterned air defense, which will cover the entire area. And there is a system by which the Air Force monitors this. It's a electronic and AI-induced system, and that is very effective. And that is the reason you find none of the drones, none of the missiles that was launched by the Pakistanis have come into play. So this is the way that you need to understand the air defense. In addition to that, you will have the Air Force, which is already deployed. That will take off in case further, if they locate any of the Pakistan Air Force coming into play. So this is the graded system. It's a grid system, which will actually cover the entire area and the region. I'm simply put, I've not gone into the technical details. I've just given you a general gist of how it is done.
That's a perfect explanation as to how the entire system works and to get our viewers a perspective as to what's happening exactly. All right, we have our next caller, Chandrasekhar from Hyderabad is calling in. Chandrasekhar, a very good morning to you. I believe you have a question on BEL.
Yes, sir.
Yeah, go ahead. Ask your question.
Yeah, well, the query regarding BEL is that I'm having a 25,000 of profit in the BEL stock. Should I book profits right now, or should I wait some more time as there is war happening between India and Pakistan? So should I wait for some more time and book profits, or should I profit right now? Book profits right now.
Got it.
That's my query.
Okay, got your question, Chandrasekhar. I'll take this up with Samir quickly. Samir, with everything that's happening, of course, we're seeing Nifty Defense on the back. It's rising right now. But your sense as to what should one do with defense counters right now?
That makes no sense selling them away right away. I mean, look, we're not denying the fact that valuations across the board in the defense space are expensive. But given that we are where we are at this juncture, demand for products is going to continually increase. I'm not sure, it's difficult for me to say how much profit the government would allow these companies to make in a situation where you go for war. So that remains the only risk. But barring which, over time now, one thing is very clear. Companies that are in the defense space are going to see huge orders coming over the next many years, which will allow them to grow their sales, get the operating leverage. So valuations probably could stay higher for longer, even though we find them really high. So given he's bought it at a very attractive price, I say he can choose to hold on. If you ask me, would I buy at this level? Probably not. So I'd wait for corrections to buy, but BEL, given his value of purchase, hold on to it.
All right. So that's the view on the defense pack. Samir, thanks so much for that. We've got a view on the long term that is being sought by Ishan from New Delhi about CG Power, which he says that he's acquired at a price of 20 rupees per share, and he's got a quantity of 6,000 shares. So it's quite a considerable gain that he's sitting on. If you've acquired at these levels, Samir, would you take money off the table?
Oh, definitely. Actually, I would have taken money off the table some time back. Look, this turnaround has been a great story after Tube Investments took them over. That is the Murugappa Group. But I think the valuations have moved far ahead of what the fundamentals justify. We don't deny the fact that the order flow has been decent. They've been able to turn their operations, become profitable and all of those things. But at the kind of value you're paying for a company, and given the fact that now the utilizations have moved up, the same kind of growth cannot be expected. And if that is the case, you're not going to get the same kind of momentum in the stock price either. So I would take the profits, some of it at least, off the table right away. Look to invest in other companies where valuations and growth are more attractive. Maybe in the renewable energy space, given that it's part of the energy kind of thing he wants, he can look at something in the renewable energy space where the growth can be multi-fold over the next maybe 4 or 5 years.
All right, so that's the view with regards to where CG Power stands. Our next caller, Teja, is calling in from Hyderabad. Teja, very good morning to you. How can we help you?
Hi, good morning. Thanks for taking my call again. I'm holding 3,000 shares of Olectra at an average price of 977 rupees.
Okay.
My view is for very long term, like coming like 5 to 10 years from now. The factory is located in Hyderabad and it has ingeniously grown in Hyderabad. I've seen the factory from outside many times while I was going to my farm. I would want to buy another 2,000 shares or so in the coming fall. Can you please tell me the entry price for the next leg of?
Okay, got your point, Teja, and also congratulations because you've entered at the right levels and sitting on a profit of over 3 lakh odd rupees. Jatin, I'll quickly come to you in terms of what charts are indicating for Olectra. What is the right time to enter?
See, I believe in the case of Olectra, the crucial support now comes in at 990 to 970 odd levels. So if he wants to average or even add to his existing positions, then 970, 990 is the level around which he can consider doing averaging or even buying more.
All right, so that's a view on Olectra Green. It's down about 19% or so over the last 3 months. Let's take another caller. We've got Mohan calling us from Warangal. Mohan, very good morning to you. How can we help you today?
Mr. Alex, very good morning.
Good morning, sir.
Really, I am very glad to talk to you.
My pleasure.
Okay, sir. Thank you. I possess already 200 shares of Anantaraj Limited.
Okay.
Now I want to add some more shares. So please tell me at what price should I enter?
Okay. Mohan, can you give me a little bit of clarity on this? When you bought it, what was the thinking? Did you buy it based on the fundamentals?
Yeah.
For the long term?
Long term, for 1 year.
For 1 year. Okay. Okay, so then from that perspective, let me go to Jatin on this one. Jatin, 605 is the buy price. The stock under a little bit of pressure today, down close to 5%. Would you deploy at this point? Would you hold on? What levels would you watch out for?
In the case of Anantaraj, 385 to 380 is the level around which we have the next cluster of support kicking in. So that's a decent amount of downside from current levels. So I think the investor needs to wait for the levels of 380 on the downside. Even at that support level, one needs to further revisit the stock, whether it's holding on to that support or no. So 380 as of now is a support cluster, but we need to check at that point of time whether that support is holding or not. So at this point of time, don't average 380. You should consider, but only if there is a trend reversal or we see a bullish pattern developing around that support levels.
Okay, so that's the way with regards to Anantaraj. Jatin, I believe we'll have to let you go at that. Thank you so much for joining us. With that, it's time for a very short break, but we'll be right back answering all your queries on the other side. So stay tuned.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
इजी मेंटेनेंस है।
आपको मालूम है इसका फेस वॉश का खर्चा डबल है। तो देख मेरी आंखों के नीचे देखो, पहली बार तेरे को डार्क सर्कल्स। एक मरे हुए मुर्गे में अगर जान डाल सकते हैं ना, तो लिशियस बने।
Friendship came first or the idea came first?
Abhay, you know, he was my friend. We also had.
Was.
Okay, this time. Actually, he landed in my office with this whole meat idea.
Actually, मैं बताया नहीं, मैंने शराब पी के इसको बोला था कि ये करना है।
Have the conversation in his office. He doesn't take it too seriously.
इसको मैंने बुलाया, घर आजा भाई। दोपहर को आया अपने महंगे वीसी वाले कपड़े पहन के। दरवाजे पे घंटी बजी, वो भैया ने इसको सोन पापड़ी के डब्बे में मटन पकड़ा दिया। इसके महंगे कपड़ों पे थोड़ा वो छलक गया। तो
Was it tough initially to get people to buy into the story?
You know, I come from actually a Baniya vegetarian family, and my parents, my dad's side, मैं मतलब लोगों को क्या बोलूँगा?
The best thing is if a friendship survives a business pitch, I think that should be a true test of friendship.
हमने एक दूसरे को ये लिख के वादा किया था,
अगर बीवियाँ भी लड़ लें तो हम झगड़ा नहीं कर सकते,
मर जाएंगे पटनी घाटे।
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Hi, welcome back. You're watching Ask Profit. It's time now to deviate a little bit from the questions for just a bit. We've got an earnings conversation to take you through, and we're talking about GHCL. Just to give you the snapshot of the financials very quickly before we get on the managing director, the revenues dropped by about 5% or thereabouts, and the net profit, because of an expansion in the EBITDA margins, has come in 20% higher at 150 crore rupees. We're joined by Mr. R.S. Jalan, who is the managing director of the company. Sir, thanks so much for taking the time. Pleasure speaking with you, and thanks for speaking to NDTV Profit. Let me start by asking about that margin expansion that you've experienced in the quarter. What led to that? And that seemingly is what has led to the improvement on the profitability.
Good morning, Alex. As you rightly said, this year or this quarter was definitely an experience to us. And this, in spite of a global challenging market scenario and surplus material available in the market, we have been able to perform better, primarily because of our operational excellence and the innovation which we have been able to do in the plant. If you look at year as a whole also, Alex, you will see that overall our revenue has been dipped by 5%. But in spite of that, our EBITDA has grown to 966 crore, and that is also primarily because of the innovation and the operational excellence which we have been able to achieve.
Right. Hi, Mr. Jalan, this is Varsha this side. On the margins fronts though, where you see that margins going forward, what is the sustainable EBITDA margin that you're expecting for FY26, sir?
See, what's up? Good morning. What's up? If you look at 25-26, overall globally, the markets are going to be soft. The prices looks to be that either in the range bound or slightly maybe on the lower side. And based on the operational excellence which we have achieved, I think probably we will be in a range bound in the 25-26 also.
Because of the pricing pressure that you are talking about, for FY26, if you can give us what kind of growth are you expecting over FY25 when it comes to top line?
See, Varsha, there are two things which we have new project which we are coming in the stream in 25-26 in the later part of 25-26. One is the vacuum salt and another is the bromine project that will be coming in third and quarter of 25-26, and that will lead to our revenue growth in 25-26.
Give us an outlook when it comes to soda ash pricing in the coming year. Any sense in terms of how the pricing trend could be?
See, what's up? In 25-26, definitely, as I said, overall the market is going to be soft. But in a medium to long term, we are bullish on this business. And if you look at the last many years of the history, the soda ash prices has always been remunerative to the business. And because of that only, we are going for a new project in the Gujarat, and this will be in next 3 years we will be having that project. So that will also add to our revenue growth and the overall profitability of the company.
Mr. Jalan, can you take us through what the capex is for that project, and in terms of capacity utilization overall, not just for soda ash, but I'm just wondering, considering that the demand picture, as you've pointed out, is a little soft right now, though you see it improving in the medium term. What is utilization right now, and how do you see that moving in FY26?
See, Alex, our plant utilizations are more than 95%. And going forward also, the utilization will remain as it is. Only the price pressure may be there in 25-26. In terms of the new project which is coming in, only after 3 years. And I just wanted to highlight, Alex, here is that the new green, the solar investment which is coming in India, that is bringing a lot of opportunity for the soda ash. And you can see approximately around 100,000 tons in 26, 27, the new solar plant investments, which will bring soda ash demand growth. So that will definitely help this capacity get absorbed going forward.
Got it. And also on the bromine and salt business that you're, going into, how is work going? Because you've acquired land, and how are you planning when it comes to, tapping the customers in that space?
So, Varsha, right now what we are going is that we are going for 2 projects which are on the existing location. One is our soda ash plant, where we are putting up this vacuum salt project, which is around 200,000 tons of the plant. And the bromine plant also in our existing salt feed what we have. This will get commissioned in September, October this year. And the new plant which we are planning to do in the Kutch area, that will take 3 to 4 years of time. And there is a good demand growth in bromine business domestically as well as the overseas. So we don't see any challenge in terms of the supply or the customer's demand point of view.
Mr. Jalan, just lastly, can you give us a sense on utilization of the cash that you have? Because as I understand, you have a reasonable amount of cash in your books. Do you see opportunities for inorganic expansion?
See, at this point of time, like I said, we have a capital commitment to the new Greenfield project, which is approximately around 4,000 crore, 4,200 crores. We have approximately around 1,100 crores cash into the balance sheet. And going forward, probably this cash will get utilized in our new Greenfield project in Kutch.
Understood. All right. Mr. Jalan, pleasure speaking with you as always. Thank you so much for taking the time, and look forward to the next chat as well.
Thank you, Alex. Thank you.
All right. There you go. So that's interesting updates coming through, and margin improvement, seeing the profitability improve for this company. And they've also spoken about the expansion plans going forward. Stock is down about 2.3% or thereabouts, but that's the texture of the market as well. Varsha, thanks so much for joining us on this conversation as well. Joining us on this side is Amardeo Singh, who's a Senior Vice President Research at Angel One. Thanks so much for joining, and Sameer, thanks so much for taking the time and waiting with us. The next question we're taking is on Asian Paints. It's in focus on account of numbers. We've got Ashwin from Guwahati who's asking about this. He's bought at levels of 2,410 rupees about 6 months back. What should he do right now? Sameer, as much as certain people who love this stock in the space have wanted to deny it, there is an undeniable impact of competition in this space. Margins are contracting, not just for Asian Paints, but for other players as well. How would you deal with a holding of Asian Paints, though?
Okay, so rightfully so, Alex, you already said competition is definitely creating some problems with the margins, and that can be very clearly seen in the results. But I think there's not only competition, but there's also to do with the fact that we've seen a little bit of slowdown in consumption in India over the past year, be it rural or be it urban. And that too kind of has a negative impact. But the market and the opportunity for paints is again still very large. So we believe there's enough space for JSW and also Birla, that is Birla Opus as the Grasim group, to compete in the space. Yes, margins will probably not be as favorable as they were back in the day because competition is there and they want to eat into some market share. So that remains one big risk. But luckily, your caller has bought it not at the high price of 3,600, but at 2,400, so which is not too far from the current price. And if he has a slightly long-term view, I believe the market, as it keeps growing, and Asian Paints at the end of the day has a very strong brand name, can do well. The problem is the valuations post these new normals, at least not new normals, but the new lower margins, I would say, are still expensive. The stock is still trading at about 50 times 1 year forward. So, there's always a risk that the stock can see a bit more of a time period correction or even a stock price correction. But if he has a three-year view, I think there is some money to be made. Ideally, if it comes closer to 2,000 levels, I would be a buyer in the stock. At this point, I would just say hold on.
That's the view with regards to Asian Paints. And I think apart from competition, as Sameer rightly mentioned, it's also the muted demand, which is not picking up at all. And plus, there's downtrading also playing its part in terms of the overall margin downtick as well. So that's with regards to where Asian Paints stands. Our next question. Can you find the question? I cannot
I
find
got
the
it.
question.
We've got Vishal Megamart that Angad wants to know about, and he's acquired this in the IPO, one lot. The stock is currently at 119 or thereabouts. For the long term, would you hold on to this? Oh, actually, no, he's speaking about 1 year. I'm not sure if you have enough data. Amar, would you say you can hold on to this?
Yeah, honestly, there's not much data, so really difficult to.
Okay, Samir. Okay, fair point. I'll come to you very soon. Sorry to keep you waiting. Samir, any view on Vishal Megamart?
Sorry, unfortunately, I don't have. We had a new listing and we've not tracked it.
Okay, we'll reserve that question, Angad, and we'll get you a view as and when we can. JSW Energy is the next stock that we want to talk about, and this is a question from Shubhra. She's asking for a short-term outlook on the stock. She's bought at a price of 502, and she's wondering what to do. Should she hold on? She's incurring a bit of a loss. Amar, what's the view?
See, if you look at JSW Energy, we've seen the stock in a downtrend because the stock did manage to witness some pullback from 440 levels towards 576 and the last week of March, and then again it has been down to 450 levels. So clearly, it's trying to form a bottom, but technically, if you ask me, the long-term trend on the monthly charts that continues to be negative. But since it's around close to support levels, there could be a temporary bounce back. So ideally, one can hold on to the position. 480 is a level, first level to watch out for. If that is taken out on the higher side, then you can expect the stock to rally towards 530, 550 levels. Whereas on the downside, the stock has got strong support coming around the 440 level. So ideally, one can hold on to the position as of now.
Hold on to the position is the view where technicals are concerned for JSW Energy. Our next question is from Gopinath, who wants a view on Vedanta. He's holding 80 shares at an average price of 466. He wants to know whether he can hold or sell. Amar, I'll quickly come to you again for this one. What's the view like where charts are concerned for Vedanta?
So if you look at Vedanta, what we are seeing here is that it's clearly in for consolidation. So there's a trend missing in the stock. The stock did rally and then again corrected currently around 400 odd levels. Seems to be forming some support around the 360, 370 zone, whereas on the upside, 420, 430 is a zone of resistance. So it's more of a trading play rather than any major trend that is visible technically on the charts.
Okay. All right. So that's a view on Vedanta. Murli is calling us from Bengaluru. Good morning, Murli. How can we help you today?
Very good morning. And only one little thing is convey our salutes to Indian Army on this occasion.
Yes. Thank you so much for that sentiment, Murli.
They are fighting for us. Number one. Number two, I have bought Bharat Bijli, a transformer manufacturer.
Yes.
At a price 100 shares at a rate of 2,896.
Yes.
And it has come down from its peak price for about 30-40%. And all the transformers, whether it is transformer, Voltamp or Trill or this, all are doing well.
Yes.
With the order book and they are going for huge capacity. Can I add more? Or switch out to some other transformer other than Bharat Bijli, like Sislar or something.
Got it.
Which has declared a 1:2 bonus. Which has declared a 1:1 and doing extremely well.
I got your question, Murli, and thank you so much for calling us this morning. Samir, I'll come to you on this one. If you've got coverage on Bharat Bijli, your comments. If not, would you switch to something else?
So we do have view on Bharat Bijli, and we remain positive on the transformer space and the entire power space. We've been telling you for some time that there's a big demand increase expected to come in the power sector as Make in India and manufacturing capacities over a period of time go up. What you're also going to see is more utilization of electronics within the country. So power use in general is only going to keep rising, and companies that cater to that space like Bharat Bijli will also stand to benefit. Valuations of the stock are also relatively, I say, not expensive, but they're fair. So if you are a person who likes to have value on their side, I think this is one of the counters that value is there on your side. So there is some upside potential according to us. We think this is something that one can add on to. At least for your caller, he's bought it at a good price, but the price it's moved up, no doubt, but he can keep adding on if he likes. We think the stock would probably rally all the way to 3,700, 800 in 2 years' time.
Okay, so that's the view with regards to where Bharat Bijli stands. Our next question is from Satyan, who wants a view on nucleus software from a longer term perspective. His target is for the next 18 odd months. Samir, I'll again come to you on this one. What's the view like?
Sorry again. I think last week also we asked a question on this one, but we don't have this.
I don't remember. Okay, all right. Then I'll come to Amar then. Amar, in terms of nucleus software, what are the charts indicating and what's the target and stop loss that you are currently penciling in?
Yeah, so if I look at nucleus software, the stock has corrected by almost 50% from its all-time highs, close to 1800. Currently, it's around 900 odd level, slightly lower than 900. So the major correction in the stock is over, and what we are seeing is that the intermediate term trend that is clearly indicating that the stock seems to have formed a bottom. So there could be some buying opportunity here, but the stock needs to sustain above the 1,050 mark for any meaningful upside rally. If that is taken out, then the stock could witness a sharp rally towards 1,250, 1,300 levels. Whereas on the downside, the recent low should act as very strong support. That's around 720, 750 zone. So that should act as a very strong zone. So if anyone is looking at accumulating the stock, any correction is a buying opportunity. With a stop loss below 725. On the upside, above 1,050, one can expect some sharp rally in the stock, maybe 15-20% on the upside.
Okay, so that's with regards to where nucleus software stands. Our next caller, Dilip, is calling in from Hyderabad. Dilip, a very good morning to you. How can we help you?
Good morning. Currently I'm holding Gravita India, 390 shares at the rate of 1900. So I'm looking to be on this.
Okay, and okay, all right. Got your query, Dilip. I'll take this up with Samir. Samir, any view on Gravita India? I mean, the numbers were fairly in line with what the street was expecting. Overall, the lead segment was, good for them this particular quarter. What's the view like? Should we continue to hold?
Yeah, I mean, look, they're expanding also in the lead space, and they're also diversifying into various other spaces when it comes to rubber and in the global market. So, the recycling space, according to me, is something that has a huge opportunity of growth. The management has actually been very, very disciplined, that they try to ensure that whatever capex they put in generates anywhere between 20 to 25% return on equity. I'm not even talking about return on capital, return on equity. So, how much of the equity goes in. So I think this business has good growth opportunity over the next many years. Their plans come up within a 1 year period. The problem sometimes they face is getting the permissions to set up these plants for the recycling. But I think they will get quicker and faster over a period of time. And what we will see is the growth in top line as well as operating leverage. So we remain positive. Valuations are a little rich, so hold on for you. If you would like to add some more, I would say closer to 1,400 would be a good price to add, but I would not sell the stock given the fact that the growth is very strong and the opportunity in this space is very strong.
View on the fundamentals. We've got a couple of questions that are coming through on Tata Motors. One is from BJ Kulkarni, who's got a long-term view, and he's got Tata Motors that he's bought at levels of 655, and the relatively shorter-term view, 3 to 6 months, is from Abhishek. He's bought 10,000 shares at a price of 697 rupees per share, and he's wondering at what level should he consider selling. First, on the fundamentals, Samir, I'll come to you. There are significant developments in the recent past with Tata Motors, and it's been a bit of a yo-yo or pendulum in terms of bad news and good. On the one hand, you had Trump tariffs that came through, JLR exports to the US were stopped, and then you had a resumption of those exports. You now have the UK-US deal that is being talked about and those positive developments. On the India front, you have the UK-India deal. The FTA, which would allow the company to bring in vehicles at a cheaper price. So things now finally moving in favor of JLR. Would you buy? Would you hold?
So we've been a buyer in JLR, Tata Motors for quite some time. We've been saying that the stock has seen a very sharp correction. Apart from the 2 points that you kind of more or less mentioned why we are positive, there's also a demerger coming in where the commercial vehicle business and the passenger vehicle business will be demerged. So that would lead to some amount of value unlocking. Sorry, and like you rightfully said, the opportunity for them to open up a bigger market share or to gain some market share in India opens up because their cars will probably the fully made imported cars, the value will come down, which are very expensive. which means they will become much more competitive. So that's a great benefit. And in the US, with the US-UK trade agreement in place, they again could take maybe some little bit of market share from some of the other companies which are making it in the European Union, where the trade agreements are fully not in place, and try to maybe get some market share in the interim. And valuations again are comfortable. I think companies profitable. We believe long-term growth is good, so I would definitely buy onto it.
Absolutely. So thanks so much for that view. I also want to complete the loop, so to speak, because we also got that shorter term question. 697, I think, was the buy price Abhishek had, and he's got 3 to 6 months. Amar, on the charts, would you hold on? It's more or less where the stock price is right now.
So if you look at Tata Motors definitely has witnessed a pullback from the recent lows, and it seems to be inching higher. But on the upside, technically, if you ask me, somewhere around 715, 730, that's a zone of resistance for the stock. Yeah, if that level is taken out, then the stock has a potential to rally towards the 750, 760 mark. That's where, again, it would run into a wall of resistance. So I would recommend that if you're looking at it from a short-term perspective, maybe the two levels to watch out for is 720, 725 on the upside. If that is taken out, hold on to your position. It could rally towards 750 levels, where you could definitely look at making profits.
Regards to where Tata Motors stand. Our next caller, Suresh, is calling in from Hyderabad. Suresh, a very good morning to you. How can we help you?
Hi, very good morning. I'm holding Nalco in 350 shares where I'm holding one at 152.
Okay.
So I'm in loss around 5%, 4.5%. But can I add more for a shorter term, like 3 to 6 months? And 3 to 6 months, can I add more?
Okay, got your query, Suresh. I'll take this up with Amar. Amar, what are the charts indicating for Nalco? Should we continue to hold for the next 3 to 6 months and also add more?
Yeah, I would say if you look at Nalco again, Nalco has witnessed a sharp correction from 260. Currently, it's around 150 odd levels. So in the metal space, I would say one can look at adding some position. But if you look at the intermediate term trend, that clearly is still weak. So what is likely to mean is that if there is selling pressure in the markets, we could witness the stock retesting its recent low of 135, 137. Ideally, 130, 140 would be a good level to enter, and only a rally above the 160, 165 would mean that the stock is likely to inch higher towards the 180, 185. So these are the levels to watch out for. But overall, if I look at the long-term perspective on the quarterly charts or on the yearly charts, that continues to remain strong and positive. However, in the intermediate term trend, we are seeing some sort of consolidation. So effectively, any pullback is a buying opportunity, and 130, 135 is a very strong support zone.
Okay, so those are the levels that you should keep in mind. 135 on the downside for Nalco proves to be a support. Morpin Lab is the name of the counter that we're talking about next. And Kenrick has got this question. He's bought at levels of 59.5, and he's not really specified his holding period. So I'm going to assume that he can hold for the long term. Samir, any view on the fundamentals?
Sorry again, don't track this one.
Yeah, I don't blame you. You've got quite a wide coverage in any case. Amar, on the technicals, what would you do if you bought Morpin Lab at a price of 59.5?
I would say if we look at the stock on the intermediate term trend, clearly is showing consolidation, and the levels are 42, 43 on the downside and 64, 65 on the upside. So you can say 40 and 65. That's a range for the stock, and the structure of the stock is that the stock has corrected by almost 50% from its recent highs, and the stock definitely has very strong support at the lower level. So ideally, that should not be breached. But for any meaningful rally, it needs to sustain over the 64, 65 levels. So adding at the current levels, I wouldn't recommend. But yes, on any significant correction towards 45, 46 or levels, maybe a 10, 15% correction, there one can look at adding from a long-term perspective. Okay. But we'll have to... Yeah.
Okay, so that's a view on Morpin Lab. We've got a caller, Tarun from Delhi. Hi, Tarun. Good morning. How can we help you today?
Hi, I'm looking at investing in the banking sector. I'm looking at a fund of around 10 lakhs. Okay. So is this the right time to invest in the banking sector?
Okay, that's a good question, and that's quite a considerable sum of capital that you want to deploy. Samir, on the fundamentals, you've already talked about IDFC First. If I remember correctly, it's your top pick. What else would you buy?
So definitely would look to add some HDFC Bank as well. I think the valuations are not too expensive, and I believe given the size that they have, the growth, and I think that there you can make some decent money. I'd look at some. So I would actually look to break that into 4 parts. So, for the safety angle, you can have a HDFC Bank at 25% to 30%. Have IDFC First Bank, and from a PSU side, you can add Bank of Baroda or a Canara Bank interchangeably. There you could put another 25 and 25%. And I would take a little bit of a risk and say go out and buy IndusInd Bank to some extent, maybe 50 to 20%, because I believe the worst is in the price. What we're going to see is tighter controls going forward, profitability coming back, and re-rating in the valuation. So that's the way I would go about break it in the entire banking space. Yes, we are positive in the banking. We have been for some time. But if this is only, if you're only investing 10 lakhs, don't put all of it into banking. You could probably look at other sectors where growth is also there. But given your specific question, I'll say try to break it up in this format. That's the way I would. Disclaimer, this is how I would do. I have my investments as well.
Yeah. That makes sense. Suzlon, okay, my tongue is not working quickly enough. Suzlon is the name of the counter we're talking about, and B. Soumya is asking this question. She's writing in from Chennai. 70 rupees is the buy price. What's the view on the short-term perspective? Amar, on the charts?
So see, Suzlon seems to be in for consolidation post the sharp rally, and the stock has good support coming around the 45, 46 level. So ideally one can hold on to the position, but any meaningful rally is only above 60, 62 levels.
Got it. All right, so that's a view on Suzlon. Amar as well as Sameer, thanks so much for joining us this morning, and happy Friday to you, and happy weekend.
Thank you. Hope the weekend's not too noisy and painful, Alex.
I hope that is the case as well. And I'm sure everybody tuning in is going to hope the same thing. Well, that brings us to the end of this edition of Ask Profit from Mahima and myself and the team that put this show together. Thank you so much for watching. Do stay tuned. Up next is Know Your Company, and we've got lots more besides that over the course of the day. This is NDTV Profit.
That's huge. That is a biggie. It's on.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
इजी मेंटेनेंस है।
आपको मालूम है इसका फेस वॉश का खर्चा डबल है। तो देख मेरी आंखों के नीचे पहली बार तेरे को डार्क सर्कल है। एक मरे हुए मुर्गे में अगर जान डाल सकते हैं ना तो लिशियस बनेगा।
Friendship came first or the idea came first?
Abhay, he was my friend. We also had.
I was.
Okay, this time. Actually, he landed in my office with this whole meat idea.
Actually, मैं बताया नहीं, मैंने शराब पी के इसको बोला था कि ये करना है।
Have the conversation in his office. He doesn't take it too seriously.
इसको मैंने बुलाया घर आजा भाई, दोपहर को आया अपने महंगे वीसी वाले कपड़े पहन के। दरवाजे पे घंटी बजी, वो भैया ने इसको सोन पापड़ी के डब्बे में मटन पकड़ा दिया। इसके महंगे कपड़ों पे थोड़ा वो छलक गया। तो
Was it tough initially to get people to buy into the story?
I come from actually Baniya vegetarian family, and my parents, my dad's side, मैं मतलब लोगों को क्या बोलूँगा?
The best thing is if a friendship survives a business pitch, I think that should be a true test of friendship.
हमने एक दूसरे को ये लिख के वादा किया था,
अगर बीवियां भी लड़ लें तो हम झगड़ा नहीं कर सकते,
मर जाएंगे पटनी घाटे।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest Hello and welcome. Thanks for tuning in. This is KYC. We're going to today look at Wonderla Holidays. It's an interesting business from a perspective that it all depends, and there's footage playing. It's an interesting business because it's just one of two listed companies in the space, and it's a very niche business to actually be in, and therefore it's a business with strong moats. It also has no debt, and it's a heavy capex business with no debt, and that's the other piece that is very, very interesting about a business like this, with a heavy capex but with no debt in that sense. But yes, that's broadly it with regard to that. Kind of explains the business model well enough, I think, that video. But let's quickly go across and understand why Wonderla first. Discretionary consumption play. Discretionary is the big theme which is playing out. New park launches that they've lined up. Strong growth aspirations that the company has, and limited competition with regard to the players and competition that it has. It's only Imagica World. But in terms of what I want to know about the company, one of the key reasons is that the FY26 guidance continues to be muted on the back of a difficult FY25 that the company has had. So why that on a lower base the company is not able to demonstrate strong growth? So that's the first one. What are their plans with regard to increasing visitors? And they ventured into events, etc., which to kind of boost that number. What are their plans to ensure that that number sustains and keeps growing at a healthy clip? Because that will push underlying growth, and that's the key to Wonderla's business model. All your costs are upfronted. A large part of it is upfronted. Your OPEX too, in that sense, is largely fixed, and therefore the key will be to push visitors into parks. And that's the other piece. Reasons for the weak visitor count in the last 2 years. Will those reasons sustain is something that I'd want to understand. And the fourth one is that they're introducing dynamic pricing. They're also doing better on the non-ticketing side of things, and they're doing well on their hotels business as well. So all of these ancillaries, the non-ticketing, the hotels, is where you want to see how much traction can they build around the park. It's like PVR selling snacks and popcorn over actually pushing viewers to go and watch the movie. And moreover, the non-ticketing revenue is what I want to understand. How does that take shape going forward? What makes the company bullish in the medium to the long term? Why is it that they are so bullish if the visitor count is not increasing, if the footfall is not increasing? And therefore, why do they keep putting up parks if they're not able to garner that traction, is really the question I'd want to ask. New geographies that are being considered, because there are a couple of parks that are under consideration. There's also a fifth park that they're planning to launch this calendar year. The sixth piece is margins weakening. Is that a concern? And it is, because this is a strong margin business. Till Q4 last year, it was running at a 30% margin. Q4 this year, it's at 15%. Higher marketing spends, etc. But pulling down the margin. How quickly can it go back? How quickly can it recover? Is it a concern at all? Does the business model change, especially given the fact that they're going into the events business? Return ratios, what to expect? They've been around the mid-teens or maybe slightly lower than that. Can we expect a ramp up with regard to ROC if scale is to be achieved, if the visitor count goes up? And last one, CAPEX. What are the plans with regard to CAPEX? They've done an equity raise. They sit on cash of nearly 400 crore. And therefore, what plans with regard to CAPEX? Anyway, let's start off very, very quickly with first understanding about the company. Wonderla is engaged in the business of amusement parks and resorts, as you've now fully understood. So it's an amusement park, come restaurant, which is food and beverage, come resorts and hotels. So hospitality, come consumer discretionary. That's how one would put it. It's a prominent operator of amusement parks in the country. completed its IPO in April of 2014, so not new to exchanges. The company has 4 amusement parks currently: Bangalore, Hyderabad, Bhubaneswar and Kochi. Those are the 4 parks that they have. The company has purchased land in Chennai for a new park, and the new park will start functioning by year-end calendar year 2025. They've also done a fundraise to ensure that there's enough money in the pipeline to continue to launch new parks, and they're expecting maybe a park or 2 to be launched over the next 2 years as well. Of course, approvals for that underway. So we'll keep an eye out on that as well. Makeover of existing parks is also what they regularly do, adding new rides to try and make sure that visitors coming in get a more diverse experience and are attracted to come back again, not just for the same rides, but there are more rides and more diversity in that sense for visitors to try and enjoy. But that's the sum and substance of it. In terms of non-ticketing revenue, those are your levers to kind of push non-ticketing revenue, and this will become important when we look at the operational metrics and when I give you a breakup of how the revenue split is happening in terms of ticketing versus non-ticketing and how the growth of those are happening. So keep this in mind. This is broadly how the non-ticketing services revenue is shaped up. We'll speak to Arun K. Chittilapalli, who's the chairman and managing director at Wonderla Holidays, to get a perspective on all of that we've just spoken about. But it's time to go across and look at our KYC metrics. What will we be looking at? And we'll start off by understanding the operational metrics, which is how have footfalls, which is how is visitor count in the parks evolving. We'll look at income statement, balance sheet, operational metrics and cash flow. Thereafter, we'll look at shareholding pattern, return ratios, street cred and street coverage. We'll look at all of those. And along with street coverage, we'll also delve a little bit into valuations, because that also holds some importance where investors are concerned. So something to look out for. But let's quickly start off with the income statement. And within that income statement, we're seeing good growth with regard to top line. So your top line has shaped up fairly well over the last few years. It's delivered a 50+% CAGR on the top line number over the last 3 years CAGR I'm talking about. Margins have come off significantly over the last 3 years, so that's a bit of a concern. But just the top line growth ensures that you've done fairly well for yourself overall. Margins have gone from 17 all the way up to 50%, thereafter cooling off to 47, and FY25 has been 32. Q4 FY25 has in fact seen margins tumble and take a bit of a knock. So let's pull out the Q4 numbers in particular of FY24 versus FY25. And what we are seeing as part of that is margins have shrunk from 35.5% to just about 20%. So very sharp contraction in margins, and it'll be interesting to understand whether they can recover. There are various reasons given for this margin contraction, and I'll quickly touch upon those before we go on. The first reason is that discretionary spend in Q4 FY25 was muted. So these are some risks to the business as well, and it kind of covers the Q4 numbers. Second one is you've seen a larger focus on marketing spend and employee costs going up. Marketing spend also has increased because they've gone into the events business. They've held a couple of events at their parks to increase footfall. All good measures, mind you, but all of those hurting margins. So are they temporary? Are they permanent? Is this a permanent change with regard to how Wonderla operates? Will be a question. And organizing an event inevitably increases the recurring expenditure that the company incurs, because otherwise the park is functional as is. But if you have to hold an event, then you have various other expenses to take care of, including the performers, etc. And that kind of dilutes margins to a certain extent from what the management has suggested in the Q4 con call. So the increased expenses is what is hurting that margin number. But nonetheless, EBITDA has grown in a very nice and healthy fashion. You look at the absolute EBITDA, it's gone up 91% over the last 3 years. Even when I'm looking at the EBITDA number absolute between FY22 and FY25, as you can see on your screen, it's gone up. If you can switch over to the FY25, correct. So if you look at the number, 22 to 147 is very, very healthy. But the journey there is difficult because FY23, the EBITDA was 213 crore and FY24, it was 230 crore. So actually, there's been a shrink with regard to EBITDA when you're looking at each of the years, and that is where some of the concern lies. And we'll try and quiz management as to what to expect going forward on this count as well. So that's how the income statement stacks up. Some concern, no doubt, but the direction with regard to top line growth is absolutely solid and it's right. Even in terms of profitability, the direction is the right direction in which they've gone in terms of profit after tax. So fairly decent in that sense. Again, it's cooled off versus FY23 and FY24, but nonetheless, the profit direction seems just about right. Let's look at the balance sheet therefore. Now, when you're looking at the balance sheet, you look at the equity capital, it's gone up from around 1,100 crore to 1,700 crore in the last year or so. That's because one, they had an equity raise of around 500 odd crore, and then you obviously add the profit after tax for FY25 full year, and that's how you've added the 600 crore to the 1100 crore number and arrived at the 1700 crore in terms of net worth at this point. Borrowing is close to zero. This is a very low to no debt company, which is impressive because they do a lot of capex. But when you're looking at the cash and bank balance, it's sitting on a 400 crore cash balance. No surprise. Why? Because they've done an equity raise in FY25, and that aids the cash balances. Those cash balances are not fully deployed yet, and therefore how do they deploy that cash balance and how quickly do they do that will be a question. Now, very important to note here, for a 4,000 crore market cap company to have a cash balance of 400 crore is significant, and therefore that's the other piece you want to be careful about as to what they do with that cash balance. But for the moment, that's how the financial metrics look. No concern with how the balance sheet has been going about itself. There's absolutely no concern there. Let's look at operational metrics now. Now, in terms of operational metrics, again, it's crucial to understand footfalls. Now, what's happening with footfalls is that they are falling. Footfalls have actually fallen 10% FY23 versus FY24 and FY25. So from 3,311 crore come down to 3,050 crore in terms of footfall. I apologize. Footfall from 33 lakhs has come down to 30.5 lakhs. That's how the footfall has come down by. Now, in terms of park-wise footfall, that's the distribution. The park in Bhubaneswar will start to incrementally add to the footfall because this is a park which was launched in FY25. So it's starting to see an expansion in footfall even in Q4, and very sharp growth that we are seeing there. So FY26 will be the year, first full year of the Bhubaneswar park becoming operational. So you want to see as to how that park does in terms of footfall and where it goes and how it contributes to the overall footfall of the company. But this clearly is a point which is lacking. Let's look at revenue per user. And when you're seeing it 2023 versus 2024 versus 2025, revenue per user has not gone up significantly. It's gone up by just about 16-17%. And therefore your ARPU, which was at 1,250 rupees per user, has gone up to 1,450 rupees per user. No significant increase. Let's take a breakup of this as well. The breakup of this is on ticketing versus non-ticketing. And in terms of the breakup, again, very interesting metrics. The ticketing numbers haven't gone up substantially. It's the non-ticketing numbers which are showing the best growth. This is average ticketing revenue and it's location wise. If you see it, Hardly a 2, 3, 4% growth, not more than that. But when you're looking at non-ticketing, let's look at those numbers with regard to non-ticketing. And the average has seen a growth of at least 50-odd%. And therefore, a large chunk of the revenue coming from non-ticketing. And that piece is doing very, very well for itself. So non-ticketing is the big focus. Let me now quickly take you through cash flows. Interesting here because cash flows actually come off FY23 versus 24 versus 25 along expected lines. And we'll give this a thumbs down because cash flows have come off. But they're in line with profitability. So that's a positive. No receivables, no working capital requirements, none of that. The net cash flow is close to zero because a lot of the cash flow goes into investing activities and investing in new parks. Now let's look at return ratios. Return ratios have been steady in that sense over the last couple of years, around 15-odd%. Can they maintain that will be the question, but clearly not the best place to be with regard to where return ratios are. Now, return ratios technically are a neutral, largely because it's a mid-teens kind of return ratio and there's no debt. So it's largely equity, and therefore your return ratios don't look as weak for a high capex company. They're doing fairly well for themselves. If they're able to do well on the top line count, then you might well see these return ratios turn around and do very, very well. And therefore, we'll want to understand whether there's a target IRR or whether there's a target return ratio. But we'll give this one a neutral with regard to where return ratios is concerned. Let's look at shareholding very, very quickly because we're running out of time as well. So in terms of shareholding and in terms of promoter holding, it's around 62-odd% currently. That dilution that you see is purely because of the equity raise that's happened. FIs are showing a better interest in the company. As part of the fundraise, we've had Custody Bank of Japan, which has put in money and now owns around a 2% stake here. There's also Value Quest India, which owned this one, but now owns it maybe through another emerging markets fund. There are DIs, Tata Mutual Fund, SBI Magnum, which own around 9% of the company, so something to look out for. Some good investors within that FI-DI bracket as well. But the public shareholding has gone up substantially. So from FY20, which was at 27,000, the public holding has gone to 58,000. Something to be careful about. Number of shareholders have gone up substantially. That's how it's shaping up on the shareholding count. We'll give this one a thumbs up, no doubt about that. Let's look, therefore, at street cred now. In terms of street cred, stocks done nothing over the last year or so, and those numbers will flash on your screen. Stocks done nothing over the last year or so. For the last 5 years, it's done quite well for itself. It's not done badly at all. It's been a 5-bagger in the last 5 years. So not bad returns in the medium term, but outside of that, in the last 1 year, it's been a bit of a problem. And that's also because the operational numbers and footfalls aren't coming through. So you want to wait and watch as to how that evolves. Last off, I want to cover valuations and street coverage. In terms of valuations, when you're looking at it, Wonderla versus Imagica. Imagica trading at a premium. FY25, trailing 12 months, surely at a premium. But even FY26 at nearly a 15% premium to Wonderla. So in that sense, it's not a very expensive stock in relative terms. But at 35 times, you want better growth, right? So something to look out for again is growth. Whether it can clock that growth and re-rate sharply in terms of its price to earnings will be a question. That's how the analyst recommendations have shaped up. There's an 83% upside to what the average analyst expectation is. So again, we'll give this one a neutral because of how all of those metrics are playing out. Let's go across to Mr. Arun K. Chittilapalli, who is joining us. He's the chairman and managing director at Wonderla Holidays. Welcome, sir. So I want to start off with trying to understand how the environment is. And you've guided for a 5 to 10% footfall growth. You've not done that in the last couple of years. One, what makes you confident of that growth? And two, wouldn't you want something better in terms of that growth number? Because Bhubaneswar adds to that number, right? So just trying to get that perspective.
Thank you for having me on the show. Yes, we have guided. I mean, we are hoping that there will be, it's not a guidance, we're hoping that there will be a 5 to 10% growth in footfall in this coming year. The reason for that is we have, like you said, we have opened new parks. We have opened one park, which is a small one. And we are also opening a large park in December in Chennai, which should be at par with one of our largest parks, like in Bangalore, etc. So these two factors will play. The other thing is, like you rightly said, we've not seen footfall growth in the last 2 years. The main reason for that is we had a huge growth in surge in footfalls in FY23. Now, on growing on top of that is difficult because our parks are already mature parks, most of them, with the exception of Hyderabad. So we are not expecting growth in footfalls there. And what usually happens when we have extraordinary growth in footfalls is our reviews become negative, and then people, don't come. And then, of course, there is, issues with weather and all those things, which also kind of played into the footfall growth for the last 2 years. Now, the reason why we are expecting growth in this year is because those effects have kind of normalized. I think 2 years is a good time for any those kind of effects to normalize. And we are also adding new attractions to our parks at regular intervals. So there is more reasons for people to visit. And we have extra capacity that we have added over the years. So these three reasons why we are expecting growth in this year.
So Arun, just give us better perspective on this. Is 5 to 10% a conservative number? Can we see a better number with regard to footfalls this year? That's my first question. Second question is, how does that impact your top line? Because there's ticketing revenue, non-ticketing revenue. Non-ticketing revenue is growing, ticketing revenue is not. So give us that interplay and give us that perspective as to where revenue should therefore lie and what's the aspiration there.
See, I think 5 to 10% is a conservative number from our end, because it's very difficult for us to predict how footfalls are going to grow. The environment is uncertain. Now we have a India-Pakistan situation. There's so many things happening, right? So, and we don't know, how the things will play out. But if all goes well, I think we should minimum do 5 to 10%, and we could do better as well. If, for example, if we are seeing huge demand in Chennai, for example, which is our newest park we're going to open. If you see huge demand there in our first quarter, then of course the numbers will be better than that. But we are not predicting that because we are being cautious about it. So let's see how it goes.
And what about top line, Arun? Dynamic pricing, no increase in ticketing revenue per user over the last maybe couple of years. Does all that also call for an increase on that count, and non-ticketing revenue also growing decently well on an average, on an ARPU basis? So how should that evolve in terms of top line?
The top line again is hard to predict. We do have dynamic pricing in our ticketing and also for the resort and everything. So it all depends on demand and supply. So if there is high demand, then obviously we will ramp up our ticket prices. And consequently, if there is low demand, we will obviously bring down prices, and there will be more discounts, etc. So it's very difficult to kind of again pinpoint on how the revenue growth will be. But we are expecting an ARPU growth of roughly again 5% for this year. Again, because we are adding new parks, and new parks usually mean higher discounts in our first year or so. So because of that, I don't see ARPU growth much. Also, ARPU has grown tremendously in the last 3 years. If you look at our pre-COVID ARPU and post-COVID ARPU, we are almost double in that sense. So I don't see much growth there. We might expect 5% or 5 to 6% for the year.
Yeah, but all of that should add to your top line, Arun. So maybe a 15 to 20% growth on top line from what you're saying could well be reasonable.
Could be reasonable. We'll have to wait and see.
Okay, understood. And what's the medium-term guidance? Say, if I were to pull out and think of it from a 3-year perspective, what's the 3-year CAGR with regard to top line, and how would that evolve? Just give us a number broadly.
See, we don't give guidance in terms of revenues. That's not allowed, and we don't do that. But
Sure.
we are expecting footfalls to grow substantially not much in this financial year, but definitely in the next financial year, which is FY27, when we'll have Bhubaneswar also running at full fully firing, and also Chennai will also be firing by FY27. This year is a bit of a wild card. We are expecting some footfall growth, but again, we are unsure of how it's going to be at this point.
Sure. Arun, sorry, I'm just going to try and squeeze two quick questions. One is with regard to margins. So your margins have shrunk. Where do you see them on a normalized basis? Maybe a year or two more of drag, and thereafter they normalize. Where do they normalize?
Yes, we will see some margin pressure in this year again because of our new parks. We spend more on marketing. We are recruiting a lot of people. We are doing ESOPs. I mean, so obviously there are cost pressures on that front. But once, like I said, in FY27, once our footfalls start coming from our new projects, I think margins will start coming back.
And therefore, around 30%, would that be a reasonable number? Coming back in the sense, just wanting a ballpark number, even a range would help?
See, last year we had, I think, our highest ever margins. So, that is at a stage where we have fully matured parks, very low depreciation, and each park giving high ARPU growth. Now that for us to get to that stage, it will take maybe a year or two, because we are having new parks coming on stream. So there will be high depreciation charges. There will be marketing costs, which will be higher than usual. So, I mean, for our margin to come to that 50% kind of EBITDA margin, maybe it will take a few more years. But I think our margins will improve from what it is in the last year, maybe this year or next year. That's what we are hoping.
Interesting. Okay. Thank you so much, Arun. In fact, unfortunately, all the time we have very interesting conversation. And I could go on, but that's all the time we have. So I'm going to have to let you go.
Thank you.
But yes, so let's quickly look at the KYC rating on this one. And, we've tried our best to analyze this the best we can. And from what commentary that's come through, it may be a year or two more before that ARPU number actually picks up. Because there'll be discounts which will keep coming through because of new parks. And it'll also take a year or two, if we can go on to the next slide as well. It'll also take a year or two for the footfalls to pick up. And both of those could well start impacting numbers FY27 onwards. That's the expectation he's given. And he said that margins thereafter will take maybe a year or so to pick up and go back towards 50%. That'll be very interesting to see. So more to see in terms of execution. It's going to be a weak year for FY26. That's the outlook he's given us. Completely out of time on this edition of KYC. Hope you found this helpful. Stay tuned. More action on the other side.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
इजी मेंटेनेंस है।
आपको मालूम है इसका फेस वॉश का खर्चा डबल है। तो देख मेरी आंखों के नीचे पहली बार तेरे को डार्क सर्कल है। एक मरे हुए मुर्गे में अगर जान डाल सकते हैं ना तो लिशियस बने।
Friendship came first or the idea came first?
Abhay, he was my friend. We also had. Okay, this time. Actually, he landed in my office with this whole meat idea.
Actually, मैं बताया नहीं, मैंने शराब पी के इसको बोला था कि ये करना है।
So you have the conversation in his office. He doesn't take it too seriously.
इसको मैंने बुलाया, घर आजा भाई। दोपहर को आया अपने महंगे वीसी वाले कपड़े पहन के। दरवाजे पे घंटी बजी, वो भैया ने इसको सोन पापड़ी के डब्बे में मटन पकड़ा दिया। इसके महंगे कपड़ों पे थोड़ा वो छलक गया। तो
Was it tough initially to get people to buy into the story?
I come from actually a Baniya vegetarian family, and my parents, my dad said, मैं मतलब लोगों को क्या बोलूँगा?
The best thing is if a friendship survives a business pitch, I think that should be a true test of friendship.
हमने एक दूसरे को ये लिख के वादा किया था,
अगर बीवियाँ भी लड़ लें तो हम झगड़ा नहीं कर सकते।
मर जाएंगे पटनी घाटे।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Hi, thanks so much for joining in. You're watching Markets at 12. Let me take you through the latest data that has come through from the Association of Mutual Funds in India. This essentially tabulates the inflows and the outflows from the mutual fund industry in the month of April. And it's an interesting talking point, because before you get into the overall number, I want to talk about the fact that ETFs, other ETFs as a category, have seen massive inflows. The interpretation is that investors that are looking for maneuverability have bought exchange-traded funds. And here it's important to understand why that is. We've seen quite a bit of uncertainty and variability in prices in the recent past, a lot of volatility. And so investors are looking to get a specific buy or sell price. And so when they're looking to buy at a certain level, they will deploy in ETFs because they get a specific price. Of course, if you buy an index fund or any other mutual fund for that matter, you will get the closing price of that day, the close of day net asset value, so to speak. But 19,000 plus crore rupees coming through in the form of other ETFs in the month of April, and that compares with a sizable inflow of close to 11,000 crore rupees in the previous month. So if you cumulate the index fund inflow in the month gone by, that is about 1,500 crore rupees, and 19,000 plus crore rupees in the form of other ETFs, then equity ETFs and equity index funds have got upwards of 20,000 crore rupees of inflows on a net basis, and that's quite considerable considering that active mutual funds have gotten an inflow of about 24,000 crore rupees. Now, we'll talk more about that in just a bit. Let's listen into what the management of Asian Paints has to say about their results.
My first question to you is that it's been a tough year and a tough quarter overall for Asian Paints. You know, there are a couple of factors playing their role: muted demand, there's down trading, there's high competition playing out. Just wanted a sense as to, you know, how do you read all this, and when do you think that things will start to improve going ahead in FY26?
So overall, the quarter has been tough. The demand conditions has been fairly weak in terms of what we have seen overall to that extent. And that has kind of led to possibly the 2% volume growth, what we have kind of achieved in this quarter as we see it. Overall, what we see is that the urban centers continue to be on a lower growth trajectory. The T3, T4 cities, the rural centers are doing relatively much better in terms of what we see. The overall decorative industry is definitely facing larger challenges, and we kind of anticipate that the entire paint industry would be negative as far as the decorative paints is concerned. The industrial paints is something which has been doing quite well overall. They have been in the range of anywhere between 6 to 10% in terms of the growth which we have been able to see from a point of view of the industrial sector to that extent. And the other sector which has done well is the B2B institutions led market, which is there to that extent, where possibly the growth rates have been definitely much better in terms of from an overall scheme point of view to that extent. So I think that kept in mind today, I think the larger challenges comes in from the decorative sector in terms of the overall paints, in terms of what we're looking. Going forward, we are definitely seeing some upswing in the month of April in terms of looking at going ahead. Obviously, I think we'll have to keep on watching out for all the geopolitical stuff which is happening in the environment in terms of what is going to be there, and see in terms of how does that pan out. But overall, the estimation is that the demand conditions would be definitely much better than what the year we have seen. The urban centers should also kind of come up. The rural demand should kind of go up on the prediction of the normal monsoon in terms of what we kind of really see ahead to that extent. The luxury to mid-level housing, I think, is another area where we see that there should be a strong growth in terms of what we will get. Government spending on infrastructure would be a strong imperative area in terms of what we will continue to see this year to that extent. And finally, the industrial paints in terms of auto, powder, protective paints should kind of do well. I think given all this imperative, we see that we should be clearly aiming for a single-digit volume value growth for the coming year to that extent as we go forward.
Got it. And since you were talking about the overall industrial segment doing well for you, just wanted to understand that overall profitability, operating profitability has slightly been impacted there, and this is due to higher investments in the sales network as well. What's the sense there, and what's the kind of scope of improvement that you're expecting in the next financial year?
So see, we always have been operating, under a certain guidance in terms of what we have given the market. We have always maintained a PBDIT margin guidance of about 18 to 20%. If you look at the FY25 over on a console basis, we are closer to that 18% PBDIT margin. In fact, the standalone businesses are much better than that in terms of what we see in terms of the overall margins which have come in. So while I think the margins have come under a little bit of a pressure going forward, I think the way the organization is looking at the cost imperatives, the way we are looking at possibly our backward initiatives in terms of what we are doing to that extent, I think we are still kind of maintaining the guidance of about 18 to 20% in terms of PBDIT margins, which we should be able to kind of retain as we go forward.
And because crude is also improving, Mr. Singhal, just wanted to understand as to what role will that play in improving your margins?
So overall, if you look at the last quarter, which is Q4, there has been a deflation of about 1.5% in terms of what we have seen. So I think it is up the gross margins overall from a point of view of one level, which is coming into that extent. As we go forward, crude is kind of reached a certain level, which we think possibly is stabilizing at. But there seems to be still a lot of volatility in terms of the overall environment with respect to the currency. Rupee dollar has been behaving very differently in the last about 2 months in terms of what we see. We also see that possibly there could be another round of tariff war which could kind of come in, which could redefine the raw material prices a little bit far more differently in terms of what can be there in the environment. Given all this, what we see is that while deflation will definitely help us in terms of improving the margins forward, but anything which is fluctuating currency or in terms of additional tariffs which will come will have to be washed out in terms of how they really impact the overall margins, and therefore what would be the pricing considerations we would have to make as we kind of go forward.
Got it. And in terms of the one-off that was there as an exceptional item in your consolidated statement, that was related to White Teak, and it was approximately 183 crores. Give us some sense there, because I think there was an impairment that you've recorded there. Just wanted to get a sense as to why that has happened, and is that just for this particular quarter, or going ahead also it is going to have some ripple effect?
So see, White Teak has been part of our overall acquisition in terms of what we have made as part of the overall home decor segment, which we have kind of entered very strongly. As part of that, we had acquired White Teak about 3 years back. 2 years we have done extremely well from a point of view of exponential growth in terms of what we have been able to achieve. We have driven the sales from almost about 45 odd crores to something like close to about 120 crores in 2 years to that extent. Last year particularly, which is FY25, has not been very, very strong. In fact, we got into some loop of the BIS standards to that extent, given the fact that a lot of material comes from China there to that extent. And that is something which has disrupted the last 6 months trajectory, where possibly the sales have been down by almost about 50% in terms of what we have seen. And given the fact that we have done the projection projections and there are certain payouts for the business which is involved. To that extent, we had to kind of take a impairment from a point of view of goodwill in terms of what we had to maintain in terms of the overall business going forward. So I think we see that this as a one-time event which is happening, given the fact that the external environment has been very, very difficult to that extent, which is there. But going forward, I think we should be able to kind of really bring it back on ground to that extent and not look at any further impairments going forward.
And in terms of capex also, correct me if I'm wrong here, around 700 to 800 crore is something that you've planned over FY26 and 27. Give us a sense as to how that will be deployed and what it will be exactly deployed for and how exactly it will be funded.
So overall, the funding is not a problem because the cash reserves of the organization are enough to kind of really look at that funding which kind of comes in. We are looking at this 700 to 800, which will kind of go in terms of looking at part funding some of our backward integration areas which is there, and part possibly looking at bringing cost efficiencies and areas of efficient manufacturing in our plants as we kind of really see it. To the extent there could be some additional expenses from a point of view of putting additional distribution centers and so on and so forth, which would kind of come in. Going forward, we are looking at also a 9th plant, which is going to come in, where the investment would be more than 2,000 crores, which will come. And therefore, for the next 5 years, we are looking at almost an investment of anywhere between close to about 3,000 to 4,000 crores, which will happen.
Interesting. 3,000 to 4,000 odd crores. All right. Just one last question before I let you go, Mr. Singhal. In terms of competition, you know, this has been a pressing question since the past few quarters. Do you now think that the competition is having a bigger impact? Is that correct? And it's not just from the new entrants. Is it also from existing players?
Yes, I think the competitive intensity has gone up if you look at from the existing players as well as the new players overall to that extent. And that is something which is bound to happen when the demand conditions are on a little bit of a lower side to that extent. And I think that is something which we are also reinforcing our areas of action in the market in a very, very strong way in terms of what we want to get. But I think with respect to newer competition, even if today, you know, you're talking of a share of 3 to 5%, I don't think so. It is a very big share to really impact the overall dynamics of the market. What we need to kind of see is whether some of these actions are sustainable over the next 2-3 years in terms of what is there. Yes, immediately there has been disruption to some extent from a point of view of how prices and margins kind of stand in the market to that extent. But I think the whole area of sustainability is something which has to be seen, given that some of the new competition might have a share between 3 to 5% in terms of what they're getting.
All right, so that's the management of Asian Paints talking about the quarter gone by, which was a tough quarter, considering that there is increased pressure on pricing and margins have been under pressure. The stock is more or less flat in trade right now. Let's talk about the AMFI numbers, though, and the numbers coming through for the mutual fund industry. There is a new record high for gross SIP inflows, and that number is coming in at 26,632 crore rupees. That compares with about 25,930 crore rupees in the previous month, and it is higher than the previous record of about 26,459 crore rupees that was recorded in December of 2024. This is a very significant statement of intent by Indian investors, and a large part of that is driven by retail flows. Bear that in mind. Overall, the actively managed equity mutual fund schemes have seen net inflows of about 24,000 crore rupees in the month gone by, and that compares with about 25,000 crore rupees in the previous month. It's more or less stayed stable. If you look at the components of that, you have flexi-cap funds that have gotten a considerable inflow of about 5,540 crore rupees. You have small-cap actively managed funds that have gotten about 4,000 crore rupees on a net basis. Mid-cap funds have bought about 3,313 or 14 crore rupees or thereabouts on a net basis. So it's across the board inflows that have come through. But as I was saying at the start, you have the star of the show this time around in the month of April, that is in the form of other ETFs. That category includes all equity ETFs, remember, and that includes like the Nifty 50 ETF by State Bank of India, mutual fund, SBI mutual fund, or UTI MF that have very large Nifty 50 ETFs, and everything from a momentum strategy to a value strategy, everything is included in this bucket. That has gotten inflows of over 19,000 crore rupees in the previous month, in the month of April, and that is nearly double what they got in the month of March, which itself was a very high number of close to 11,000 crore rupees. So people are using ETFs to buy the dip and any dip that comes through. What else is a headline? Another headline is gold ETFs, which have once again seen an outflow, very small one, of about 5.8 crore rupees in the month of April. And this indicates that people are booking profits at higher levels. Remember, gold prices have been on a tear. So that's more or less what the AMFI numbers are about. But let's take you through more earnings conversations, and my colleague Tamanna caught up with Biocon's Chief Executive Officer and Managing Director Siddharth Mittal to speak about the quarter gone by and the way ahead. Listen in.
Welcome on Earnings Edge. We're speaking about Biocon this morning. Key highlights of the results for quarter 4. Profit has beaten estimate. Revenue growth has been led by biosimilars and generics. Exceptional gains have also aided net profits. All in all, the quarter seems fairly robust, with a margin expansion as well, from 23.4% to 24.4%, a beat definitely on what was expected by analysts. Joining us to speak more about the quarter gone by and of course the outlook for this financial year is Siddharth Mittal, CEO and MD at Biocon Limited. Mr. Mittal, thank you so much for joining us. Just take us through how you have seen the numbers this quarter.
So good morning, and I think definitely it's been a very, very robust quarter, which was led by all three verticals. The growth of 15% on a year-on-year basis. So generics grew by 46%, biosimilars on a like-to-like basis, which is excluding the impact of the sale of the branded India business and also the licensing income, if you exclude from last year, fourth quarter numbers, has been a very robust 9% growth. And research services grew by 11%. So, when you look at some of the growth drivers in each of the businesses, see generics, we had a couple of very important launches. We had launched liraglutide in the UK market earlier in the quarter. Then we launched lenalidomide tablets as well as dasatinib in the US. And I think that led to a significant growth. And in biosimilars, we continue to expand our biosimilars in emerging markets. We continue to expand the market share of our launch products in the US, which led to the growth.
Let's talk a bit about all of the segments, Mr. Mittal, and let me start with Biocon Biologics. Is the new launch the focus as a tailwind for revenue growth going ahead, even further than EBITDA growth perhaps?
Well, revenues would, of course, continue to grow. There are tailwinds in areas such as insulin. We see a huge demand for insulin in various parts of the world. And we, of course, continue to see a very strong traction of our drugs which are launched in the US as well as the other emerging markets. So we continue to see that momentum build up. But of course, the growth, incremental growth is going to come from new launches. And we have many new launches coming up in the next fiscal, whether it's in the US or other parts of the world.
In terms of revenue growth for biosimilars, do you see pricing pressure to play a part going forward? Because, of course, that's your biggest segmental revenue.
Pricing pressure is part of the game. I mean, you do continue to see price erosion. The question always is, do you see deeper price erosion than what you expect, or do you see normalized price erosion? And I think as of now, we have not seen any signs of anything deeper than what we already selling at, and we see market stabilization. Now that, of course, cannot be predicted. A lot of the price erosion is dependent on how many new players enter the market and what is their action, or the other incumbents, what steps they take to gain more market share, and what defense then we have to do. So, but at this stage, we don't see any drastic change in the pricing environment.
Okay. Do you think that some of the concerns around what's happening in the US in terms of tariffs is easing, because we're yet to hear the last word on pharma tariffs from President Trump in the US, and our recent moves to encourage the FDA for approvals, faster approvals, manufacturing in the US. How do you see that picture, Mr. Mittal?
I think we are also watching as the world is watching. Of course, we feel that there is a huge dependency on Indian generics and biosimilar companies to lower the healthcare cost and support the healthcare security of the US. And I think any tariff would, of course, go against that spirit. And today, if you look at the 40 to 50% of the volumes in the US and comes from India, and or generics itself contribute to 60 to 70% of the overall volume. And the value is only 20%. So putting any tariffs would be counterproductive. We, of course, will have to wait and watch what kind of tariffs are being levied. But, in short term, we could see some disruption. But at the end of it, if you look at most generic companies and the margins that they're getting from the US business, I mean, there's very limited room for the companies to absorb the impact of tariffs. So somewhere we expect that the price would end up being absorbed by the patients or the consumers or the payers in the US.
In terms of the India, so since we're talking about geopolitical impact for your business, and that's one big factor, we already spoke about the US impact. I just want to understand what the India-UK FTA means for you, and how do you see that going forward?
I think it's, of course, a very encouraging step. Of 3 years of negotiation led to the settlement, and I think that's I would say, a very important milestone. Now, from an industry perspective, specifically when I talk about pharma, I think we've not seen anything detrimental. We definitely see a lot of encouragement between the two countries to work on newer technologies and strengthen ties further than what we have. So I definitely think it'll be positive for Indian companies to work with the UK companies to further expand and provide market access to the patients in the UK.
Let's talk a bit about the generics business. Robust growth in Q4 of 46%. Is this sustainable? Were there one-time factors, giving rise to this? Just give us a sense there.
So there was definitely an impact of launch of generic lenalidomide during the quarter, which bolstered the revenues during fourth quarter. I'll remind you that we had a settlement with the innovator and for launch of a certain volume in before the unlimited launch, which is in January 26. So January 26 is when you'll see everyone capture the entire market. But till then, each company had negotiated a certain market share, and we have supplied a large part of what we had negotiated with the innovator in fourth quarter. So yes, it will normalize in the coming quarters. But when I look at it on a full year basis, in FY26, we have very important launches coming up. We recently launched liraglutide in UK, so we'll see a full year impact of liraglutide in the UK market. We are also gearing up for launching liraglutide in Europe, which will lead to the growth in first half of the next fiscal. And then we are expecting approval from the US FDA for both liraglutide as well as for Copaxone. Now, apart from these important big blockbuster opportunities of Copaxone and liraglutide, we have many other OSDs also, which will be launched in the US. And I think a combination of growth in generic formulations and in our API business, we definitely expect a good growth in the generic segment on a full year basis in FY26.
Can you give us a broad number to what that growth looks like, if you're comfortable with that?
Sure. I would say that it's more in high teens or 20%, high teens to 20% kind of growth level is what we can definitely deliver.
And on a consolidated margins basis, you think this 24% range is sustainable, or do you see this as an up move? Because you're talking about a lot of blockbuster drug launches, expansion of liraglutide baked into the next financial year, or this financial year actually.
Yeah, I think it should be sustainable. I definitely don't see a significant expansion. We do look at launching new drugs, which will increase the margin, but the existing base business also gets impacted by the normalized price discounts that you have to pass on to your customers. So net, I don't see a significant change. Of course, it could be a bit lumpy during the quarters. I mean, fourth quarter was definitely high on account of the generic lenalidomide launch. But when you look at full year FY25 numbers, those kind of numbers should be sustainable in FY26 as well.
Yeah, just a couple of questions. You've raised funds, 4,500 crores. What is the deployment plan there?
We have announced that we are going to raise 4,500 crores in one or two more tranches. And mainly this is to take care of the obligations that Biocon has towards Biocon Biologics acquisition of Viatris, where we had taken in certain structured debt or structured equity from few of the investors. So this is to take care of those obligations.
Okay. Just one word on a possible Biocon Biologics IPO. Is that still being penciled in? Is that being deferred, looking at how the markets are right now?
Well, the markets, of course, are not at its best time. So the option continues, but we are also evaluating what are the other options we can pursue if it's not IPO. And I think we just constituted a committee of the board to look at all the options, and including a possible merger of Biocon and Biocon Biologics.
Okay, so that's pretty much out there. Thank you so much, Siddharth Mittal, for speaking with us. CEO and MD of Biocon Limited. It's been a robust Q4, but the outlook for the financial year also seems pretty optimistic, with new launches being the cornerstone.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
इजी मेंटेनेंस है।
आपको मालूम है इसका फेस वॉश का खर्चा डबल है। तो देख मेरी आंखों के नीचे पहली बार तेरे को डार्क सर्कल है। एक मरे हुए मुर्गे में अगर जान डाल सकते हैं ना तो लिशियस बनेगा।
Friendship came first or the idea came first?
He was my friend. We also had. Okay, this time. Actually, he landed in my office with this whole meat idea.
Actually, इसने बताया नहीं, मैंने शराब पी के इसको बोला था कि ये करना है।
So you have the conversation in his office. He doesn't take it too seriously.
इसको मैंने बुलाया, घर आजा भाई। दोपहर को आया अपने महंगे वीसी वाले कपड़े पहन के। दरवाजे पे घंटी बजी, वो भैया ने इसको सोन पापड़ी के डब्बे में मटन पकड़ा दिया। इसके महंगे कपड़ों पे थोड़ा वो छलक गया। तो
Was it tough initially to get people to buy into the story?
You know, I come from actually a Baniya vegetarian family, and my parents, my dad said, मैं मतलब लोगों को क्या बोलूँगा?
The best thing is if a friendship survives a business pitch, I think that should be a true test of friendship.
हमने एक दूसरे को ये लिख के वादा किया था,
अगर बीवियाँ भी लड़ लें तो हम झगड़ा नहीं कर सकते।
मर जाएंगे पटनी घाटे।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Easy मेंटेनेंस है।
आपको मालूम है इसका फेस वॉश का खर्चा डबल है। तो देख मेरी आंखों के नीचे देखो, पहली बार तेरे को डार्क सर्कल है। एक मरे हुए मुर्गे में अगर जान डाल सकते हैं ना तो लिशियस बने।
Friendship came first or the idea came first?
Abhay, you know, he was my friend. We also had.
Was.
Okay, this time. Actually, he landed in my office with this.
Watching NDTV Profit, I am Mahima Vachharjani. Pidilite is in focus on the back of its Q4 earnings, and we are joined by Sudhanshu Watts, Managing Director of Pidilite Industries, joining us now. Sudhanshu, always a pleasure speaking with you. Just wanted to understand as to how Q4 has panned out. Overall numbers, what the street was expecting was a slight miss there, but there has been a good and healthy volume growth, which has led to the kind of growth that we've seen. EBITDA was also a slight miss in terms of higher marketing spends, if I'm reading that correctly. Your sense as to how the quarter has gone by, and overall, how has FY25 fared?
So thanks, Mahima. Always a pleasure talking to you. And I think quarter four and both FY25 and quarter four have been very satisfactory. I must say Pidilite has delivered good set of results under the current circumstances. I think our double-digit underlying volume growth, about 9.8%, we are steadfastly delivering on the promise of profitable double-digit underlying volume growth. Our EBITDA in this quarter has again come 20% plus. Mahima, we've always been, guiding that we will deliver our EBITDA in the corridor of 20 to 24%. This corridor applies from year to year, but it indeed applies from quarter to quarter as well. Because as you know, Pidilite does not have consistent 4 quarters. We see reasonable amount of seasonality. Quarter one tends to be a large quarter for us. Quarter three is also is a large quarter. Quarter four usually tends to be a smaller quarter. And therefore, the EBITDA margins, with some of the fixed costs remaining the same, tend to vary a little bit from quarter to quarter. And I think as far as the year is concerned, we've delivered an expansion of 100 bps plus on our EBITDA margins as well, while delivering double-digit underlying volume growth.
Absolutely. And Sudhanshu, one interesting thing that I took away from, the commentary that you've given in your press release is that you're still cautiously optimistic right now when it comes to the demand scenario. Just wanted to understand, because FY26 first quarter is when, a lot of things start to turn positive when it comes to demand for the consumption space. There's tax cut, there's rate cut that has happened, there's commission pay which will start to kick in. What's your sense like? When will that commentary change from cautiously optimistic to actually being optimistic and bullish about the demand scenario?
That's a very good question, Mahima. I think, let me break this cautiously optimistic for you. I think first, on the demand scenario per se, from a consumer demand point of view, we are optimistic. And the reason I say we are optimistic is many of the things you talked about, but also the continued momentum in construction sector, increased government spending, and a likely good monsoon, second consecutive monsoon, which is a good monsoon. So on the consumer demand front, we are optimistic. Overall, Mahima, we are cautiously optimistic because at the same time, as I'm speaking to you, you know the geopolitical uncertainty, you know the entire volatility and uncertainty around economic scenario globally as I speak to you. So this entire global economic and in recent times more geopolitical uncertainty is something we need to factor in. And that's why in our commentary, and that's why the overall phrase I would use is cautiously optimistic.
Okay, got your point there. Sudhanshu, one more thing in the consumption space that we've been talking about, especially when it comes to the core consumption, when we talk about it, that rural is outpacing urban right now, right? I just wanted to understand that what's the story like for Pidilite, and if
we're actually seeing a structural change there. Do you think your distribution strategy is changing right now?
So let me take the question in two parts. I think as far as Pidilite is concerned, Mahima, we've always delivered rural ahead of urban, and we have a dedicated go-to-market division which is called Emerging India, which has two parts, which is rural, which is rural and very, very small town India, and what we call small town India. So I think from our point of view, we have been focused in that space. We have delivered consistently higher rural growth rates compared to urban, and last quarter is also the same. The good news, however, now on top of it is that urban is also catching up. Last quarter, we've seen considerable buoyancy even in our urban growth. So we basically, as we move forward, urban growths are improving, Mahima, and I think something which you've also, and perhaps in your question, hinted to. So urban growths are improving. We will continue to see, better urban growths. But as far as our strategy is concerned, we want to get into the nook and corner, continue to develop and build our categories. Because in many of our categories, we build categories. We play the role of pioneering. And in that, our ability for our go-to-market strategy and our field force, we have two field forces, one which goes to the dealers, the other which goes to the users or applicators. I think ensuring that we have the right depth and the right presence in each of these is very important for us.
Okay, got your point there. In terms of the international business, it was a muted quarter overall for quarter 4. What's the sense like there? And overall, FY26, do you think will be better in terms of your international business? And in terms of growing your international business, what is the kind of strategy that you're adopting?
So international business, I think in the quarter that has gone by, you're absolutely right. We were a little distinct because of many, the overall global uncertainties and the events that played out. So particularly, while I'm very happy to report to you that we've delivered growth in Bangladesh, we've actually delivered double-digit growth, but Bangladesh is our growth engine. And therefore, we were very confident of being able to do even better. And I think from the overall international point of view, I think there is a little bit of currency fluctuation which is happening in certain markets. So that has a bearing in the numbers which you see. But because the growth, therefore, tends to be a bit higher than the reported rupee number in that sense. And I think from our strategy moving forward, as far as international is concerned, there are 3 legs to our strategy. We will continue to drive South Asia. We have good presence in South Asia, Bangladesh, Sri Lanka, Nepal. These are 3 places. So South Asia, we will continue to drive, and we will continue to build our business. You will see more and more of Pidilite India portfolio getting played out in this part of the world. We will continue to explore Africa. Kenya delivered well for us, but we will keep driving other parts of Africa, pick and choose the right places where we want to play. We will strengthen our presence in Middle East, as you know. So therefore, that is the other leg of our portfolio. So therefore, driving South Asia, exploring Africa, and strengthening Middle East are the 3 key pillars of our international strategy moving forward.
Okay, that's very interesting, Sudhanshu. One more question that I had was with respect to scaling up the EV and electronics adhesive segment. What's the sense like there? Are there any wins in terms of partnership that have taken place, or how do you plan to go about that?
No, so we are making very good progress, steady progress in that space as well. We've approached almost all the EMSs or contract manufacturers. So our product portfolio is now getting specified, sampled, looked at. We've also got a few early wins. I think it is too early to sort of say anything conclusive in that area, but we are making very good progress. And I can assure you that we are getting good reception from most of the customers we are meeting in that space. And we have indeed, in the last quarter, got our 1 or 2 very clear wins in that space.
Got it. And what's your capex focus going to be like going forward? Is it going to be a little digital heavy, or what's the sense like there?
So our capex always has been in the range of about 3 to 5% of our revenues, actually. So I think that's something which you will see. That was the case for FY25. it will be the case for FY26 as we go forward. And as you rightly said, our capex is deployed in different areas. It's about capacity expansion, it's about new products, and it's about digital preparedness for making sure that we are contemporary in that space. We will continue to deploy capex in all the three areas, what is necessary. And as we go forward, you will continue to see the progress which we make in all of these.
All right, and one last question, Sudhanshu, before I let you go. How does FY26 stack up according to you? What's the top line growth? What's the margin guidance and the bottom line growth?
So, Sakshi, as you know, we never give any specific guidance, but something which we've always maintained. So, I think FY26, we would like to deliver profitable double-digit underlying volume growth. So, double-digit underlying volume growth with EBITDA, which we've given a long-term corridor for EBITDA between 20 to 24%. We stay steadfast on that guidance on EBITDA, the corridor of 20 to 24%.
Okay, all right. Thank you so much for that, Sudhanshu, and thank you so much for answering all those questions so candidly and taking up the time.
Thank you. Thank you. Always a pleasure. Thank you.
India has fought back against attempts and infiltration attempts in Jammu and Kashmir's Sambha district. 7 Pakistan-backed terrorists were killed by Indian forces. This infiltration attempt was supported by fire from Pakistani Rangers, but the BSF neutralized the infiltration bid. As we are talking about all of the events over the last 24 hours, we're joined now by General Bikram Singh, former Chief of Army Staff, to give us perspective on the scale of the battle going on. General Bikram Singh, pleasure to speak with you, and thank you so much for your time here on NDTV Profit.
Thank you, Tamanna. Right, we've seen the rise in violence in the last 36 to 48 hours, and we have given a fitting response to what Pakistan has been doing. And as for the policy that has been stated by the government, that we do not intend escalating, but then it's at the behest of Pakistan's response, the way they've been reacting to our operations, which we carried out against the terrorist camps. They have opened up the entire front, I would say. They have taken on a large number of targets of ours, our vulnerable areas, our vulnerable points. This is a military parlance that we use to sensitive locations and sensitive areas. And it is not only along the line of control, they have come into the area of international border. You've seen the various challenges, including your channel has been covering various areas that have been targeted last night by the enemy, using their aerial means, both missiles and their drones. They have been using long-range artillery in places along the national highway, which joins the Pathankot and Jammu region, areas of Kannur and other areas along the line of control. The operations along the line of control have also gone up. They've intensified. The fire assaults have intensified, which are being, I would say, being given a appropriate response by our troops. We have demolished one of their posts. As you brought out yourself, we have countered an infiltration bid by the Pakistani terrorists. So these activities are on. We are totally geared up as of now. This is what at the moment is the situation as of now on the tactical and the operational front. But when you talk of strategic front, let me bring out that our forces are definitely at the moment poised for any escalation that may take place, which is bound to take place, let's be very clear. Because we at the moment do not know what exactly is the military objective of the Pakistani chief. But which I had brought out earlier on NDTV the other day, that escalation was bound to occur. It has occurred. It will continue. But I suppose at some stage we'll have to define our threshold of tolerance, because this cannot go on in an open-ended manner. That they hit us, we hit them. I think a bit of paradigm shift to our present stated policy and our stance of being more defensive and trying to only counter what they are doing. I think we'll have to get onto a more proactive mode, define our threshold of tolerance, that beyond this, we are going to hammer you hard. I think that is what is required. And so far, I think this is the situation. We are well poised to take on any escalation.
But the escalation has already taken place, isn't it? Just for context, General Bikram Singh, in the last several years, is this the highest level of conflict we've seen between the two sides?
Absolutely, Tamanna. In fact, when I said, higher escalation, it is in terms of the employment of the ground forces. That's the ultimate resort a nation resorts to. But otherwise, you would have seen the wars which have taken place in West Asia, other places, Central Asian Republic. You would have seen people have the countries have used these standoffish weapons, aerial weapons, these aerial platforms like the drones, the missiles, hovering munitions. These are the kind of munitions that have been used. And this is what Pakistan has done. We have capability of this, in fact, to a larger extent. But so when I say, the rise in escalation, that is basically on account of the fact that still ground forces have not come in. Our combat power has not been utilized. But yes, you are right. Hitherto, this is the highest levels which we have seen so far. Because let's be very clear. In the past, if you see our earlier wars with Pakistan, 65, 71, they went in for airfields only as part of their conventional, well-planned offensives. And that's what we call, it's called seizing initiative phase of the war. So decisive operations, when I'm talking about, are the ones wherein ground forces get involved. So decisive operations would be an upgradation of the escalatory ladder. So that is what I was referring to. But yes, you're right. This hitherto is the highest form of violence that we have seen. And I suppose it is likely to continue. And perhaps we'll have to twist their arms slightly more harder to ensure they stop.
Just in terms of the scenes that unfolded all night last night, and of course, the Indian armed forces, not enough can be said at the way that the population of this country was defended. But the fact was that there was an attempt to attack cities, civilians, and military installations, and we thwarted all of them. What is this telling us about the level of preparedness of India?
Firstly, we are well prepared. Pakistani army is known for deviating from the Geneva Conventions. They are not supposed to be targeting. We have ensured scrupulously that we do not target any civilian, population centers or any facilities, civilian facilities. But yes, we targeted where the terrorists were holed up in Pakistan, where their headquarters were there, where their training camps were there. But what they are doing is they are actually mercilessly, I would say, going ahead, devoid of any respect to the Geneva Conventions, taking on the civilian targets. But you would have seen our response has been absolutely well coordinated. All states are geared up. All states which are adjoining the border along the IB, including J&K along the LC, they all geared up. The measures have been taken. State government machinery is activated. Home guards are activated. There is synergy at the moment, right from a home guard personnel to police to CRPF, BSF, other paramilitary forces and the military. So the synergy is very much there. We are well poised. So there's nothing to worry as such.
It's also showing the prowess of the S-400 system. Now, these are terms average viewers, civilians are all now learning, understanding what it does. This anti-missile defense system now becomes core to whatever happens next, isn't it?
Exactly. Because as I said earlier, the paradigm shift in war fighting today that has taken place is the excessive use of the drones and aerial weapon systems. So we have seen our system as S-400 system, which we acquired from Russia at a cost of $5 billion US. I think it has given us dividends, has given us, I would say, bang for the buck that we had spent in acquiring this. At that point of time, a lot of eyebrows were raised why so much is being spent. But I think we got bang for the buck that we had spent.
Just want to understand, General Bikram Singh, from here on what happens or what could happen in this kind of warfare. First of all, we are clearly at war against terrorists and a nation state that is attacking us. How does the escalation take place on one end, and what are the opportunities of an off-ramp? Because both attempts will be made.
You see, as I said earlier, and it's been stated by the Prime Minister, Defense Minister, our Foreign Minister, our External Affairs Minister, Secretary, he's also mentioned that we do not intend escalating. Ours is we are basically reacting to what Pakistan is doing. So escalation is going to be essentially from the Pakistani side. Should they go beyond what they are doing now, they will be hammered nice and hard. Let me tell you this. And as I see the shape of things to come, while this option is there, let me tell you over here, Tamanna, that I feel the way Pakistan is going about it, apparently they have got external support. They have got their missiles and other drones and all from other countries. They do have a support. Otherwise, without this will, which perhaps which they didn't have earlier, because they don't have the combat power with them. Their war fighting endurance is just for about 4 days. Now that has to be enhanced by external agencies and external resources, international players. And we do know that, yes, China has been supporting them. Turkey has been supporting them. We have Bangladesh, which is not very favorably inclined. US has taken hands off, typical of its own stance of being non-committal to such events. But we have to stand by ourselves. We have the wherewithal, but then we have to go by what we have to adapt our strategy, our vote fighting strategy, our national strategy to counter Pakistan, given what it does, what it acquires, what it does, its statements, information warfare. Yes, this brings me to the information warfare, which is a very important, a line of operation of such a campaign. And you would have seen in the last 36, 48 hours, they've been resorting to baseless, malicious, rumors being spread on the social media, which I'm glad it's being countered by all the TV channels. It's being countered by our wise people, leadership at all levels, by the state governments. Yeah, and I would say very clear instructions have gone out by the government. People are following those. The greatest thing is that the country is united today. All parties are united, and I think that's the strength of our country.
You talked about unconventional warfare in terms of social media. The kind of day and age we live in, General, there is, of course, the conventional warfare or attacks, defense, and all of that's happening. But there is also psyops, right? Social media, fake news, and then the digital sphere of war. What do we need to look out for now?
You see, Tamanna, both one conventional, as I said earlier. Let's see if they further up the ante. Do they enhance the violence levels? Do they get into ground operations? We got to wait and watch. Let's see, for which we are poised. As far as the asymmetric warfare is concerned, the proxy war in J&K, we have totally geared up on the line of control in J&K, including on the IB for any infiltration. Like Samba, for example, is international border. We've foiled one of the infiltration attempts and killed their terrorists. So we have to take care of the three fronts as of now. In fact, I would say fourth. Fourth is the internal security, and in addition to the third one, which you said is information warfare, the propaganda which is going on. So information warfare, we are given out very clear instructions, and I'm sure people are going to abide by those. And as far as the internal security is concerned, beyond the IB and the LOC and J&K, we got to start looking at various lines of communications which are going to be supplying our combat power. Their security, we got to see the vulnerable areas and vulnerable points along these arteries, which are going to be supplying logistic echelons, bringing forward to the combat power of ours, which is going to be taking on Pakistan on the IB and in J&K. So this has to be ensured, and also to look at the Northeast, because I'm aware of this. I remember when I was the chief, there are a large number of sleeping cells in Nepal, in adjoining countries, Bangladesh. We've got to ensure that we keep an eye on these and are not surprised from this front as well.
It's important. We have to keep aware on the Northeast. I was talking more about also, if you can shed light on that, cyber security. We are going to have meetings this evening with the finance minister talking to banks on how to ensure that our cybersecurity frameworks are in place. Stock exchanges have put out this information that they are watching very, very closely for any kind of activity, because this is India's clear advantage, apart from our military advantage, right? A stable economy, a flourishing economy, and a flourishing financial sector. We have to guard against vulnerability here as well.
Absolutely. Cyber attacks are going to start off. They must have already started. And let me tell you, they would employ, countries like China, definitely to help them out. And the only thing, Tamanna, is that we again are geared up in this account, because any breach of cybersecurity occurs on 3 accounts: technology, people, and processes. 80% of the faults are by the people not following the processes. And as long as we continue to sort of sensitize our population, what they need to do, as long as we continue to sensitize the leadership of various important installations, both which are military in nature and also civilian, I think we'll be doing good. People should know in schools and colleges, the word has to spread in terms of the processes to be followed, training of people in this regard, to make sure. And technology, of course, we got state-of-the-art technology to deal with at the helm of affairs. There's cyber attacks.
General Bikram Singh, we are all lauding our forces, we're supporting our forces, and of course ever grateful. But as citizens, what can we do? There have been some mock drills, etc. But mentally, how does one prepare yourself? What is the kind of protocol that citizens should follow?
I think one, of course, is they got to fulfill their obligations towards the nation in terms of ensuring that whatever the government says is done. We got to refrain from rumors. We need to check before we send any message across. I think there's no need to at the moment, if you ask me frankly. The next is that whenever the military echelons are passing through their areas of, wherever they are located, any state for that matter, from the hinterland, when they're moving towards the borders, to keep mum on that, not take pictures and put them on social media. We have to refrain from that. And I think most important thing is that to do everything that will boost the morale of a soldier who's fighting on the front. That is most important, boost the morale of a soldier. Perhaps once the convoy is moving through a built-up area, perhaps a salute, a Jai Hind, shake hand with the soldiers, passing on, some, I would say greetings to them, is something which would boost their morale. And as long as the nation is with them, let me tell you, the greatest morale booster is the population, which can give the right kind of tone, right kind of message to the soldiers that are fighting on the front. They need that, and I'm sure the country is doing it. It is doing it beautifully. And salute to the people of our great country.
Undoubtedly, we're all sitting here because our armed forces are out there protecting us. Just in terms of is there, people who are watching this are wondering, is there going to be an escalation? Is it unlikely that there's an escalation? If there is a siren in my city, in my area, what do I do? What is your advice for them?
The moment siren goes off, firstly, stay at home. The instructions have been given out by all state governments. Stay at home to the extent possible. The moment if you are traveling, stop at some place, get into a place where you can take a bit of shelter. Thereafter, when the siren is sounded, ensure lights go off. In fact, that is being done centrally. But as good responsible citizens, we should not light up any of our houses anywhere. Not use torches, not use any lamps. Try and avoid that. Have a very, very clear blackout, because what happens to most of these loitering munitions which are there, they have the ability to home onto certain light and certain other features. So we should avoid that and go by the instructions that have been given out by the central government through the state governments, and they're being at the moment disseminated. And I think people have already started following those. But nothing to worry. I think the most important thing is be positive, be rest assured. You got very strong, political leadership, very strong military leadership, very competent military leadership. You got very strong military, which can give a bloody nose to any enemy of ours.
Absolutely, have faith. We are well protected. Thank you so much, General Bikram Singh, for speaking with us. General Bikram Singh is, of course, former Chief of Army Staff, a measured, very knowledgeable voice to, throw light on what is going on in the right perspective right now. Thank you for speaking with us. We'll take a very short break, but we'll be right back with all the latest coverage. Stay tuned.
That's huge. That is a biggie. It's out of there.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
इजी मेंटेनेंस है।
आपको मालूम है इसका फेस वॉश का खर्चा डबल है। तो देख मेरी आंखों के नीचे देखो, पहली बार तेरे को डार्क सर्कल है। एक मरे हुए मुर्गे में अगर जान डाल सकते हैं ना तो लिशियस बने।
Friendship came first or the idea came first?
Abhay, he was my friend. We also had.
Was.
Okay, this time. Actually, he landed in my office with this whole meat idea.
Actually, इसने बताया नहीं, मैंने शराब पी के इसको बोला था कि ये करना है।
So you have the conversation in his office. He doesn't take it too seriously.
इसको मैंने बुलाया, घर आजा भाई। दोपहर को आया अपने महंगे वीसी वाले कपड़े पहन के। दरवाजे पे घंटी बजी, वो भैया ने इसको सोन पापड़ी के डब्बे में मटन पकड़ा दिया। इसके महंगे कपड़ों पे थोड़ा वो छलक गया। तो
Was it tough initially to get people to buy into the story?
I come from actually a Baniya vegetarian family, and my parents, my dad said, मैं मतलब लोगों को क्या बोलूँगा?
The best thing is if a friendship survives a business pitch. I think that should be a true test of friendship.
हमने एक दूसरे को ये लिख के वादा किया था,
अगर बीवियां भी लड़ लें तो हम झगड़ा नहीं कर सकते,
मर जाएंगे पटनी घाटे।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
India-Pakistan tension casts a shadow over the market. The Sensex and Nifty are down by 1%, while the Nifty defense, however, remains the top sectoral gainer, while on the flip side, the real estate index lags.
Bharat Forge buzzing in trade despite a mixed fourth quarter. CMD Baba Kalyani's comments to a media house that his team has been called to meet the Prime Minister next week helps confidence in one of the country's largest defense manufacturers.
Jewelry maker Titan surges 3% after posting a 13% growth in its profit and the revenue number.
Strong fourth quarter story for L&T. Revenue and margins meet estimates as international orders provide a boost. Stock buzzing more than 4% in trade today.
Undercover fire by Pakistan Rangers, terrorists attempted to infiltrate the Samba district in Kashmir, but India's border security forces neutralized the infiltration attempt and created extensive damages to the Pakistani post.
Hello and welcome. You're watching Profit Buzzers. I'm Anashri Wakharia and with me is Somit Sarkar. Now, let's talk about how the markets are doing currently. Now, we've seen a lot of volatility in the markets considering the escalation in the India-Pakistan tensions that we are looking at. Nifty 50, let's talk about the benchmark indices first. Seeing cuts of around 1% in trade today. It's been around those levels since the last 1 hour or so. Let's pull out the point contribution table to see how the Nifty 50 is doing. L&T, Tata Motors, top buzzers in trade today. Now, L&T is buzzing on the back of its fourth quarter results. Tata Motors, another day, the stock is buzzing after the India-UK FTA agreement that we have seen. But something like Titan is also in focus. This is after its fourth quarter numbers. However, on the flip side, we are seeing HDFC Bank, ICICI Bank, Reliance Industries under pressure. Let's also pull out the Nifty Bank to see how that is faring in trade today. If you are looking at Nifty Bank currently, we can see that seeing cuts of around 1.28% in trade today. Let's talk about the sectoral action in trade today, and if we talk about the Nifty sectoral indices, what we are seeing as the top emerging over here is something like Nifty Defense seeing gains of around 2.4% today. Nifty PSU banks also seeing gains of around 1.3%. But let's pull out the Nifty Defense to get what's happening here. We're seeing a lot of defense stocks in focus on the escalation that we're looking at in the India-Pakistan side. Again, a lot of this is to be in the sentimental moves that we are looking at. Paris Defense, Astra Microwave, Zentex seeing gains of around 5% in trade today. While on the losing side, if we see in the Nifty sectoral indices, the Nifty auto is under pressure. But that is what we are seeing in terms of where the sectors are concerned. If you pull out the broader market indices, the Nifty mid cap and Nifty small cap 250, we are seeing Nifty mid cap seeing cuts of around 0.5%, while on small cap 250, we are seeing cuts of more than 1.2%. So Samit, that's where all the action is taking place in the benchmark and the broader market indices.
Well, thank you, Anishi, for that. Well, moving on to an exclusive. The boards of Yes Bank and SBI will be meeting today amidst the fact that there were reports which suggested that Sumitomo Mitsui Banking Corporation is likely to buy a minority stake in Yes Bank. Let's get in Vishwanath with more details on the same.
Well, as developments are happening at this point in time around the Yes Bank transaction, essentially the Executive Committee of State Bank of India's board as well as Yes Bank's board separately, these two units are going to meet and are likely to discuss this offer from Sumitomo Mitsui Banking Corporation. We don't know if there is going to be any finality in these discussions. Of course, these are still matters of progress. Of course, if SMBC were to buy anywhere more than 5% stake in Yes Bank, then they would require a special clearance from the RBI. And if that stake goes above 10%, then they would require a full fit and proper check from the Reserve Bank of India before they can actually buy a stake in Yes Bank. But as of now, these discussions are ongoing. It is likely that SMBC might end up buying just about between 20 and 24% stake in Yes Bank. State Bank of India owns 24% stake in Yes Bank, has been looking to offload that stake for some time now. Remember back in March of 2020, when Yes Bank was going through a severe financial trouble, State Bank of India and 9 other lenders actually came together to invest about 10,000 crore in Yes Bank. At that point in time, these banks were afforded stake, and State Bank of India is the largest in that unit of banks. It currently holds about 24%, and this stake sale to SMBC is a way for SBI to monetize that stake.
Right. On these media reports, in fact, IFL has come out with this note for its clients where they're saying that assuming the sale happens at around 20 to 22 rupees per share for SBI's entire 24% stake, it can result into a potential post-tax benefit of close to 5,500 to 6,500 crore rupees, which is nearly 9 to 10% of its FY26 estimated PAT. Also, its CET1 could increase by around 15 basis points from the current ratio of around 11%. That's what IFL view is on this potential deal that could go through. Let's also welcome in our guest Akshay P. Bhagwat, Senior VP from JM Financial, and Dharmesh Kant, Head Equity Research, Chola Securities. Dharmesh, coming to you firstly on this news reports which are suggesting that SBI might sell its entire stake in Yes Bank. How are you looking at both the stocks? Anything on the? How are you looking at both these counters?
Yeah, Gautam. See, as far as Yes Bank is concerned, it's a positive news. I mean, say a higher stake sale at a price will be, positive for the company. But at the same time, if you look at the other parameters, it changes nothing. Just as change in the shareholding of pattern and the exchange of shares between two companies. And Sumitomo has a very good, track record on history. So was SBI. So even there, I don't find any cutting edge, difference out there. The only fact that Yes Bank has been delivered good numbers this fiscal year and in Q4 is a good, factor for it. At the same time, the valuations, if you compare it with other private sector players, it's a bit suppressed. I mean, 1.5 to 1.7 times is what a good private sector player its size commands the valuation multiple. It's at 1.2, 1.3 times price to book value multiple. So to my mind, the report which you were reading about IFL, 21, 22 should be the ideal price for this transaction, and that should be the upside gain. So traders who are looking for such, trading opportunity, it's a good buy for them.
Right. Akshay, coming to you on this news report, we have seen a sharp up move in both the share prices of SBI and Yes Bank post these reports. Are you seeing more upside on technical front?
Yeah, so first of all, good afternoon. So to comment on State Bank, State Bank on the technical charts had noted a break of an inverse head and shoulder bullish pattern. This we saw a few trading sessions back at the levels of 760, 770 zone. Now with the results done few days back in State Bank, you have a retest of those levels because the reaction post the results have been a bit muted. So I believe this is a good opportunity from a risk reward payoff because the broader technical setup of this pattern, which I mentioned, is still on. So 740, 750 is a good support zone, and looking at the chart pattern, there is a good probability State Bank may try to retest the levels of 820 on the upside. Yes Bank, on the other hand, has seen a strong reaction to the news mentioned. Volumes have been pretty significant, so it's more of a reaction to the news, but technically it's a good bottom in the making around the levels of 17 odd support, and possibly the up move from a trading perspective can see this bank moving for levels of 21 to 21.5.
Okay, well, so that's the story that we are seeing for Yes Bank. The stock currently up over 7% in trade today. But the next stock in focus is something like a Larsen & Toubro, which is buzzing on the back of its results. Now, what we've seen, strong up moves in trade today, 4% up. Now, key takeaways if we see of this result, if you look at the Q4 numbers, revenue was up around 11%. Margins are about 24 basis points of an improvement, and net profit was up around 25%. But do note that this also included an exceptional item of around 475 crore, which supported this net profit growth that we are seeing. But all in all, revenue margins in line, net profit did beat estimates. If we look at the Q4 order inflows, higher inflows led by a low base effect as well as higher international orders also, while if we look at the domestic ordering, that was more on the muted side. Now the company with this has met its FY25 growth guidance of 15% for FY25. Along with that, it has surpassed its order inflow guidance of 10% by recording at 18% of a jump in its order inflows. And for next year, for if we look at the outlook ahead, they have raised the order prospect pipeline to 19 lakh crore, representing a 60% jump, which includes a domestic pipeline of 7 lakh crore and international pipeline of 12 lakh crore, with which now they expect the revenues to see about a 15% of growth in FY26, and core margins will see an expansion to 8.5% versus the 8.25% that we saw last year. So all in all, it's been a strong quarter for L&T. Along with that, on the high base also, we are seeing a strong FY26 commentary. So Dharmesh, first of all, let me come to you. What is your view on this counter? What's your view on L&T?
See, everything, all the boxes are being ticked by L&T when they reported their numbers, and at the same time, the stock price has seen a significant correction from the all-time high. So there's a benefit of valuation comfort as well. The only caveat which I see in the L&T order book trajectory is that overseas order wins have been quite large. So in the quarter gone by, 70% of the order book was from the overseas, and overall for the year itself, it was 58%. So this opens up the window for the currency kind of volatility in the earnings of L&T, and that is one caveat out there. Otherwise, most of their order wins has been from the Middle East and the surrounding areas, which is already troubled by many war factors. So, it's falling in line with the kind of order wins L&T is winning. In the present context, what we are seeing on the border escalation, Indo-Pak side, again, L&T is also a major defense player. It's a conglomerate. It's not just only a construction company. It is also into defense, IT, and other services. So, net, I do think in this environment, if you get any opportunity of a dip, buy it. We do see a consistent growth rate of around, say, 12 to 15% on an annualized basis on the stock price of L&T. Though its profitability will grow at around, say, 12 to 13%. There, I think the margins going forward won't be that great. There can be a decline of 50 basis points on the EBITDA margin front.
Right. Moving on, Titan is another stock that remains in focus. The company's EBITDA margin came in much ahead than what the street was estimating. What led to this better EBITDA margins? Let's get in Mahima with more details on the same.
Right. So, as you rightly mentioned, EBITDA margins were a beat in terms of what the street was expecting, and this was on the back of a one-off, that was gold hedging, which act as a positive for the overall jewelry margins. Numbers were slightly ahead of estimates in terms of earnings. Subdued overall growth in terms of studded mix, but buyer growth was seen in gold as well as gold coins as well as gold chains. In terms of the numbers, revenue is up 19%, EBITDA up 29%, margins stood at 10.3 overall in terms of consolidated terms, and net profit was up 13%. Key concerns were that PAT was overall impacted by higher finance cost, tax as well as lower other income. Studded mix continues to overall decline. High gold prices continue to weigh on overall consumer demand as well. In terms of segmental performance, jewelry grew 25%, watches and wearables grew 20%. Eye care is where we again saw a bounce back in terms of a double-digit growth of 15%. Emerging business saw a slight growth of 5%, and Titan Company overall. Titan Company Limited standalone growth stood at around 24%. In terms of key con call highlights, the management has said that they will open around 40 to 50 odd stores this particular FY26, and overall expand or restructure 50 to 60 odd existing stores. In terms of the overall expectation in terms of revenue growth, that could be anywhere between 15 to 20 odd percent. EBIT margins to stay between the range of 11 to 11.5 odd percent for jewelry business. That guidance has been maintained, not changed so far. And gold metal loan rates have started to settle lower, now only 70 to 80 basis points overall away from its high. And in terms of the lab grown diamond, management did come out and say that the wholesale and retail price for lab grown continue to fall. They haven't seen any meaningful inquiry for lab grown diamonds, but one commentary that came in interesting was that now they've started selling diamonds which are low carat diamonds, which could probably be an impact of lab grown diamond giving them competition. So this is the overall view as to how Titan has panned out in terms of Q4 earnings.
Right. Thank you, Mahima, for that. Akshay, coming to you on Titan, after seeing a consolidation for last 15-20 days, today's move, it has comfortably moved above the 200 DMA. Do you see more of an upside from current levels for Titan?
Well, absolutely, yes. The reaction is very strong and positive to the results. And if you were to look at the monthly price structure of Titan, the longer term trend is very positive. It's just that from the year 2024, the stock has been in a time correction where you see the prices confined in a trading range. 3,000 and 3,800 is broadly the range we talk of from a longer term perspective. But the positive part is 3,000 is the level where time and again you see strong buying intent in the stock. So right now we are dealing with a minor resistance of 3,600, which is more for short term traders. But the way that technically the stock is set up, the chances are the stock is heading for levels of 3,800 that may be achieved in a time frame of maybe a couple of months, and still a new high awaits the stock as we go ahead. So a positive view I will maintain on Titan.
Okay, so overall a positive view that we are looking for Titan in terms of where the technicals is concerned. But let's also look at Kalyan Jewellers, which has met street expectations. The company has also recorded robust growth in the same store sales. Mahima, take us through these numbers as well.
Right, so Kalyan Jewellers, as rightly mentioned, numbers were largely in line in terms of what the street was expecting, and the growth has largely come in from two things. First, the overall gold price, of course, going up because almost 90% of Kalyan's sales is just gold and not studded jewelry. Same-store sales growth, of course, was a robust performance in terms of this quarter. In terms of South, the same-store sales growth was at 20% and non-South was at 22%. In terms of the overall numbers, revenue saw a growth of 36%, EBITDA saw a growth of 35%. Margins at 6.4%, slightly better than what the street was expecting, and net profit was up 36%. In terms of the overall performance, the gold revenue itself was up by 33%. Studded mix was up 48%, but studded mix for Kalyan Jewellers is hardly 10% of the total revenue. Of course, we'll have to wait and watch as to how this particular segment has panned out this quarter. We'll have to wait and watch out for the commentary from management. And overall geography-wise performance, even international business has done very well for the company. India revenue saw a growth of 38%. West Asia saw a growth of 26%. Middle East saw a growth of 26% and even the jewelry platform, that is Candor, has recorded a revenue of 28 crores and their losses have narrowed this particular quarter. So overall a good set of numbers for Kalyan Jewellers as well.
Well, thank you, Mahima, for breaking those numbers down for us. Naresh, let me come to you for something like a Kalyan Jewellers. What's your view on this stock?
See, we do not cover Kalyan Jewellers for the obvious reason. There has been many news flow surrounding it, and the clarification of management has also been there. But jewelry as a space, I think where you have to be very stock specific and selective, because if you look at, say, a Titan or a Kalyan Jewellers, the valuation multiples are way too high. So for an ROE of 15 or 16% and a 12-13% kind of a PAT growth, you are paying a price to earnings multiple of 75 to 90 times 1 year forward. That is how they are being placed. In the same space, I think going by this segment that jewelry's business is likely to grow and more unorganized to organized movement will happen in the years to come. Senco Gold looks to me very attractive on the valuation parameters and the growth trajectory as well. The only thing people may argue is it's more of a localized play as far as geography is concerned and not a national play. But going forward, I think things will, who knows, management have an aspiration for that as well. So pure valuation wise, to my mind, if I have to buy in this market, I would be buying Senco Gold.
Right, Bharat Forge is another stock that remains in focus. It reported its numbers yesterday during market when the stock slipped 2.5%. But what led to this 5% upsurge in the share prices today? Let's get in Puneet with more details on the same.
Well, thank you for that. It's definitely a defense pack and the defense business of the company that's, helping the share price and its momentum today. Yesterday, the company did mention that the order win momentum has remained steady in this particular quarter. They've actually had 3,700 crores of order wins, essentially for the artillery gun segment. And this takes the total order book to 9,400 crores now, with roughly 60 to 70% of the book going from defense. And that will be the near-term boost for the company. Essentially, that is one of the only positive factors, because the long-term factors for the company are not so positive. And essentially, that's been highlighted by brokerages as well. MK, they have a target price of 1,200 rupees per share. They mentioned that, the management said that the passenger vehicle business growth will be in line with industry, which is a negative because it was outperforming the industry growth over the last few years. So that's one thing. The other aspect is they've not given any kind of guidance for FY26 as well. That's another key negative, because they've always given a steady picture for the company in terms of growth in both US as well as the European markets. And that is, of course, led by the tariff-led global uncertainty. MK has actually cut the EPS target by at least 8% in FY26. And they mentioned that while the valuation provides some comfort after the correction, they will need some positives for the long-term outlook. The other aspect is from Nuvama. They've retained a whole target price of 1,230 rupees per share, and they mentioned that they are expecting auto exports to decline again this particular year and just grow at a CAGR, actually a fall of CAGR 1% over the next 3 years until FY27. And finally, in Kotak actually has the lowest target price, 900 rupees per share, and they've said that the near term remains some buoyance from the defense segment, but the overall business will remain muted, and they are expecting expect low teens EBITDA cut for the consolidated business going forward as well. So while the defense business and the new order they've got for artillery guns, which is ATAGS, is a positive, and that's boosting the stock, the long-term outlook remains slightly uncertain for Bharat Forge.
Right, Puneet. Also, do help us with Tata Motors, the US UK FTA which has been signed. I guess another booster coming in for the company.
Well, definitely, and that's what's been highlighted by a lot of brokerages today as well. We've seen one come in from Morgan Stanley today. They have a target price of over 800 rupees per share. And the key thing that they mentioned is the UK-US trade deal is a partial benefit for the company. The key aspect is that US will now allow roughly 1 lakh vehicles to be imported inside the US from UK, and that will be at a lower tariff of just 10%. And this will be a big benefit for someone like a Jaguar Land Rover, because they sold roughly about 1,08,000 odd vehicles in the US last year, and that's roughly 25% of the volume. So that will be at a lower tariff of 10% versus 25% earlier envisaged, and hence a key positive. Morgan Stanley has also mentioned that the relief for JLR, as most of its peers already have a US facility, so it was a big negative on tariffs for JLR specifically. That goes away. They've also mentioned that the US growth was able to offset any kind of weakness that was seen in the China market, and hence the FTA will be another key positive for Tata Motors. They've also said that the Range Rover lineup until the new electric vehicles come in by the end of the year for Jaguar model will be another key positive, at least for the near term over the next 2 to 3 quarters, because that's the high margin business as well. So overall, at a time where there was uncertainty with the tariffs specifically in the US, we've seen one big positive news come out from the US for UK FTA, We're also expecting the results coming on May 13th. So some more clarity on this will be something to watch out for.
Right, Dharmesh, coming to you firstly on Tata Motors. Yesterday there was the announcement of India-UK FTA and then there was the announcement of US-UK FTA. A couple of these announcements seems to be quite positive for Tata Motors. How are you looking at these announcements that have come in, major overhang going away for the stock?
A part of the major overhang, yes, it has gone away for the stock. And if you look at this in the context of the valuation correction which has happened, so it becomes it has become a very attractive value buy at current levels. So to my understanding, I think this 1 lakh quota is for the entire cars which are imported from UK to US. So Tata Motors will definitely have a share of some pie. How it is being allocated and who delivers first inventory, all those things has to go into the play. It's not specifically for Tata Motor that limit. So that is one area which one has to look into a bit carefully while assessing the amount of benefit which can come through to Tata Motors. But having said that, Tata Motors US geography was doing pretty well, along with China and UK. China had some problem of late, but again, China is a growing economy. Their GDP grew by 5.4% last quarter, so I think things are likely to pick up. Interest rate down cycle is there everywhere, so that also helps them. At this point, our SOTP based valuation post demerger of both the businesses, that is the PV and the CV, is around on the current console Tata Motors is around 1100 rupees from a year's perspective. So to us, we have been recommending our clients to buy it, and looks to be a very good value buy from a year's perspective.
Right. Thank you, Dharmesh, and thank you, Akshit, for joining. For joining and sharing your perspective on this various stocks that we have discussed. But moving on to the biggest story today, as Pakistan continues unprovoked attacks on India, the stock exchanges are monitoring cyber threats. Charu Singh joins in with exclusive details on this.
Hi, so let's look at the stories in three parts. Firstly, the major exchanges in India, that is the Bombay Stock Exchange and the National Stock Exchange, have come out with advisories for their trading members. But what we have exclusively found out is that they are among themselves, and their senior officials are also on the vigil 24/7, and they are looking if there is any cyber threat in the environment. Apart from that, one of the depositories has also released an advisory for its depository participants only, which is not in public domain, and they have mentioned that they also need to fix any gaps that are there and have to be very vigilant against any sort of misinformation and cyber threats. Apart from this, on the market regulator SEBI side, some sources have told us that most of the work has to be done from the exchanges side, and any vigilance that requires needs to be established from the exchanges side mainly. But there have been some basic level mock drills and advisories on misinformation and cyber threats given to them. Apart from this, NDTV Profit also previously reported that the access of foreign individuals towards the exchange websites has been restricted amid the geopolitical tensions that are rising up. So let's see how it further escalates.
Well, with that, it's a wrap on this edition of Profit Buzzers. Stay tuned and keep watching NDTV Profit.
इजी मेंटेनेंस है।
आपको मालूम है इसका फेस वॉश का खर्चा डबल है। तो देख मेरी आंखों के नीचे पहली बार तेरे को डार्क सर्कल हो गए। एक मरे हुए मुर्गे में अगर जान डाल सकते हैं ना तो डिलिशियस बने।
Friendship came first or the idea came first?
Abhay, you know, he was my friend. We also had.
Was.
Okay, this time. Actually, he landed in my office with this whole meat idea.
एक्चुअली इसने बताया नहीं, मैंने शराब पी के इसको बोला था कि ये करना है।
So you have the conversation in his office. He doesn't take it too seriously.
इसको मैंने बुलाया, घर आजा भाई। दोपहर को आया अपने महंगे वीसी वाले कपड़े पहन के। दरवाजे पे घंटी बजी, वो भैया ने इसको सोन पापड़ी के डब्बे में मटन पकड़ा दिया। इसके महंगे कपड़ों पे थोड़ा वो छलक गया। तो
Was it tough initially to get people to buy into the story?
You know, I come from actually a Baniya vegetarian family, and my parents, my dad said, मैं मतलब लोगों को क्या बोलूँगा?
The best thing is if a friendship survives a business pitch, I think that should be a true test of friendship.
हमने एक दूसरे को ये लिख के वादा किया था,
अगर बीवियाँ भी लड़ लें तो हम झगड़ा नहीं कर सकते।
मर जाएंगे पटनी घाटे।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
इजी मेंटेनेंस है।
आपको मालूम है इसका फेस वॉश का खर्चा डबल है। तो देख मेरी आंखों के नीचे पहली बार तेरे को डार्क सर्कल है। एक मरे हुए मुर्गे में अगर जान डाल सकते हैं ना तो लिशियस बने।
Friendship came first or the idea came first?
Abhay, you know, he was my friend. We also had.
Was.
Okay, this time. Actually, he landed in my office with this whole meat idea.
एक्चुअली इसने बताया नहीं, मैंने शराब पी के इसको बोला था कि ये करना है।
So you have the conversation in his office. He doesn't take it too seriously.
इसको मैंने बुलाया घर आजा भाई, दोपहर को आया अपने महंगे वीसी वाले कपड़े पहन के। दरवाजे पे घंटी बजी, वो भैया ने इसको सोन पापड़ी के डब्बे में मटन पकड़ा दिया। इसके महंगे कपड़ों पे थोड़ा वो छलक गया। तो
Was it tough initially to get people to buy into the story?
You know, I come from actually a Baniya vegetarian family, and my parents, my dad said, "मैं
Hello and welcome to NDTV Profit. You're watching Top Trades and I'm your host Nika Bare. Up first, let's just take a quick look at how markets are faring right now. Well, there is a bearish sentiment in today's markets. You have the Nifty 50 under pressure, down about 1.3% in trade right now. If you look at some of the counters and the advanced decline ratio in the market as well as on the benchmark, you have the 41 stocks on the Nifty 50 declining versus 9 stocks advancing. Some of the top losers of the day in terms of point contribution of something like an ICICI Bank, HDFC Bank and RIL that's dragging down. All of these stocks are down 2 to 3% in trade, with ICICI Bank being the top loser on the benchmark, seeing cuts of 3%. However, you do have 9 stocks that are bucking up the trend. You have L&T, the top gainer on the Nifty 50. It's up 3.4% in trade as well, followed by Titan and Tata Motors. All of these stocks are holding their ground and having strength of over 3%. If you look at the broader markets, the Nifty mid cap 150 is relatively doing better, down about 0.7%. However, the Nifty small cap 250 is seeing the largest quantum of cuts today, down about 1.5%. If you just had to look some of the mid cap counters, which is the relative outperformer of the day, you have certain stocks, 31, 32 to be precise, that are gaining. Yes Bank being on top of that list, up about 7%. We'll talk about why in just some time. You also have a host of defense counters, Bharat Dynamics, Bharat Forge, Mazagon Docs. All of these counters up 3 to 5% in trade today. And it's key to note that the Nifty defense is an index that has been up 9% year to date. You also have continuous strength in KPR Mill. This is a stock that has seen 3 straight days of gains coming after the India-UK FTA was finalized. Lastly, if you just look at the sectoral trends, you have all the sectors except the PSU banking sector that is in the green, that's up over 1%. Some of the losing sectors, on the other hand, you have Nifty Realty, Nifty Finance, and Nifty Bank. Nifty Realty being the top sectoral loser of the day with 10 out of 11 constituents in the red. Raymond, Macrotech and DLF are your top 3 losers on the counter. But moving on, you did have AMFI data for April that came out today, which revealed that net inflows into India equity mutual funds declined for the 4th consecutive month due to market volatility caused by concerns over potential US tariffs. Despite this, equity mutual funds have recorded positive inflows for the 50th month in a row, demonstrating sustained investor interest. My colleague Alex joins us with more details. Good morning, Alex. Good demand for equity ETFs in April.
Well, the story here is of a couple of important data points. And the first, of course, is the inflows through SIPs. And here we're talking about gross inflows. They've hit a fresh record high, coming at 26,632 crore rupees or thereabouts. That's higher, of course, than the previous month, but it pips the previous record that came through in December of last year, 2024, and that number stood at 26,459 crore rupees. So the good news is that fresh SIP flow is strong. The other piece of good news is that you haven't seen a big fall in the inflows on a net basis into actively managed equity mutual fund schemes as well. They have come in at about 24,269 crore rupees. But the bigger story here, in my opinion, is the flows into other ETFs as a category, and that includes most equity ETFs as well. That number stood at 19,056 crore rupees in the month of April, and it's nearly double what you saw in the month of March, and that number itself was an elevated number. So seemingly what investors are doing, and you might be doing this yourself, is that in order to have more maneuverability and precision in terms of buy and sell prices, people are buying into exchange traded funds because you get the exact price. Of course, when you invest in a mutual fund scheme, any other mutual fund scheme, you get the closing NAV or the net asset value of that particular day. And because you have intraday volatility, people are trying to get an exact price. Apart from that, a few more takeaways. I mentioned the actively managed equity mutual fund schemes that were about 24,269 crore rupees of a net inflow. That's more or less comparable with the previous month. It's not a big fall. And small cap actively managed funds have gotten inflows about 4,000 crore rupees. Mid cap have gotten about 3,300 crore rupees. Flexi cap funds at about 5,542 crore rupees. And interestingly, gold funds, gold ETFs have seen an outflow on a net basis of about 5.8 crore rupees. Once again, they saw an outflow in the month of March as well. And this should tell you that people are booking profits, considering that gold prices have moved up very substantially. Now, beyond this, I'll give you one more data point, which you should take heart from, is that new fund offers did not account for a large part of the inflows in the month of April. In fact, if anything, it was lower than the previous month. That number stood at 350 crore rupees in the month of April and compared with 4,085 crore rupees in the month of March. So all of that should tell you that the flows into the mutual fund space in the month of March or April were robust.
Well, thank you, Alex, for shedding light on how the AMFI data has been so far, especially in the month of April. But moving on, Servotech Power Systems is a stock that has been in focus. It was up actually 6% on Monday, a little bit under pressure today. But this was after the appointment of Errol Musk as the advisory board. We're speaking to the management of the company. Of course, you're joined by us as the managing director at the firm, and we welcome to the show, Mr. Welcome to the show, Mr. Raman Bhatia. Let's first talk about Errol Musk. You've appointed him on your global advisory board. What is the key role that Mr. Musk will be playing?
First of all, thank you for having me on the show. It's a pleasure to be a part of this conversation. We are happy to share that Mr. Errol Musk has officially joined Servotech as an advisor for our international expansion. His global experience and futuristic thinking will help us scale rapidly in overseas for a EV and solar market. This is a big step in our mission to make India a global hub for a green tech manufacturing.
Got it, Mr. Bhatia. And what is the company's vision in terms of its global plans and international expansion? How are the export orders shaping up for the company?
We have taken them as a advisory on board because he have a very good exposure about US market and African markets, and even he's having very good contacts in Middle East market also. So we are trying to expand in these countries because all countries now wanting to do just like in India there is a mission Make in India. They are also coming with their missions like Make in Africa, Make in UAE, Make in GCC, Make in US. So we are trying to do lot of different type of ventures and different type of combination so that we expand in more than 40 to 50 countries.
Well, that's key to note, international expansion coming up. Thank you so much for joining us, and we wish you all the best for the plans in the future. And with that, we're also joined by our guest for today, Vaibhav Vidwani, Fundamental Research Analyst at Bonanza Portfolio. Welcome to the show, Vaibhav. Is Servotech Power Systems a stock that you're looking at?
After getting this information, I'm also optimistic about this particular stock as things are getting good in this particular company, and which will support the revenue in upcoming quarters. So I'm quite optimistic about this stock.
Fair enough. And just a key note to the viewers, Errol Musk, who's currently being appointed to the Global Advisory Board, is actually Elon Musk's dad, which the company has onboarded. But moving on, the mounting tensions between India and Pakistan have led to a disruption in civilian aviation. Now, this has led to India's daily domestic air traffic declining 11% on the back of shutdown of 24 airports. The average daily domestic flights have dropped from 3,265 till the month of April to 2,907 as of May 8th, as per the data compiled by NDTV Profit. Furthermore, 670 airline routes will be affected over May 9th and May 10th. This includes 334 incoming and 336 outgoing flights across the 24 shut airports. Airports in Srinagar, Chandigarh, Amritsar, Jammu and Leh account for the most affected routes. Delays have also hit major metro airport operations. Around 4% to 31% of arrivals are delayed across Delhi, Mumbai, Bengaluru, Hyderabad, Kolkata and Chennai. And departure from these airports as well have shown higher disruption in the range of 26% to 82% of flights delayed. Vaibhav, I'll come to you, amid all of this, the global tensions that are building up, and you've seen delays in flights. Amid all of this, how do airline stocks look to you? Because a delay in flights could also lead to some kind of loss for the airline companies.
Yes. We can expect a little bit stress because in upcoming quarters because of these things. These things will impact their revenue to some extent, while their operating cost will also be increased. And the reason will be the rerouting and the manpower requirement and logistical complexity. And so these will increase their operating expenses. So overall, their revenue growth and their net profit will be marginally impacted because of these things.
Okay, the next stock that we are focusing on is a Yes Bank, which is buzzing in trade today. It's up 6.5% right now. And this is on the back of the Sumitomo Mitsui Banking Corporation, which is likely to buy a minority stake in Yes Bank. Now, the State Bank of India and Yes Bank boards are expected to meet today over this. My colleague Vishwanathan Nair has the details.
As developments are happening at this point in time around the Yes Bank transaction, essentially the Executive Committee of State Bank of India's board as well as Yes Bank's board separately, these two units are going to meet and are likely to discuss this offer from Sumitomo Mitsui Banking Corporation. We don't know if there is going to be any finality in these discussions. Of course, these are still matters of progress. Of course, if SMBC were to buy anywhere more than 5% stake in Yes Bank, then they would require a special clearance from the RBI, and if that stake goes above 10%, then they would require a full fit and proper check from the Reserve Bank of India before they can actually buy a stake in Yes Bank. But as of now, these discussions are ongoing. It is likely that SMBC might end up buying just about between 20 and 24% stake in Yes Bank. State Bank of India owns 24% stake in Yes Bank, has been looking to offload that stake for some time now. Remember back in March of 2020, when Yes Bank was going through a severe financial trouble, State Bank of India and 9 other lenders actually came together to invest about 10,000 crore in Yes Bank. At that point in time, these banks were afforded stake, and State Bank of India is the largest in that unit of banks. It currently holds about 24%, and this stake sale to SMBC is a way for SBI to monetize that stake.
Yeah, thank you, Vishwanath, for giving us those details. However, I'll come to you. Amid all of this news flow coming in, is Yes Bank that is something that is looking good or better fundamentally? I mean, we're nowhere near the highs that we saw in 2018, or even the somewhat minute, corrected but still high levels in 2019. But are the fundamentals slightly looking better for something like a Yes Bank?
We see Yes Bank deliver expected results, and the growth the management which guided is lower than the expectation. So still I will say their pace is quite not that much aggressive in terms of growth. So if management will change, and if this purchase will be done, so that thing will impact the operationality of the Yes Bank. So I think so we should be a little cautious, because how new initiative will be there, which will guide the future valuation of the Yes Bank. So we should be a little cautious. We should not be hurry about this particular stock.
Fair enough. Stay cautious on something like a Yes Bank. But we do have jewelry maker Titan, which has surged in trade today thanks to the fourth quarter results, which was slightly ahead of estimates. Margins were better due to gold hedging gains, and Mahima breaks up the numbers for us.
As you rightly mentioned, EBITDA margins were a beat in terms of what the street was expecting, and this was on the back of a one-off, that was gold hedging, which act as a positive for the overall jewelry margins. Numbers were slightly ahead of estimates in terms of earnings, subdued overall growth in terms of studded mix, but buyer growth was seen in gold as well as gold coins as well as gold chains. In terms of the numbers, revenues up 19%, EBITDA up 29%, margins stood at 10.3 overall in terms of consolidated terms, and net profit was up 13%. Key concerns were that PAT was overall impacted by higher finance cost, tax as well as lower other income. Studded mix continues to overall decline. High gold prices continue to weigh on overall consumer demand as well. In terms of segmental performance, jewelry grew 25%, watches and wearables grew 20%. Eye care is where we again saw a bounce back in terms of a double-digit growth of 15%. Emerging business saw a slight growth of 5%, and Titan Company overall. Titan Company Limited standalone growth stood at around 24%. In terms of key con call highlights, the management has said that they will open around 40 to 50 odd stores this particular FY26, and overall expand or restructure 50 to 60 odd existing stores. In terms of the overall expectation in terms of revenue growth, that could be anywhere between 15 to 20 odd percent. EBIT margins to stay between the range of 11 to 11.5 odd percent for jewelry business. That guidance has been maintained, not changed so far. And gold metal loan rates have started to settle lower, now only 70 to 80 basis points overall away from its high. And in terms of the lab grown diamond, management did come out and say that the wholesale and retail price for lab grown continue to fall. They haven't seen any meaningful inquiry for lab grown diamonds, but one commentary that came in interesting was that now they've started selling diamonds which are low carat diamonds, which could probably be an impact of lab grown diamond giving them competition. So this is the overall view as to how Titan has panned out in terms of Q4 earnings.
Thank you, Mahima, for giving us those details. Vaibhav, how does something like a Titan look to you? You've seen a good set of results in Q4. The stock is up and about. What's the medium to long term outlook for something like a Titan?
For me, I think so that in upcoming quarters we can expect maintained revenue growth in upcoming quarters because of the festive and wedding seasons. And overall they will maintain their current growth, so I'm quite optimistic about this particular stock. And in this quarter they were able to deliver a robust margins because of their operation leverage and revival of solitaire jewelry and small hedging gains. So I think so they have that ability to deliver robust numbers in upcoming quarters also. So my view is quite positive on this particular stock.
Okay, so positive view coming in for something like a Titan, but we also have pharma major Dr. Reddy's Labs, which is expected to announce its fourth quarter earnings today. Varsha brings us to what the street can expect for the counter.
Yeah, thank you for that. So yes, the company is going to announce its results post-market hours, wherein revenue is expected to rise 15.5%, while EBITDA may rise 24%, and EBITDA margin expected at 27%, and net profit may rise almost 11.3%. Now, the key highlights, what will be the key highlights behind this number? So revenue growth is expected to be driven by biosimilar pipeline and key launches in India. US is expected to grow at 3% year on year due to muted sale in one of the Revlimid products, like the cancer product, and the domestic formulation business is expected to grow 21% year on year, which will be driven by integration of their Sanofi portfolio, and EBITDA margin is expected to expand due to the better products mix that the company will be having. Key factors that one investor should watch out for is update on the potential launches when it comes to US over the next 12 to 18 months and performance of licenses and partnership formed in the recent years.
All right, Varsha, thank you so much for giving us those details. Vaibhav, I come back to you. A good quarter expected for a Dr. Reddy's, but amid the kind of global uncertainty and the tariff, potential tariff route on the pharma space, how does the Dr. Reddy fit in?
For me, there's one thing in Dr. Reddy, their Revlimid is going off patent, which will impact their margins adversely. So means I think so that in future we can expect a marginal impact on their margins. So that's why my view is quite pessimistic on this particular stock.
Got it. Vaibhav, I also want to ask you something, your view on something like a Bharat Forge. It's buzzing in trade today despite a mixed fourth quarter. And what's the long-term outlook for something like this counter?
As we know that Bharat Forge, what Bharat Forge is doing, they are exploring into the new verticals, and they are increasing their exposure in those verticals like defense, aerospace, casting. So defense will support their revenue growth in upcoming quarters, I think so, and which will support their valuation. So my view on this particular stock is quite optimistic. Their defense revenue growth will be near about 15 to 20% as per management. So I am quite optimistic about the Bharat Forge in near terms.
Okay, an optimistic view coming in for a Bharat Forge. The stock is up 4.5%, and we've also seen some relief on the FMCG front as Britannia's fourth quarter numbers did beat estimates. We have Mahima breaking down the numbers for us. Mahima, tell us why.
In terms of overall Q4 EBITDA, that was a beat on the back of lower employee cost as well. In terms of revenue, it was up 9%, net profit was up 4%, EBITDA improved by 2.3%, and margins at 18.2%, which were expected at 17%. So a big surprise there. In terms of where actually the growth came on, it was a value-led growth. Value grew around 9% for the counter. They have taken strategic price hikes, and this is the second quarter for Britannia where they have taken price hikes. They've also saved cost by around 3% and overall in terms of what brokerages are penciling in, Macquarie has maintained an underperform with a target price of 4,600. They believe underlying Q4 volume growth stood at around 8%. So while volume growth was 8%, value growth was around 9%. Although still volume growth of 8% is way better than what FMCG companies have already posted their volume growths in terms of their numbers. Overall, Macquarie awaits clarity on EBITDA margin profile. Their con call is set on Monday. That's when we'll get more clarity. And lastly, Macquarie says that input costs have seen healthy corrections in the last few months, and that poses a slight upside in terms of uptick in their profitability as well as margins going ahead as well. So this is the overall view as to how the quarter has panned out for Britannia.
Thank you, Mahima, for giving us those details. Vaibhav, how does Britannia look to you? It's a counter that's beat estimates in Q4.
Yes, so I'm cautiously optimistic on this particular stock. The reason is that as we know that the raw material prices are declining, so which will support their margins. So that's why I'm cautiously optimistic regarding this particular stock.
Okay. Thank you, Vaibhav, so much for joining us and, kind of giving us the outlook for all the stocks that we discussed here. Well, moving on, RSC also entered this quarter with a mixed bag of numbers with net interest income, PAT growth in line with estimates. Now, we spoke to Jitendra Srivastava, CMD at REC, listening to what he had to speak about the quarter gone by.
The CMD of REC is joining us here, so many thanks for speaking to us. First off, just visibility on growth as well as recoveries. How is that playing out so far?
This year has been a good year for us. We have been able to deliver a good, the highest annual profit that we have, profit after tax, of almost 15,713 crores, which is a roughly 12% growth on a year-on-year basis. We have seen a huge uptick in our sanctions. We have gone up to 3.37 lakh crores in sanctions. Our disbursals have been also substantial. We have gone up to 1.91 lakh crores, up from 1.6 lakh crores from last year. So both of these combined with reduction in our NPAs, all these things have contributed to our bottom line, and we have been able to deliver a good 4,713 crore dividend this year, apart from paying the income tax that we give to the Government of India. Overall, the financial story of REC is sound. We have very good ratios. Our return on net worth is fairly high, almost 21%. Overall, we are a fairly good financially managed company, and we are very hopeful that in the days to come, with the government's focus on the power sector and with our innate expertise in lending to the power sector, we will be able to contribute more to the growth story of the power sector.
So credit costs have started to appear, and are there certain accounts where you have seen challenges? And when do you expect the credit costs concern to normalize as well?
See, the basic growth story is about how you can reduce your cost of capital. And in that, I think REC, with its good finance team, has been fairly successful. Is that in that every year we have been successful in bringing down our cost of capital. This year has also been a good year. We have brought down our cost of capital as compared to last year, and we will continue. We'll try to ensure that our cost of capital is brought down further. The challenge before us is with the easing of liquidity in the economy due to the rate cuts by the RBI. With greater infusion of liquidity in the economy, there is more capital. So it becomes easier for agencies who may not have the requisite expertise to lower their interest rates and try and finance projects. But in spite of this, we still look at fundamentals of the company, and we don't compromise on the fundamentals of our borrower. Unless the borrower is good, unless the project is financially viable, we don't finance it. So I think this will continue. While we may have fresh liquidity, hopefully that should give us some leverage.
Any timelines on when it will normalize?
As such, I don't think it's possible to give those kind of timelines.
Right. So NII growth, has that outpaced loan growth going forward?
What growth?
NII, net interest
margins. Our net interest margin has improved slightly. We were at 3.57 last year. This year we're at 3.63. So that means that we are getting, we have been successful in bringing down our cost of capital, and we've been successful in increasing our income. So I think that's a positive trend. I think hopefully, although this year we are anticipating some tightening, so let's hope that this year continues to be as good as last year.
For the year ahead, what is your outlook? Is it positive, and how do you look at FY25 closing?
That's a tough one to answer. Current year we have given a 12% increase, and if you look at the macro situation, you have a lot of upheavals in the geopolitical sphere. You have greater fluidity in the market. So I think even if we can maintain our current 12% growth for next year, I think that would be good enough.
And that brings us to the end of this edition of Profit Top Trades, as well as my final show at NDTV Profit. A heartfelt thank you for everyone watching and the incredible team behind the scenes. But do stay tuned. India Market Close coming up next.
मेंटेनेंस है।
आपको मालूम है इसका फेस वॉश का खर्चा डबल है। तो देख मेरी आंखों के नीचे पहली बार तेरे को डार्क सर्कल है। एक मरे हुए मुर्गे में अगर जान डाल सकते हैं ना तो लिशियस बने।
Friendship came first or the idea came first?
Abhay, he was my friend. We also had.
Was.
Okay, this time. Actually, he landed in my office with this whole meat idea.
Actually, मैं बताया नहीं, मैंने शराब पी के इसको बोला था कि ये करना है।
So you have the conversation in his office. He doesn't take it too seriously.
इसको मैंने बुलाया घर आजा भाई, दोपहर को आया अपने महंगे वीसी वाले कपड़े पहन के। दरवाजे पे घंटी बजी, वो भैया ने इसको सोन पापड़ी के डब्बे में मटन पकड़ा दिया। इसके महंगे कपड़ों पे थोड़ा वो छलक गया। तो
Was it tough initially to get people to buy into the story?
I come from actually Dania vegetarian family and my parents, my dad said, मैं मतलब लोगों को क्या बोलूँगा?
The best thing is if a friendship survives a business pitch, I think that should be a true test of friendship.
हमने एक दूसरे को ये लिख के वादा किया था,
अगर बीवियाँ भी लड़ लें तो हम झगड़ा नहीं कर सकते।
मर जाएंगे पटनी घाटे।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Well, it's a soft day for the Nifty and expectedly so, but we've still held up very, very well. It's been a resilient market. We've just breached the 24K mark as we speak. And yes, there is some pressure that we're starting to see. Let's look at the intraday chart. We'll see it there as well. 1.5% low on the Nifty bank. That's how it is. We're off the day's lows, around 50 odd points. But nonetheless, it's been a fairly range bound and a fairly calm day of trade in relative terms to everything that's happening. Now, just in terms of where the heat map is, let's pull out the heat map. Some names, of course, standing out on the back of numbers. Tata Motors on the back of the US-UK treaty or tariff agreement that's getting signed. Titan, L&T on the back of numbers as we spoke. But outside of that, no major movers, as you can see. A BEL and some defense stocks buzzing, understandably, given everything that's playing out. And ICICI Bank is the top loser and likely the top dragger on the Nifty as well in terms of points. Let's pull up the contributors and look at those as well. Really not looking as bad on a net basis, but ICICI, HDFC, Reliance, some of the heavyweights sitting on the negative, obviously weighing down on the index a little bit. But we're just about 280 points odd lower. So it's a fairly measured approach which the Nifty has taken and markets have taken today. Let's look at sectors now. Let's lay it out. And of course, defense is one space which is doing very well in trade. But outside of that, the PSU banking index is the one which is buzzing as well. Not just a couple of banks which have declared a decent set of numbers. It's also some of the others. Let's pull up the Nifty PSU banking index before we circle back and come back here and look at sectors. But the Nifty PSU Banking Index doing well in trade. Let's look at the contributors as well in terms of names. There you go. So Union Bank standing out on the back of numbers, a Can Bank too on the back of numbers. But an SBI, Bob, PNB also doing fairly well for themselves on a day like this. So the PSU banking pack fairly measured in that sense, one of the top gainers. You can circle back to sectors. The realty index is the top loser of the day, nearly 3% lower. Outside of that, the Nifty Bank is down 1.3% with those private banking heavyweights. That also is understandable, and the Nifty Private Bank following suit. Outside of all of those, you'll see the Nifty Pharma with a tepid kind of a move. The Nifty IT, which was up in trade yesterday, is down around 0.5% thereabouts. Nifty Auto is absolutely flat. It's had a decent run, especially after the India-UK FTA. And of course, now we'll await any agreement between India and US on tariffs, which could well be a positive catalyst for auto. But that's how at least sectors are playing out. Let's look at the breadth as well. And in terms of the breadth, there you go. It's a sharp negative. We saw the reversal yesterday. It's just a continuation of what we've seen yesterday. The breadth was very favorable at the start of the day. We reversed somewhere in the last couple of hours of trade, and thereafter this is how it's played out. So fairly steady, fairly measured in that sense. It's not a knee-jerk, clearly not a knee-jerk, and that's a positive. Let's last off look at the mid-cap and small-cap indices, because that's where a bulk of the pain ought to be, but is not present. 0.5% low on the Nifty mid-cap. The Nifty small-cap also doing fairly well, 1.2 odd%. So overall, frankly, it's a positive. Let me actually bring in and get in more perspective with regard to this. We have Shivangi Sharda with us of Motilal Oswal. Shivangi, how would you sum the reaction of the market and especially the benchmark? And what are the levels you're looking out for? Is 23,800 the level, or are you looking lower? How should we look at the index now?
Very good afternoon, Harsh. So we have been seeing that the markets have reacted on account of geopolitical concerns. We are on the brink of 24,000 levels, and a hold above the same could see some stability. But of course, we've seen India VIX has also risen above 22 levels this week, almost up by 20% on a week-on-week basis, so which is causing a little bit of a discomfort to the bulls as well. So overall, volatility is going to continue, and we've seen that there is some rub-off at the higher levels. So stance would be to wait and watch until there's some certainty about the geopolitical concerns as well, but of course stay hedged in this kind of a market. And we've been seeing that the important key support levels positionally are still being respected. So overall, no tension so far. But of course, we are heading into an uncertain, times. So of course, with the weekend risk as well, advice is to stay light. Watch out for 23,800 as an important support. And on the upside, hurdles can be seen at 24,350 marks. Of course, talking about Bank Nifty, this index has also seen a rub-off, and it's wiped off the gains of the last 2 weeks. And we have seen that even though 53,000 levels is something that it is respecting, but overall, we've seen that there has been some sort of pain point in the heavyweight stocks as well. So Bank Nifty, also in line with the broader market, we can see that there would be some more weakness or some more profit booking that could be seen here. And we're looking at 53,000 as an important support level with a hurdle at 54,500 levels.
More upside than down, at least on the Bank Nifty. Shivangi, let me first take your picks out of the way. So your picks for this afternoon.
So talking about individual picks, first up on my radar is Titan, which has outshined the market, and even despite the market weakness and volatility, this one has been in consistent uptrend from the last 4 weeks. Excellent short covering move was followed by long built up, and we can see that volumes have added up in the last 3 trading sessions. It's retraced exactly from its 50 DEMA, and we can see that momentum can be seen even at these levels. it's holding on to the higher zones as well. So recommending a buy here. Now, the next potential targets that we're looking at for Titan is around about 35.50 levels with a stop of 33.80 zones. Now, the second pick on my radar is L&T. This one has given a consolidation breakout of the last 15 trading sessions, and we've seen that remarkable open interest action can be seen here. Now, of course, this activity was being seen from the last 3 trading sessions, but price conversion has happened today, and this confirms the ongoing up move. Now, on a week-on-week basis as well, the stock has done really well from the last 5 weeks. Good recovery from the lower levels, and we can see that RSI is also giving a positive divergence here. So recommending a buy here. Now the target would be 35.50 with a stop of 33.80 levels.
Shivangi, I wonder, and your quick take with regard to some of the private sector banks, ICICI Bank in particular, down 3%. There's also within the financials, a Bajaj Finance, which is down 2.5%. Your sense with regard to what levels should one watch out for with regard to a couple of these counters?
So, of course, banking and NBFCs have rallied in the last 2 series. They were, of course, the important pillars which were holding the market. But from the last 3 weeks, we've seen a little bit of a rub off and profit taking at these levels. And Bajaj Finance, if we talk about it per se, we've seen that the stock has seen volatility within a range from the last 6 trading sessions. And even though it's kind of struggling to hold above its key exponential moving average, but the fact is that it has sank and the momentum is clearly missing over here. So we would kind of wait and watch here. Watch out for 85.50 levels here, which is an important level. If it manages to hold above the same, then we could see a fresh leg of rally commencing here. So 85.50 to watch out for the next levels of around about 9,000 levels.
Shivangi, one more stock which is doing really well in trade today, Idea Forge, which is up 19%. Completely changes the dynamic in terms of levels, but what side of the fence do you sit on with regard to this one in terms of a trade?
So, of course, this one has been in a lot of momentum today. Volumes have been really shallow here, but of course, the stock has seen quite a bit of run up today. We'll have to, of course, see if it sustains at these levels, because on a month-on-month basis, the stock has consistently done poorly in terms of returns, and we've seen that any small bounces have been again turned into profit taking. So, of course, if it manages to hold above 450, then one could plan to buy. But of course, with a surge like this, I think it would be important to wait and watch here.
And Shivangi, what about the broader defense pack? What's the sense with regard to that one?
So from the defense names, I'm looking at HAL, which has kind of done very well. It's sustained from the last 3 trading weeks, and we've seen that this has kind of held on to the important support levels as well. This one has interestingly seen IVs cool off here. So, of course, there is a lot of comfort which is mounting up over here. And we can look at around about 46.50 levels for this one with a support of 4,400 levels.
All right. Shivangi, maybe another couple of names from the PSU banking pack. A Union Bank is perked up 5, and SBI also doing okay relative to how the market is doing. Any of those showing some meaningful views at this point?
So, of course, talking about most of the PSU names, they have seen some sort of a recovery today. And whether we talk about Union Bank or SBI for that matter, we've seen that these stocks have consistently, made lower top, lower bottom from the last 12 trading sessions. So there is some sort of a pressure which is continuing here, and I would advise to wait and watch, since Bank Nifty is on the brink of important support levels. So advice would be to wait and watch and to be with the heavyweight names.
Okay. And, what about something like Kalyan Jewelers? Because you like a Titan, Shivangi. And of course, the same pack, but it's also declared numbers and therefore, from a fundamental perspective, also in focus. But what are technical indicators reflecting on this one?
So looking at Kalyan Jewelers, of course, this stock, in line with the other gold-related counters, have done well from the last 2 fair weeks. But then again, momentum is clearly missing here because follow-up cannot be seen above 535 odd levels. So the stock is basically struggling to hold above 535 levels. And if we see a hold above the same, only then I would advise to enter into the stock, or else we could easily be with the heavyweight names which are doing much well.
Okay, Shivangi, thank you for those views, but stay on. What we're going to do is we're going to quickly deep dive into the Amphi data that's come out today, and Alex Matthew joining me as well. Alex, first off, just give our viewers a perspective on the numbers, and thereafter, let's get external perspectives as well.
Yeah. So first up, broad view, top-down view,
Yes.
bird's eye view. It's a healthy number. All things considered, the kind of volatility. Remember, the second month in a row where we saw an uptrend for the equity markets as a whole. So you found buyers and you found investors into the equity market. So the top two headlines for me. First, the gross SIP flows, SIP flows, have once again hit a record high. That number comes in at 26,632 crore rupees, and it is higher than the previous record high, which stood at about 26,460 crore rupees, and that was all the way back in December of 2024. The second headline, according to me, is the kind of interest that investors have shown in the other ETF category. And my guest this afternoon is going to have an opinion on this. I'm very curious about what he has to say. We'll get to that in a bit. But take a look at the numbers. 19,056 crore rupees coming in on a net basis into other ETFs, which include quite a few ETFs, most of them equity, but there's also something like a silver ETF that you throw into that category. Not very much in the way of assets under management. It's interesting that a second month in a row, there's a substantial inflow into this category, because in the month of March as well, you saw inflows of nearly 11,000 crore rupees into this one category. You can argue that passive as a strategy is coming of age in India, because if in the month of April, index funds plus other ETFs have accounted for over 20,000 crore rupees of flows on a net basis, and if active equity mutual funds in the equity space have seen inflows of about 24,000 crore rupees, then that should put something in perspective for you. And by the way, that active equity mutual fund inflow is more or less just about 1,000 crore less on a net basis than the previous month. So it stayed pretty good. Take a look at some of the key headers there in that active category. You have inflows of about 5,542 crore rupees in flexi cap funds, which is the broadest category. You have thematic funds that have seen inflows on a net basis of about 2,000 crore. But remember, if you look at the fine print, the gross number is pretty large. So it's comparable to the flexi cap funds in terms of gross inflows, but the redemptions are pretty high as well, which is why the net inflows are only about 2,000 crore rupees. Mid cap funds have seen inflows about 3,300 crore rupees, and small cap as much as 4,000 crore rupees. The last point is on gold ETFs, which have once again seen an outflow of about 5.8 crore rupees, which indicates to me that smart money is actually taking some profits off the table. I wonder what Anthony Heredia, Managing Director and Chief Executive Officer of Mahindra Manulife, has to say about some of what I have just said. Anthony, hopefully I've set the pitch for you. The first delivery to face, I guess, or your opinion on the ETF flows. We spoke about it last month, quite a considerable inflow there.
Yeah, actually, I would guess even higher inflow this month than the last month. And Alex, what I think is happening is, if I look at broad discussions on investing in the media and, other forums, right, I think people are discussing a lot more about factor investing, categories that affect factor investing like quality, momentum, stuff like that.
And what I believe must be happening is the preference for sectoral and thematic is obviously come off very significantly. It came off last month. It's pretty tepid this month as well. And people are probably trying to get their excitement by moving into what they believe are narrower products like a quality product or a momentum based product or a value based product. And it's obviously very easy to buy on an ETF platform. And I guess that's what's happening. You rightly put that smart money seems to be exiting gold at some level, but I think there will be enough of smart money that perhaps is also doing silver ETFs that do form part of other ETFs as well. So yeah, in terms of the overall numbers, to think that it's 19,000 crores in aggregate on a net basis relative to classical equity. And let me just highlight one more observation, which is kind of a bit of a puzzle and a frustration. I find it quite strange that hybrid funds, which should actually do better in terms of flows when there's volatility in the market or uncertainty, is actually seeing their worst set of months in terms of flows. So somewhere I think people are becoming a little more conscious of markets. So they're looking at more large cap preferences in their active equity. They're becoming a little more judicious, or let's say they want to think about factors like quality, etc. But somewhere in that process, hybrid seems to have taken a complete whack.
Apart from arbitrage funds, which have seen an inflow of about 11,000 crore rupees, Anthony, there is a seasonality associated with liquid funds, certainly, and overnight funds, where you see significant outflows at the end of a quarter and significant inflows at the start of a new quarter. I'm just wondering whether you can stretch that seasonality to an arbitrage fund as well, which has seen 11,000 crore rupees plus of inflows on a net basis in April.
I would say, Alex, you pretty much can, because I think for a lot of corporates that are at the highest tax bracket, arbitrage also makes sense to them relative to liquid products, right? So, and that's very easily explained by the fact that I think last month we had a net negative number in arbitrage funds. We had the same situation in December. So it tells me that there is some element of corporate and institutional money. So that obviously flips in April just like it does for liquid. But it doesn't completely explain it, right? Because I think in March, if I remember the numbers, we had close to like a negative 3,000 crores or thereabouts in arbitrage. So to see 11,000 crores positive suggests to me that there's another factor at play, which is that people are looking at also taking some profits off the table. But since they're used to investing in mutual funds, they're not really redeeming, but they're switching to arbitrage as well, right? So I think it's a combination of the two, because if it is just a straight flip, you should have seen a 5,000 positive. The fact that it's 11,000 suggests that there is money on the sidelines waiting for an opportunity to get back into equity that is now sitting in arbitrage versus in the past it would sit in liquid.
Interesting perspective there. Anthony, I'm just wondering about the SIP book, the SIP number on a gross basis coming in at a record once again, not very dramatically higher than the previous few readings, but a decent number. I'm just wondering about the net number, and we've spoken about this as well in the past, and that has trended lower in the recent past for various reasons because of that uncertainty. As much as you'd like people to continue the SIP, there is a tendency to cancel when things are getting tough. But the gross number coming back to a record is a positive. Do you have any sense of where that net number is?
No, I don't, but I think that net number probably will not be surprisingly more positive, because I'll tell you, Alex, and we've discussed this in the past, right? The net number, it's not really an apple to apple comparison, because if somebody is redeeming from an SIP folio that they've built over, let's say, 3 or 5 years, and comparing it with a one installment in the month of April is not exactly the right comparative. In my perspective, it gives you a sense of a trend that people are becoming watchful. But I think that trend is also obvious in terms of the lump sum nets, right? I mean, in December and November, we were close to 50,000 crores. That number is now 25,000 crores. The investor is pretty much the same. Lots of investors who are in lump sum investors are SIP investors. I actually think that SIP numbers are positive more than what this headline shows. And I'll tell you why. At least on the ground, I see a lot more people saying, given the volatility in the markets, etc., the way to invest, at least going forward in markets, seems to be more sensible doing it via SIPs and systematic transfer plans rather than going it at one go. So I find that it's easier to convince someone to buy a SIP or to start a new SIP than it is for somebody to put in money at work at a lump sum basis. So I think, frankly, if you ask my personal perspective, I would believe that the SIP numbers going forward will trend more positively than the lump sum numbers, at least as long as market volatility stays.
Okay, all right. Anthony, thanks so much for joining me for that perspective.
Welcome, Alex.
Thanks so much for coming by. Shivangi, thanks for waiting by and appreciate your patience on this. But I want to come to you on the VIX number because we've seen elevated volatility. What do you make of the India VIX and the kind of spike that you've seen yesterday and today? And on the higher levels, what would your reaction to that be as the VIX trends higher?
So, of course, we've seen that India VIX has been a reflection of how the sentiments of the markets have been, and we've risen above 22.5 levels this week, over 20% on a week-on-week basis. So, of course, this is causing some sort of discomfort to the bulls at these levels, and we've rallied like a good amount in the last 4 weeks. So some rub-off is quite natural, but because of the geopolitical tensions, things have escalated and volatility has increased, which will likely to continue until the time we have some certainty around, where this is headed. But of course, we are heading into uncertain times, so advice would be to remain hedged and reduce overnight exposure.
Reduce overnight exposure, and you said, yeah, keep your positions light ahead of the weekends because there's so much happening. There is a little bit of evidence of some semblance of calm, at least in pockets of the broader markets, right? If I look at the mid-cap index, the cuts are only about 0.4% at this juncture. In that realm, are you spotting any opportunities, Shivangi? And we've spoken about a variety of stocks so far, so I guess beyond what we've spoken about.
Yeah, so as I rightly mentioned that one of my top picks would be Titan and L&T, but of course, apart from this, we're looking at some of the defense name as well. HAL is one on the radar, and there has been quite a lot of action and stability here in this one. So these stocks can be, kept on radar. Of course, some of the selective auto names, especially the two-wheeler names, are also looking quite attractive right now. But of course, these are the pockets and themes that we're looking at. There will be some sort of softness which could be expected in the banking and the NBFC since Bank Nifty is on the brink of an important support. So, of course, we could look at and diversify it accordingly.
Okay. And Shivangi, any names within the pharma basket which are attracting attention at this point? Because maybe a few earnings candidates within that basket still to come out with numbers.
So pharma names have been highly beta counters, and they are, of course, moved with a lot of volatility. But if you have to pick a few names, I think Divi's Lab or maybe a Sun Pharma would look quite lucrative at these levels. In fact, Divi's Lab is better placed and it's holding on above its key exponential moving averages as well. So Divi's Lab, yes, this is the stock that one can look out for. But of course, keep a very strict stop loss in the pharma names because of its high beta nature.
And right, Shivangi, what about an Airtel at this point, at these levels, looking interesting?
So, of course, this one has been one of the strongest counters and it's back a little bit of softness from the last 3 trading sessions, but overall on a week-on-week basis, this has held on to its support from the last 10 weeks. So positionally, there is no, setup change that we're looking at. It's looking quite lucrative and positive, but intraday volatility will continue, and we could see that, this moves very much in line with the market with a higher correlation. So there would be some sort of, consolidation at this level, or maybe some sort of softness, but not looking at a major break of the important support levels.
And while we are on telecom, here's an NDTV Profit exclusive. Sources tell your channel that the telecom department is seeking inputs from telcos on downtime faced in parts of North India. Aishwarya Patil here to give us more details on this. What are you hearing, Aishwarya?
Right, Harsh. What we're learning from our sources is that telecom department is seeking inputs from a few telcos on a downtime faced in some parts of North India, specifically Delhi NCR, and are asking for a report on this possible downtime that may have happened last evening. The report is still yet to be out, and some sort of investigation is also on at this point. That's what we are learning from our sources. Now, a government earlier on had issued an OM, Office of Memorandum and Directive to telecom operators amidst the India-Pakistan tensions. They've asked the telcos to prepare a contingency plan in case of an emergency that may occur in these areas as well. Now, what have they said in the OM is first off that all telecom operators need to ensure that they have 24/7 network that is uninterrupted. That is the request. And as far as grid operations are concerned, in case there is a shutdown of grids, there needs to be enough and adequate fuel backup. Diesel generators are usually in place so that there's no shutdown of these grids. Then there's something called as ICR, which is activated between telecom operators in case there is an emergency, and they share their grids or their towers, which is interconnect roaming, is something that is an understanding between all telecom operators. So in case a Geo tower is not functional, Airtel or Vodafone will have to comply and work with each other in these emergency cases. Apart from there is war room preparedness. A war room full of engineers are constantly monitoring these situations and have a close eye on the network operations as well. And that, of course, will be scaled up in case the emergency situation escalates further. And all telcos, of course, including Jio, Airtel, Vodafone, are told to constantly monitor and keep the government in the loop in case there is any such downtime. So far, that's the update from the telecom operator side.
Okay, thank you for that, Aishwarya, for bringing us that. Of course, fast evolving and not just travel, but lots of other pockets will start to see what the impact will be like of everything that's playing out. So we'll have to wait and watch a bit as to how it does. But markets for the moment, taking this in a very mature fashion. What we're going to do is we're going to slip into a very short break. Actually, what I'm also going to do is thank Shivangi. Shivangi, thank you for coming in, giving us your views as well. We'll let you also go. What we'll do is we'll slip into a very short break. On the other side, we'll take stock of the day, and that is L&T. We'll get you a deep dive on everything that's happening. Stay tuned, and of course heard on the street, so stay tuned.
इजी मेंटेनेंस है।
आपको मालूम है इसका फेस वॉश का खर्चा डबल है। तो देख मेरी आंखों के नीचे पहली बार तेरे को डार्क सर्कल है। एक मरे हुए मुर्गे में अगर जान डाल सकते हैं ना तो लिशियस बने।
Friendship came first or the idea came first?
Abhay, he was my friend. We also had.
Was.
Okay, this time. Actually, he landed in my office with this whole meat idea.
Actually, मैं बताया नहीं, मैंने शराब पी के इसको बोला था कि ये करना है।
So you have the conversation in his office. He doesn't take it too seriously.
इसको मैंने बुलाया घर आजा भाई, दोपहर को आया अपने महंगे वीसी वाले कपड़े पहन के। दरवाजे पे घंटी बजी, वो भैया ने इसको सोन पापड़ी के डब्बे में मटन पकड़ा दिया। इसके महंगे कपड़ों पे थोड़ा वो छलक गया। तो
Was it tough initially to get people to buy into the story?
I come from actually Baniya vegetarian family, and my parents, my dad said, मैं मतलब लोगों को क्या बोलूँगा?
best thing is if a friendship survives a business pitch. I think that should be a true test of friendship.
हमने एक दूसरे को ये लिख के वादा किया था,
अगर बीवियां भी लड़ लें तो हम झगड़ा नहीं कर सकते,
मर जाएंगे पटनी घाटे।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Welcome back. Thanks for staying with us. That time of the show when we go to Somit, because he gets us all the chatter that's coming from dealing rooms. It's an interesting day, and therefore will be important to see what all he's picking up. Somit.
Well, firstly, if you look at stock-specific action that we are hearing is on a couple of expensive stocks. Expensive not in terms of valuations, but in terms of price. That is Page Industries and Shree Cement. Dealers are indicating that large HNIs have been accumulating both these counters at every fall. Page Industries now is up around 0.4% in trade, while Shree Cement might be trading flat in trade so far. Apart from that, it's a couple of capital goods stocks, that is Siemens and ABB India. Both these capital goods stocks are seeing sell flows at higher levels on the DI at desk is what the dealers are indicating. And when it comes to Dr. Reddy, dealers are indicating that there are sell flows on foreign institutional desk for Dr. Reddy's. Now, what dealers are saying is the fact that the sales of Revlimid, which is one of the key products for Dr. Reddy, might have peaked, and that could be one of the reason why there have been sell flows for Dr. Reddy's. And lastly, it's Bharat Bijli. Influential investors have been accumulating this counter on expectations of a strong result is what dealers are indicating. Now, the company will be reporting its numbers on May 16th, so keep an eye out for Bharat Bijli as well in trade.
Okay, interesting. Thank you so much, Somit. We'll let you go on that note. In terms of a Page Industries, a Shree Cement, good to get perspective, because if there's interest from smart money coming in, it's good to get a perspective. Sudeep Bandyopadhyay joining us, Group Chairman, IndiTrade Capital, and we also have Kunal Shah, Senior Tech and Derivative Analyst at Mirae Asset Sharekhan. Sudeep, let me come to you first. These couple of names that Somit took, do they look interesting at this point? Markets are obviously under some bit of pressure, not too much. Are these opportunities to accumulate some of these names, or are there others on your list?
Well, cement has been one of my favorite pockets for quite some time. And I think, leave aside the India-Pakistan geopolitical stress, I think this is one sector which is completely away from that tariff tantrums. Of course, the government of India's capex plan of 11 lakh crore augurs well for the sector. Housing for all, the real estate boom, construction boom, I think pretty much indicates to incremental demand for cement. We have started seeing the beginning of that from fourth quarter. And I think pricing power is also coming back. Raw material cost has come down remarkably, and that's pretty much apparent in Q4 numbers of all the cement companies. Petcoke prices from here on may increase a bit, but still, considering that the pricing power is coming back and demand is coming back, I think cement should do well. So if you get some cement company which has come down because of this geopolitical tension, I think it's definitely worth buying. Our favorite, of course, is Ultratech Cement, the industry leader. But companies like Shree Cement, which was being talked about, can also be looked at from a long-term perspective.
Okay, so constructive cement, Sudeep, clearly, and within that pack, Ultratech on dips could be interesting. Okay, now let's quickly go across to stock of the day, because it's Larsen & Toubro. It's a very solid set of numbers, mind you. Commentary also sounding good, and of course it's on the back of all export related. The mix is tilted towards exports, and that's why the numbers look better. But Anushi here to break down those.
Right, so a strong beat that we've seen for L&T in this quarter, and along with that, a strong commentary is what we are seeing for FY26. Let's break down the Q4 numbers first. Now, if you look at the Q4 numbers, revenue was up around 11% this quarter. Margins, we did see about a 24 basis points of an improvement, while for net profit, we saw about a 25% growth. Do note that this also had an exceptional item of 475 crore, because of which we are looking at a higher net profit growth. But let's walk through the key highlights as to why L&T stood out this quarter. Firstly, if you look at the revenue and margins, they were majorly in line. It was the net profit which beat estimates. Q4 order inflows, if we see, the growth was led by higher international orders. We've seen a particularly big order coming in the last quarter. So that is, this is from the Middle East business that we are seeing, which has led to this kind of jump in the inflow pictures that we've seen. Domestic ordering also, while on international order was strong, it was domestic ordering which was on the muted side though. So that was something that we should be keeping an eye out for. Order inflows, if we see, were up around 18% in FY25, a strong beat to the 10% of an order inflow guidance given for the year. And with that, the company has also raised its FY26 core EBITDA margin to the levels of 8.5%. This is in comparison to the 8.25 picture that we've seen. If we look at the other metrics also in the outlook ahead, now they have raised their order prospect pipeline to 19 lakh crore from the 12 lakh crore figure that we saw at the beginning of FY25, which is a 60% of a jump that we are looking at. Of course, international business remaining in focus over here. Domestic seeing about 7 lakh crore of these prospects, while from the international side, we are seeing about 12 lakh crore. Now, what is also interesting is that revenue is expected to see about a 15% of a growth in FY26. So, already an order inflows would be expected to see about a 10% of a growth, and this is on a high base that we are looking for FY25 as well. We've seen 18% of a growth here. Order book, if we see, that stood at the likes of 5.76 lakh crore, representing about 22% of a jump. So, order book and order inflows have been particularly strong for the business. When asked about what's the outlook from the Middle East business, considering there have been impact on lower crude prices and the muted Saudi Aramco, the business still remains confident that it's not the oil and gas segment only that would contribute to the gains, but other business verticals also from that particular area, which would lead to the gains that we have been looking at. Now, also, what are the brokerages saying? If you look at Investec, they have remained bullish on this counter, maintaining the buy. In fact, they've hiked their price to 4,115, seeing that this is a decent set of results that we are looking at. And now, given the guidance, they're confident on the outlook forward for the business. If we talk about what how Goldman Sachs is saying though, now they have a neutral rating on this company. They have, despite the solid order inflow that we have seen for the quarter, it's the macro uncertainty which is and the increasing international mix is something that we should be keeping an eye out for. Lastly on the radar is something like a Bernstein on L&T. They've maintained their outperform rating, and this is with a target price of 3,922. While the revenue did miss consensus by 2% in the fourth quarter, overall FY26 trajectory remains on a solid side, and FY25 is also one of those. After a couple of years, it's the first time that we are seeing that they've had a strong beat across all their key metrics. So L&T in focus today on the back of its Q4 results and also on the trajectory forward for FY26.
3.2% higher. Thank you for that perspective, Anushi. International doing better and outlook also looking strong. Sudeep, what do you reckon? Do valuations support the kind of outlook that has been given, or is there a possibility of an upside from here as well?
Well, there's a significant upside from here as well. That's what I believe. And, I've been recommending L&T to the investors for quite some time. I think what's happening is there's a fundamental shift happening. The order book, international order book till about last quarter was 33% of the overall book. Now it's 46%. And remember, of course, they won that large order in Qatar. And they have become one of the leading construction companies in Saudi as well. The interesting part is international orders are at a much higher margin. They are around 10%, whereas domestic book was around 7.5–8%. So the blended margin is continuously improving, and that is getting reflected in the higher margin guidance which they have provided. And I think they have provided a very conservative margin guidance. My guess is margin will be better than what they have guided, which is about 8.5%. Because if the international order book keeps growing and becomes more than 50%, obviously it will be weighted towards 10 more than 8. Let's see how things pan out. Of course, the domestic business is also going to pick up because domestic order flow was muted, but I think that's going to pick up 2 in the near future. And I talked about in the context of cement, 11 lakh crore capex plan of Government of India. I think implementation of that will help L&T in a big way, because L&T is the leading construction company, EPC company in the country. Other businesses which are subsidiaries also have been doing well. Working capital management has significantly improved. Unrelated diversification which they have come out of that. So I think, fundamentally the company looks very strong and solid, and, significant upside from here can be expected.
Very interesting, and laying it out ever so well, Sudeep. So thanks for that. Kunal, let me come to you with regard to L&T in particular first, before I ask you for your view on the market and your picks.
So first for L&T, I think definitely in the recent times it had been an underperformer, and now we are seeing the strength getting resumed back. So clear cut in the last 2 to 3 weeks, the stock has seen buying interest from the lower levels, and finally in today's trading session, we have seen a breakout above the 100 DMA with volumes. We expect this momentum to continue on the higher end for L&T. The short-term targets, what I see, the first resistance on the upside is placed at 3,532. That is the first target. And once we sustain above that, the next level comes at 3,720.
Your view on the index and the Bank Nifty, it's not a bad reaction at all, right?
Yeah, definitely. It has not been a bad reaction, but the last 4 to 5 days consolidation, what we were having, we have broken on the downside. Now, this is the first day where we have broken it on the downside. Now, follow-up move is required on Monday's trading session. If that triggers in, then the markets could head lower. So I think Monday would be an important trading session for the markets, whether we get a follow-up on this selling, or are we again going to see some recovery from the lower levels. So 24,200 will now act as a strong resistance. We have seen call writing at high levels on the options data. So call writers are active. So currently the stance remains bearish around rise mode. In the time we are not reclaiming 24,200 on the higher and on a closing basis. So the view remains negative for the market. The support on the downside is placed at 23,800. That is the first level. And if we breach 23,800 on a closing basis, the next level comes at the 100-day moving average, which is placed at 23,400 mark. Now for the Bank Nifty, this has been already an underperformer in the last 7 to 8 trading sessions. After being a leader for this entire rally, it has started to underperform. Now Bank Nifty has been facing rejection at the 20 DMA. Today's high of Bank Nifty is where the 20 DMA is placed, which is 54,024. We need to surpass this level to at least expect some pullback towards the mark of 55,000 on the higher end. So Bank Nifty on the lower end, if continues the down move, can slide towards 52,800 on the downside. So Bank Nifty, even the current structure remains negative. Today, what we have seen is that the broader markets have been negative. The advance decline ratio is negative. And the selling, what we have seen in mostly of the large caps like ICICI, HDFC Bank, Reliance, these are the counters where Axis Bank, these are the counters where we see major of the F5 position being there. And today has been the day where all these counters from the high levels have seen selling pressure. So negative sentiment is still there. India VIX is trading at 21.76. This could go towards 30 on the higher end if VIX continues to rise. So the markets are going to be uncertain for the next week as well. So trading with caution is advisable even at the current levels. The view remains negative for all the indices on a short-term perspective. For Nifty, the resistance is 24,200, and for Bank Nifty, the resistance is 54,500 on the higher end.
Quick follow-up. So just trying to understand, how should one position oneself for Monday? You said that if Monday is a critical day, if Monday were to be a day on which indices decline, you could see a larger decline. But then you're saying you're negative. So just give us that clarification, and also along with it, your picks.
Yeah, I think that is what in Nifty is now trading below the 200 DMA. So we have reached the 200 DMA. In fact, if we close below it, that will again confirm the trend on the negative side. So for me, the play should be on the sell side only. If you are holding long, it would be a risky bet to hold long positions. If you still want to carry, probably hedge it, buy a put option on a long positions of futures and hedge it and go for Monday, so that at least even if there's a gap down that comes in over the weekend, if there is some more activity happening on the border, you are at least hedge on your position. If not, then you can again initiate on the sell side fresh positions for Nifty, looking for downside targets of 23,800 to 23,500 on the lower end. Coming to the stocks, I think I have two ideas here, one on the buy side, one on the sell side. First, I'll discuss the buy idea, and the stock will be from the auto space, and that is Tata Motors. After a good underperformance, the stock is finally showing a lot of strength. Whatever dips are there in the last 5 to 6 trading session have been bought aggressively. Plus, the UK FTA Act will act as a good support for the stock as well. So I think that this will help the stock to move higher, and the underperformance could be relatively seen as an outperformance in the very short term. So Tata Motors is a buy for me at the current level. 670 should be a stop loss on the downside. You can expect targets of 740 to 760 on a higher end for Tata Motors in the coming week. The second stock which I'm looking, that is from the NBFC space, and that is Bajaj Finance. I think here we are seeing major resistance now getting placed at higher levels. The stock is not able to sustain at the high levels. The outperformance, what we had seen in the stock in the recent times, seems to be fizzled out. So there is profit booking happening. The stock is facing rejection at a 20 DMA. So Bajaj Finance is a sell for me. Keep a stop loss of 9,000 on the higher end, which is the resistance zone. And on the lower end, the stock could test the levels of 8,200 to 8,000 on the downside.
Okay. All right. You know, where the spotlight really is this afternoon is frankly all about defense and all about, I would say, strategic sectors. Just to take a look at a Borosil Renew, for example, and how that is doing. Of course, the entire defense pack on, zooming today from a Bharat Dynamic to a Bharat Forge to a Zen. All of that is in focus. You have a Yes Bank also doing fairly well. The board meeting is today. Yes Bank and State Bank of India. It's expected that the Japanese buyer that they're talking about, the deal won't be inked, but it'll move forward on that. It's good for SBI as well if that does go through. But the big focus remains undoubtedly defense stocks. Following the success of India thwarting a Pakistani attack, and of course the success of Operation Sindoor. These shares have led market gains, reflecting high investor interest amongst these developments. But what exactly are these companies doing? Paras Defense, Bharat Dynamics, HAL and BEL, they're rallying strongly. But what do they do? What is the outlook looking like for them? What are their valuations? Well, Anushi is breaking it down.
Right, Taman, as you've mentioned that it's the Defense India pack which is in focus. Strong rally that we've seen in a handful of these counters. The defense, again, index up over 3% in trade today. In fact, it's not just this one day that we're looking at these sentimental moves on all that is happening between India and Pakistan. But if you also pull out the last 1 month, the index has seen about 15% of gains in just this 1 month period itself. Year to date also 9% of gains that we are looking at from this pack. Now let's see what all these companies are doing, what is fueling the defense rally if you are looking at. Firstly, it's the geopolitical risk that is boosting the defense spending that we've seen. Again, a lot of consideration on how the order books of these particular companies are expected to be, with more of these new orders in pipeline which are there. If we also see recent updates, there's Europe boost in defense spending as well, which would lead to benefit for some of these Indian players as well. So that is something that we should be watching out for, which again provides robust order visibility going forward. Now, if you talk about the current valuations also of some of these counters which are there, 5-year average, which was at 37 times of a multiple that we are looking at, compared to that, the current multiple is stacking in the range of 50 times is what we are seeing. So these are some of the points of consideration that we are seeing for the overall defense pack. But let's break down what each company does. So let's start off with something like an Idea Forge, which is buzzing in trade today. Now, if you talk about Idea Forge, they are mainly into the manufacturing of drones that we are seeing, or unmanned aerial vehicles as we call it. This includes the likes of Switch UAV, Netra V series that we are looking at, along with something like a Ninja UAV. Now this is mainly utilized for, if we are seeing, for long range surveillance and military mapping is something that we are looking at. Order book of this company stands at the range of 13.6 crore. This is as of the March figure that we are looking at. Next, if we move on to something like a Bharat Dynamics, let's see that that's where the main focus is. Now they are into guided missiles and allied defense equipment. If you talk about some some of the things that they do, they're also into unmanned aerial vehicles that we've spoken about before, and have launched precision guided missiles as well. Some of the things that Bharat Dynamics have manufactured includes the likes of the surface to air missiles, which is the Akash weapon system that we are looking at, and also air to air missile Astra weapon system that we are seeing. So very important in terms of where the defense sector is concerned in terms of for our army as well. But let's move on. If you look at the order book of that company, that stands at about 18,852 crores. This is as of the September 24 figure that we are looking at. Let's talk about the next one on the list. And we have Hindustan Aeronautics in focus. Of course, this is one of the major and the most important companies that is out there, only manufacturer of Indian aircrafts that we are looking at now. They have joint collaborations with the Russian developer Sukhoi aircraft that we are seeing. Along with that, even the light combat aircraft Tejas and Dornier aircraft is something that we are seeing. Even in helicopters, we have the ALH and the LCH, which is in focus over here. So Hindustan Aeronautics for the Indian Air Force, an important company as well. If you talk about the order book now, it has a particularly interesting year for the company. The order book was up around 95% at the range of 1.84 lakh crore in FY25 is what we are seeing. So HAL, another company, and what is essentially what it manufactures. Next one on the list is something like a Bharat Electronics. Now this manufactures Akshatir advanced air defense control and reporting systems. Again, these are another set of company along with Bharat Dynamics, which is responsible for manufacturing the Akash missile that we are looking at. So it is the Crow producer over there as well. Bharat Electronics, if you look at the order book of this company, that stands roughly at the size of 71,000 crore. Again, this is the March 24 figure that we are looking at. Quickly moving on to some of the other counters which are there, we'll talk about the likes of Zentech, mainly offering ammunition, bulletproof vest and designing combat training solutions. They also have recently acquired stake in Vector Techniques, which is responsible for drones area as well. So that is another interesting area in focus over here for Zentech. And the last one in focus is something like a DCX system, which is responsible for cable harness and electronic components for Indian defense and aerospace programs that we are looking at. Along with that, components for radars and the missile systems is something that we are seeing. And what is also important is that they have a lot of the suppliers to foreign OEMs as well, and which that they are involved in supplying defense equipment to India. If you look at the order book of this company, that stands at roughly 3,359 crore as of the December figure that we are looking at. So these are a handful of counters which are in focus today. What it means for the Indian Army, for the Indian population, how important of a role that they play for the country in general.
Thank you for that very detailed piece over there, Anushi and Bal. Explain what exactly these companies do, and of course, right now at the forefront of what the nation needs. Sudeep Bandyopadhyay, IndiTrade with us, of course, Kunal Shah. Sudeep, just your take on some of these defense stocks. Clearly a momentum play over there, but would you buy into any of these or actually reduce positions if you see a run-up?
No. I will not reduce position, but I have my favorites there. I think defense electronics is one area where I have been focused for quite some time, and I've been recommending a buy in Bharat Electronics, BEL, for some time, and I continue to maintain my stand. It's moved up quite a bit, today also, but still, from a long-term perspective, it's a good buy. Look, I think Bharat Electronics plays a very, very critical role in, defense electronics, and it caters to Air Force, Army, Navy, all three wings of the armed forces. And most importantly, amongst all the PSU defense companies, the track record of efficiency and delivery has been outstanding, and this has been consistently maintained quarter on quarter for a very long time. There's a strong balance sheet. And of course, the export opportunity is opening up. Rearmament is happening all over the world. We are seeing what kind of geopolitical tension, and the war actually is shifting to electronic warfare more than anything else. So the scope and opportunity of Bharat Electronics is significantly higher. And I think it's a good buy at current levels.
Okay, so BEL, a good buy on current levels. Kunal, on the charts, what are you liking in the defense pack? It's all firing today.
Yeah, I think I'll also go with him. Definitely BEL is one stock which is there on our radar. Clearly an outperformer from the defense space. In fact, a few minutes back, I've initiated a buy for BEL to our clients. We expect this move to continue. Good technical setup, good structure. We expect this move to continue on the higher end towards the mark of 333. So currently trading at 315, 316 zone. So BL continues to be on a buy. 305 should be a stop loss. 333 is what I'm expecting for BL in the very short term.
Okay, so BEL seems to be a favorite today. Even if the overall breadth of the market seems quite negative and on expected lines. But the important sector to watch is also telecom, because TRAI has come up with its rules for satellite internet. So they're saying that they've assigned spectrum for 5 years, extendable by 2 more years based on a market review. Charges have been pegged at 4% of revenue or minimum spectrum fee, whichever is higher. We should clarify, this is AGR charges. Remember, AGR is the bone of contention for the entire telecom sector. They've also said NGSO operators to pay 500 per user annually in urban areas, while rural users are exempted. The reason why this is important, because it sets the stage for Starlink. So putting that into context is very, very key. I just want to see what Bharti Airtel and RIL are doing as this news is come out. We know that Starlink is going to have a push, but to what extent it will be a challenger, if at all, to 2 large players is the question. Both stocks are down, but then so is most of the market. We'll take a very short break. We're coming back and we're telling you in the last half hour of trade how you should position yourself ahead of a weekend, especially in the face of so much uncertainty. All of that when we return.
इजी मेंटेनेंस है।
आपको मालूम है इसका फेस वॉश का खर्चा डबल है। तो देख मेरी आंखों के नीचे पहली बार तेरे को डार्क सर्कल है। एक मरे हुए मुर्गे में अगर जान डाल सकते हैं ना तो डिलिशियस बनेगा।
Friendship came first or the idea came first?
Abhay, he was my friend. We also had. Okay, this time. Actually, he landed in my office with this whole meat idea.
एक्चुअली बताया नहीं मैंने, शराब पी के इसको बोला था कि ये करना है।
So you have the conversation in his office. He doesn't take it too seriously.
इसको मैंने बुलाया घर आजा भाई, दोपहर को आया अपने महंगे वीसी वाले कपड़े पहन के। दरवाजे पे घंटी बजी, वो भैया ने इसको सोन पापड़ी के डब्बे में मटन पकड़ा दिया। इसके महंगे कपड़ों पे थोड़ा वो छलक गया। तो
Was it tough initially to get people to buy into the story?
I come from actually Dania vegetarian family and my parents, my dad said, मैं मतलब लोगों को क्या बोलूँगा?
The best thing is if a friendship survives a business pitch, I think that should be a true test of friendship.
हमने एक दूसरे को ये लिख के वादा किया था,
अगर बीवियाँ भी लड़ लें तो हम झगड़ा नहीं कर सकते।
मर जाएंगे पटनी घाटे।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
Markets under pressure, percent down odd on the Nifty, but having said that, it is holding. If I look at the last 2 trading sessions and the cuts that we have seen because of geopolitical issues, forget geopolitical, just the India-Pakistan conflict escalating and the concerns there, etc., etc., it's about 2.5% of cut. So not something that I would say is massively concerning looking at the scale of what has happened. But nevertheless, that impact is there and that concern will be there going into the weekend. Now here's a ground report though. Pakistan's reckless shelling has unleashed devastation in Uri this morning, reducing homes and shops to rubble as smoke rises from the embers. Here's an on-ground report from my colleague Shiv Arur.
After a night of one of the heaviest confrontations between India and Pakistan in the aftermath of Operation Sindoor, I'm standing here in Lagama village in Uri, where the first manifestations of Pakistan's escalation last night, as announced by the Indian Army this morning, is fully apparent. This is a row of shops that has been completely decimated in a direct shelling strike. Probably the worst damage that we've seen so far in our travels around Uri. And this happened late in the night at about 3 a.m. Once again, nobody was inside, but we hear there have been some injuries. There's still smoke rising from the debris of what were once 3 shops. A familiar, ghastly image of where the shells are impacting here near the line of control in Uri sector. But the damage is actually much worse. And I want to show you where else shells actually may have landed. There are ambulances moving to and from this place because there are so many injured people who constantly need to be picked up and taken to the hospital in Baramulla and further in the depth areas. But if you follow me down here, there are signs of even more damage because it is clear that there was more than one shell that landed last night. This is right in the middle of Lagama town in Uri sector, completely abandoned. Nobody's here anymore after last night. The first night gave them a false sense of security, thinking that, maybe the shells were either flying over their heads or not quite reaching this spot. But this is how far Pakistan is shelling even civilian areas. These images from Lagama town are worrying because this would make Lagama the 8th or the 9th village that NDTV has encountered personally in terms of the damage that we've been seeing personally here. This here is now on the mountainside, built here, a row of houses under construction here. This is all that's left here. Please look at this, viewer. We will not be turning our cameras away from the suffering of the people who live in these areas who never get to leave. This is all that's left. The familiar motif of mangled metal sheets, corrugated sheets that people use as roofs, firewood, chopped pieces of furniture, and the only remnants here, livelihoods completely destroyed. These were once shops over which someone was supposed to have built a house, we are told, and this is all that's left, just splinters of wood and metal, which has become almost like a representative image of what's happening to village after village here in Uri. 3 shells, 2 locations at a span of about 50 feet, and this is the damage. 2 nights in a row, the heaviest possible shelling hitting Uri as well. How long more is it going to go on? Will there be an escalation? Will there be a de-escalation? We don't know just yet. But on NDTV, we will not be turning our gaze away from what the people here in the line of fire are suffering on a daily basis.
All right, that was a ground report from Uri in Jammu and Kashmir. Now, here's the thing. All of these attempts have been thwarted. The extent of damage that the enemy has wanted to inflict, that has been thwarted by India, but nevertheless that uncertainty remains in the markets. Avinash Gorakshakar joining in on the conversation now. He's Director Research Profit Mart Securities. Avinash, great to speak with you. Kunal Shah, of course, continues with us. He's Senior Tech and Derivative Analyst, Mirae Asset Share Khan. Avinash, let me just come to you on how you are looking at the market response today. Market response in line, but it has not really, lost its bottom in a sense. We have not seen that kind of panic setting in. Would you stay away from creating any positions before Monday, or would you be looking at opportunities right now?
Yeah, good afternoon, Tamanna. I think clearly my sense is, this kind of fall definitely is not a good, development for the markets. But I think, looking at the kind of geopolitical developments, which have happened, I think, yesterday also we saw the VIX, increasing sharply. I think I read somewhere it went up to 21. So volatility has definitely increased, and that has obviously contributed to the decline today. See, I think in these kind of markets, it's very difficult to take a call whether one should stay invested for long term. But I think, these are the best times if one were to look at, building a portfolio, because even only in these worst kind of times, you get quality stocks at very good valuations. And I think this could be a good idea for an investor who wants to put a 2-year kind of portfolio, because typically any war will not last for a long period. In fact, the previous Kargil war lasted for about 2.5 months. So, taking that empirical evidence, a worst case scenario can be that we could see a war for say next 2 to 3 months. But after that, life will be back to normal. And unlike Pakistan, which is into a terrible economic mess, I think India stands strong. We are definitely well positioned, and I think we are confident that this too development will pass through. As far as the broader index is concerned, I think the markets are very clear. There's no panic because the investors are confident. I think today also I was just seeing the level of 24,000 on the Nifty has been maintained. I think, even if it doesn't maintain the level, I think fundamentally nothing is going to change for these companies. So I think, some sort of weird panic has not come in, and that is, clearly showing the maturity of the investors. So I think to that extent, anybody wants to take a call and even nimble at the current level can do so, provided he's got at least a 2-year kind of time frame, because good days will definitely come back. It's not the end of the world. I think these geopolitical developments are now something which we all have to face, and I think these bad times will also pass away.
Okay. Thanks, Avinash, for that viewpoint and calming the nerves a bit. Markets have been fairly resilient at a time like this, so extremely impressive. But let's discuss Titan, because numbers came out, and let's get a better perspective. Stock up 4% in trade. The bull versus bear case. Mihika making it. Mihika.
So we'll start with, Titan numbers did beat estimates. That's been reflected on the street as well. If you talk in terms of growth, you've seen on the bull side, revenue has grown 19% due to rising gold prices. However, the bear case for that, that one is high gold prices do continue to weigh on the overall consumer sentiment, making them hesitant to buy gold at higher prices. In terms of the studded jewelry, the studded and gold coins did see bio growth. However, the mix continues to decline as a part of the total. In terms of margins, they were slightly ahead of estimates for Titan in Q4. However, the margin improvement was not driven by any fundamental factors or cost controls. It was due to a one-off hedging gain. In terms of your net profit or your PAT growth, PAT grew 13%. This was in line with your consensus estimates. However, the PAT was impacted by higher finance costs, as well taxes, and as well as lower other income. And lastly, in terms of the brokerage views, on one end, we have something like Morgan Stanley that likes the management's focus on chasing market share rather than margins. However, Citi remains cautious because of the intense competition that prevails in the space.
Okay, stay on with us, Mihika, because it's a special day for those of you who have been watching Mihika Barve's work here on NDTV Profit. It is her last day today. One of the youngest members of our team, who's now moving on to study. The youngest. Moving on to study. Yes. And, we put together a little something for you, Mihika. Take a look.
NDTV Profit, my name is Mihika Barve.
So Mehika, that's a little bit of something that we put for you, and
thank you.
You are the kind of journalist you are. I think you will hope to see you back soon. On the newsroom floor.
Yes.
Mihika has been brilliant. Thanks so much, Mihika, and been a pleasure working with you.
All. Thank you for giving me the opportunity.
You've done so much at such a young age, so I'm sure you're going to go far, far, far. So wishing you all the very, very best.
Good luck with everything. So so as a member of our team, a little bit of inviting all of you into our celebrations this evening on NDTV Profit. But the story that she was talking about also important, which is Titan. I want to pull up Titan. I want to pull up a Kalyan Jewellers as well. On the kind of moves we're seeing. Titan, of course, a good set of numbers. The bull versus bear case is what you heard. Kalyan Jewellers also up. Remember, gold is coming off. Gold is coming off because the big cloud which was the tariff wars, seems like it may be easing. So, Avinash, I want to come to you first on some of those stocks that we're seeing, and let's start with your take on Titan specifically.
So I think inline numbers, I think clearly, the bigger trigger for Titan, as you rightly mentioned, is the, softening in gold prices. And I think that has really got accelerated after we heard that US has first signed its trade deal with the United Kingdom. I think as the tariff cloud, starts disappearing, I think, Tamanna, you're going to see the gold price correcting, because gold it actually started going up because of a lot of uncertainty. And I think once this uncertainty is out of the markets, I think gold prices will continue to go down. And that definitely means that, the pressure on gold jewelry companies, which earlier was there, is likely to be significantly reduced. So I think to that extent, I would not be surprised that the April to June quarter and the July to August quarter could be stronger kind of, time periods for both Titan as well as, the other company you mentioned, Kalyan Jewelers. Clearly, demand has been growing, and I think once the companies have a good handle on the gold prices, I think you could see again volume growth kicking in. But definitely, I think people are going to buy gold. They are going to buy gold ornaments, and to that extent, I think companies which are very well positioned in the private organized sector will continue to do well. I think, of course, Titan will be a compounder. I think since it's a large player in this space, one can't expect multi-bagger returns, but yes, I think it's a blue chip kind of stock, very solid kind of business positioning, and a very good premium strategy which they have followed. So I think net, numbers have been in line. The markets would obviously await for the April to June quarter, which I think would be a much better quarter compared to the fourth quarter of this financial year.
Liking Titan, Kunal?
I think Titan, after a good correction, what we have seen in the stock from the higher levels, finally we have seen the momentum coming back. The recent swing high with the stock had made of 3,400 has been taken out decisively. So you can expect this to move further higher towards the mark of 3,630, which is the next resistance zone for the stock.
Okay. Stay on with us, of course. I just want to revisit the story that we're talking about, which is a big push that TRAI has given for global satellite players. Remember, global satellite giants are now seeking India spectrum for access services, including companies like Starlink, Kuiper, OneWeb, who will compete with mobile and FWA players in India. They're eyeing Indian market, and as the spectrum demand is rising. Now, let me go across to our speaker, who's talking about the importance of this, Mr. Satya N. Gupta joining us. He's ex-principal advisor TRAI. Mr. Gupta, thank you so much for speaking with us. Just put into context how important this push is and the notification which has come from TRAI.
Yeah, Tamanna, let me be frank that I have not seen the notification, but if you can explain to me what it contains, then yeah.
May I suggest, sir, that you take a look at it and then we come back and have this conversation?
Yes, I think that will be better. If you can explain the context.
All right. Let's not get ahead of ourselves. But, Avinash, just want to get your sense, because a darling of the street has also been your telecom stocks. And today, of course, notification from DOT on being on high alert. Telecom, banking system, these are the ones which need to be on high alert when India is perhaps under this kind of an attack. What do you think of the entry of a Starlink? At one point, it was a big fear for both Bharti Airtel and RIL. Do you think that's receded now?
No, I think, customers will get a better choice, Tamanna. But I think in terms of the competition, I think it will take a long time for them to actually position themselves very strongly against existing players like Jio or Bharti Airtel. So I think, it's only a matter of time, but I think it's not going to be easy for them. The local players are well positioned here. My sense is that, initially it would be a soft entry. And I think as the service gets well accepted and customer base increases for the foreign players, then I think it could pose a kind of a more stronger competition for the local players. But net, I think it's a good development. It means the Indian market is now very vibrant. I think a lot of foreign companies are interested in investing in the Indian market. So I think net, it's good for the customer. The customer will obviously gain, because I think pricing will continue to be quite competitive and there would be wider choices. But to tell you what could be the financial impact of this new competition, I think it would take a slightly longer time, at least a couple of years before we see that getting into the margins of the existing players.
I want to also switch tack, largely stick with consumption. Probably we've spoken about Titan, we've spoken about Kalyan. Avinash, what's the sense like with regard to what's your read like with the Pidilite? What's your read like with the Cera Sanitary, where they came out with numbers as well? What's your read like with the Britannia? All within that larger theme of consumption. What are trends that you're spotting and what are pockets of value that you're seeing within that space?
No, I think, Harsh, if you look at Britannia numbers, very disappointing numbers. I think these kind of numbers are not going to excite the market. And I think valuations for Britannia are not cheap. They are fair to expensive. So I think, markets could possibly at best consider that maybe the April to June quarter, possibly once the rural demand kicks in, we have a good monsoon. The rate cuts which have been announced, the consumption kind of, bet which the government has put in the budget, those kind of things could trickle down in a better volume growth. Because if you see these numbers, a 2% growth in the top line, 4% growth in the profit, I think these are not going to excite the markets. So I think, Britannia may remain in a range and it's not worth looking at it at the current level. But I think, there are some companies which you mentioned, the Cera Sanitary Ware. This is a very well-established player in the sanitary ware market. It's a very critical part of the building products, segment. So I think, here definitely a lot of infrastructure construction activity has been picking up. And to that extent, I think definitely the April to June quarter could be good. I think to add to this stock, recently Varun Beverages also announced their results. They also categorize as a consumption bet. Very strong numbers. In fact, top line growth of almost 17-18%, bottom line growth in excess of 19-20%, and very strong numbers. For them, April to June also is supposed to be a very busy quarter because they normally sell most of their colas during the summer months. So I think clearly these are some companies where I believe the year that is 26 could be a strong year. I think looking at the fact that now the market is volatile and a little choppy, one could look at accumulating these companies, if one were to look at the next 12 to 15 months.
Okay, so Nifty mid cap, Nifty small cap. I want to quickly mark both of those at the day's high. Nifty mid cap has turned green, which is a key positive. But both of those indices on our radar, a full recovery made in that sense, at least on the Nifty mid cap. So we're looking at positives from the market today. But the other one is Biocon. The pharma major announced a good set of fourth quarter numbers. Profit, revenue, both have beaten estimates. Varsha here with the details. Varsha.
So yeah, good set of numbers. Profit did beat estimates. If you see the revenue growth, which was led by biosimilars and generics actually had a very good growth in Q4. But the robust, if you see the profit is up 155%. Now there are reasons for that. There's been exceptional gain, which has aided net profit, and lower taxes also helped this growth in net profit. They have approved fundraise of rupees 4,500 crore through issue of securities. And if you see, they were Biocon Biologics, one of their segments was expected, they were expecting an IPO, but now due to the current market conditions, maybe Biocon Biologics will be merged with Biocon. So yeah, overall good set of numbers. They're expecting good launches in FY26, which will help revenue growth for all the three segments, followed by EBITDA margin.
Okay, thank you so much for that, Varsha. Good getting perspective. Avinash, let me come straight to you before I take a technical view from Kunal. I know you've been waiting by. Kunal, thanks for waiting by patiently. Biocon and the pharma basket, are you positive? How do you look at it? A bulk of the numbers still awaited, and therefore, what are you expecting?
So I think my guess is, the numbers should be in line with expectations, Harsh. But I think what is the commentary and what kind of outlook the company shares? Because even as of now, on the tariff side, there's been no clarity on the domestic pharma companies. And I think, almost a large chunk of companies in India export to the US market. So I think my guess is that numbers more or less have been partially discounted by the markets, unless, of course, there's a very big negative surprise in the numbers. But overall, I think what kind of commentary comes for the coming financial year and what is the business outlook? Because a lot of exports now would be under scrutiny. And I think unless the tariff issue is completely resolved, I would not be surprised that the stock may remain under pressure and obviously remain in a close range. So till that time, I think it's better to be, better to keep it on hold. I think fresh buying from my side would not be advisable.
Kunal, your view with regard to this consumption space, I know I'm again shifting tack to consumption, but some of those names really buzzing in trade and some of them reacting on the back of earnings, not a bad reaction on any of those. Do you have a view on any of the consumption names?
If we look at the Nifty consumption index, firstly, so the consumption index has been facing resistance at the 200 DMA, which is paid at 11,500. We are not able to surpass that. We consolidated around that mark of 11,400, 500. But post that, we have seen a breakdown on the lower end. Now, again, like Nifty, we have seen the first breakdown today. Follow-up selling is required in order to get a confirmation on the downside for the consumption space. So at the current level, nothing looks very attractive for consumption. We'll wait for a breakout for the index above the 200 DMA, and probably then you would get some buy ideas coming from the consumption space.
So how are you positioning yourself for Monday, Kunal? BTST, STBT ideas?
See, I'm positioning for a BTST idea on a Monday trading session, and it is from the cash market. The stock name is PID Perry. Already we have seen a good amount of buying interest from the lower levels. The stock has been taking support at the 20 days and the 40 days exponential moving average. We have seen reversals from those levels, so one can initiate a long. Keep a stop loss of 820 and look for targets of 860 to 870 on the other end.
Kunal, I'll stick with you. Mahindra Finance, stock under pressure. It's a news reaction. It's a news-based reaction as well. But tell us, what are you seeing on charts with regard to this one?
See, the chart is already showing you a lot of weakness from the year 2023, that is on July. We have seen the stock going into this consolidation phase. There were multiple supports which were taken around this mark of 245, 240 zone. In technicals, it said the more the support has been tested, the higher the chances it will get break on the downside. So similar is the case for M&M Finance. Distribution is visible at higher levels, and we expect this to break on the downside. So the view is negative. 240 is an immediate support. A break below 240 will accelerate the selling pressure towards 200.
Right. Avinash, these clutch of NBFCs and several of them benefiting from tailwind of various sorts. Some tailwind with regard to asset quality, especially in MFI. Some hopeful tailwind with regard to unsecured as well within the asset quality basket. Growth as well might likely pick up. Cost of funds will come down. And then you have a fundraise from an M&M Financial Services. Stock reaction is not good. What's your take with regard to both the raise as well as NBFCs in particular? Is there a way of playing it?
Yeah, I think, my guess is that NBFCs will definitely benefit from the rate cuts announced by the RBI. I think, within this pack, we like companies like Shriram Transport. I think, they are a large player to the commercial vehicle sector. My sense is that we still like to avoid the microfinance companies. Maybe for a couple of quarters, the cycle may still take some time to stabilize. As far as M&M is concerned, I think, it largely operates in the agri segment. So, this dilution which market, has seen is possibly to fund a large part of their agri kind of, funding business. So typically, I would say that, here the reaction today is little surprising considering the fact that in the previous con call, they had committed that asset quality, loan growth would be definitely be better. I would be looking forward to the numbers for the April to June quarter from M&M Finance, because we believe that agri exposure is definitely much more safer. There are not many now bad debts which are being incurred by the company, and I think a lot of provisioning has already been done. So I think this funding will actually give them a big boost. Of course, we'll have to see how the April to June numbers come up. But Shriram Finance could be a good bet. I think the levels at which it has come in, and hopefully there is a turnaround and there is a revival in the commercial vehicle volumes. That could possibly be a big trigger point for Shriram Finance. So I think, clearly longer term, I think this business has got a good sustainable kind of potential. So we are positive. We have been very constructive on both Shriram Finance as well as M&M Finance.
Since we're talking about the space, I just want to pull up the stock of Yes Bank. Yes Bank and State Bank of India, actually. Let's pull up both of them. The Yes Bank at the day's high over the 20 rupee mark, SBI at the day's high as well. Now, here's what's happening. The company may have finally inked a suitor in a massive Japanese finance company who could be purchasing up to a 24% stake in Yes Bank. This is good news for State Bank of India, who was roped in to bail out Yes Bank when trouble hit a few years ago. Just put this into context for us, Harsh. Why this excitement about the Yes Bank stock? Because talks of HSMC coming in were on for a while.
They have been on for a while, but today it seems like that we're closer to finalization. The talks that have been ongoing haven't really enthused the street in a solid fashion. Today, it seems like there is more credible evidence of that coming through. The big one, of course, is the fact that SBI owns around 24% in State Bank. SBI owns 24% in Yes Bank, and so do some of the other banks. So I'll just list it out. And LIC had also has around a 4% stake, and HDFC Bank has around a 2.75% stake. ICICI Bank 2.4%, Axis and Kotak around 1 to 1.2%. So those are the other major banks with stakes, and this somewhere vindicates the fact that a Yes Bank looks good even at these levels. That's point number one. And point number two, that a recovery in terms of the Yes Bank business as a whole might well be underway and could be a positive. And Avinash, let me take it to you with regard to your view on this likely development. That's one. And second, with regard to how you view Yes Bank therefore.
No, I think this is definitely a positive development. I think the markets were waiting for a very long time, and I think clearly once MNC suitor comes in, I think there could definitely be a change in perception, because for a very long time Yes Bank had suffered significantly. My sense is that definitely an MNC bank comes in, that will definitely improve the profile of their positioning, not only in the domestic but even in the global market. And as you rightly pointed out, the numbers which came out for Q4 have also been quite good. So I think much better than what the street expected. Asset quality levels have also now come to measurable levels. So all said and done, I think the stock will definitely has reacted by 10% today. Going forward, once the formal announcement comes in, then I think there could be a normal open offer for the other existing shareholders. And I think probably we'll have to see how that goes forward, because the market price is 20, and what kind of offer price does the new suitor offer to the investor is going to be a very critical element. But net, I think it's going to be good. I think SBI has also improved, because for them also, they make a decent ROI on their investment, what they invested in Yes Bank initially. So the market is quite positive on SBI, considering the fact that it could obviously make a decent kind of gain by selling their shares to the new suitor. So net, it's positive. I think going forward, we'll have to see some more commentary from the management.
Okay. One top call, Kunal, you want to give us before we wrap up? Anything that you would buy?
Yeah, I think at the current levels, market could be volatile. I think overnight positions carrying is risky at the current levels. But one stock I would like to highlight over here, again from the defense space, and that would be Bharat Forge. Looking strong on the technical charts, giving a breakout of
Bharat Forge has actually been one winner through the day. All right, we're wrapping up this week, and what a week it has been. Frankly, if you pull up the weekly chart, you see the volatility in the last couple of days. But Harsh, the index, much like the nation, has shown resilience, I would say. Those,
no, definitely. I mean, it's been impressive, frankly.
Yeah. Those missiles of uncertainty have hit, but held on above the 24,000 mark. Not bad at all for the Nifty. Yes, you've seen a cut of about 1%. It's been a volatile kind of day. Let's pull up the day's chart as well. The Bank Nifty also seeing that pain. So after that big drop in the morning, you have seen some bit of recovery. The advanced decline ratio is just what I want to see very quickly before I get to the heat map, and then of course Harsh will take you through the rest of what the market's been looking like. Advanced decline ratio showing that pain, 1400 to about 800 odd stocks, but narrowing towards the end. No big 3 o'clock drop, at least for today, unlike what we saw in the last couple of days. I also want to pull up the Nifty heat map before I hand off, and we can see how the day has closed. ICICI Bank feeling a bit of pain. Power Grid has been languishing here for a while, maybe because of the vulnerabilities of where its installations are placed. That could be one reason. Grasim Ultratech feeling the heat, but look at a Titan. Good results and has definitely been rewarded for it. Larsen & Toubro doing well. The US-UK deal giving Jaguar Land Rover some boost, and that's why Tata Motors is up. Bharat Electronic, SBI and Yes Bank, of course, is its own story, which we've discussed in great detail. But the story of the day, Harsh, is unequivocally defense stocks, isn't it?
Yes, defense stocks, PSU banks. Let's pull up sectors. That will give us a flavor of how those two played out. 1.5% on PSU banks, that's the big positive. 1% on consumer durables as well. So that index also doing fairly well for itself. But defense, of course, sector of the day for sure. 3% higher, and we had Anushi do a really good wrap on what to expect in terms of defense. The story is evolving. Where the Nifty Realty is concerned, that's the big loser of the day, 2.5% lower. Really no complaints there. Some bit of pessimism creeping in. Small cap stocks also as part of that basket. Let's look at the Nifty mid cap and small cap as well. Now Nifty mid cap is the place which really stood out in trade. We saw a very solid recovery. We've closed in the green where the mid cap index is concerned on a day like this. Truly telling. And that kind of reflected on the advanced decline which Tamanna highlighted as well. The Nifty small cap as well, near the day's high, and also we saw a bit of a recovery in the last hour or so of trade on the Nifty small cap. So the broader markets seeing a bit of a recovery, which was a key positive. If we can quickly highlight how the week has gone by, because what we should or we ought to do is zoom out a little bit. We've had so many developments through the week, and that's how we have fared for the week. 1.7% lower, not bad at all.
Yeah, less than 2%.
Correct.
All in the last couple of days, frankly, that we have been seeing.
Correct. If you can keep this coming, the Nifty Bank, the Nifty Mid Cap, and the Nifty Small Cap, is kind of to sum that piece up. That's how the Nifty Bank has fared, around again nearly 3% lower. The Nifty Mid Cap down just 1.3%, not bad at all, and the Nifty Small Cap down just about 2%. So that's how we fared. Last off, BSE 500 top gainers, top losers. Before we go to what to watch out for, those are some names. Some of them no surprise, frankly. A Welspun Living, a KPR have done well all through the week, given the India-UK DTAA, the India-UK, I beg your pardon, FTA. Yes Bank up 10% odd. Sonata was one of those. Polymed also declared numbers this week. We saw decent rise in the stock price. We've seen a bit of a correction last couple of days. MCX correcting on the back of numbers again. So those were some names. But let's pull up what to watch out for, because it's going to be, of course, a heavy weekend where India-Pakistan is concerned. Maybe, but you've also got some other macros to look out for, and those are on the Indian side in terms of macro. But yes, those are some indications from the global perspective as to what could play out.
I don't know who's looking at the Canada unemployment rate. Frankly, the biggest thing to watch out for this week and this weekend is what happens in the next couple of days, what happens tonight. Is there going to be a further escalation? Do both nations tone down? If you see a tone down by Monday, expect a huge bounce up, but things could go either way. Frankly, at this point, I mean, our job is to cover markets, so we're doing that. But, there's a bigger battle out there, which we're all cheering for.
Yes.
Yep, absolutely. So with that, it's a wrap on India Market Close from Harsh, me and the team that put the show together. Thank you so much for watching. Stay tuned. All the news and updates are right here. We have a briefing from the Ministry of External Affairs at 5:30 p.m. Remember, right here on the NDTV network, we're only reporting official and facts that have been verified. So watch out for that briefing in about a couple of hours.
मेंटेनेंस है।
आपको मालूम है इसका फेस वॉश का खर्चा डबल है। तो देख मेरी आंखों के नीचे पहली बार तेरे को डार्क सर्कल है। एक मरे हुए मुर्गे में अगर जान डाल सकते हैं ना तो लिशियस बने।
The friendship came first or the idea came first?
Abhay, he was my friend. We also had.
I was.
Okay, this time. Actually, he landed in my office with this whole meat idea.
Actually, मैं बताया नहीं, मैंने शराब पी के इसको बोला था कि ये करना है।
So you have the conversation in his office. He doesn't take it too seriously.
इसको मैंने बुलाया घर आजा भाई, दोपहर को आया अपने महंगे वीसी वाले कपड़े पहन के। दरवाजे पे घंटी बजी, वो भैया ने इसको सोन पापड़ी के डब्बे में मटन पकड़ा दिया। इसके महंगे कपड़ों पे थोड़ा वो छलक गया। तो
Was it tough initially to get people to buy into the story?
I come from actually Dhania vegetarian family and my parents, my dad said, मैं मतलब लोगों को क्या बोलूँगा?
The best thing is if a friendship survives a business pitch, I think that should be a true test of friendship.
हमने एक दूसरे को ये लिख के वादा किया था,
अगर बीवियाँ भी लड़ लें तो हम झगड़ा नहीं कर सकते।
मर जाएंगे पटनी घाटे।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Easy maintenance है।
आपको मालूम है इसका फेस वॉश का खर्चा डबल है। तो देख मेरी आंखों के नीचे पहली बार तेरे को डार्क सर्कल है। एक मरे हुए मुर्गे में अगर जान डाल सकते हैं ना तो लिशियस बने।
The friendship came first or the idea came first?
Abhay, he was my friend. We also had.
I was.
Okay, this time. Actually, he landed in my office with this whole meat idea.
Actually, मैं बताया नहीं, मैंने शराब पी के इसको बोला था कि ये करना है।
Hello and welcome to Market Express, your half-hour pit stop for everything you need to know from the world of markets to big national and international developments. I'm your host Himakshi Bahugna. Now let's get straight into the show. Viewers, Sensex drops over 800 points. Nifty down 1% amid India-Pakistan tensions. The Nifty Bank fell 1.55% to its lowest level since April 17. ICICI Bank is the top laggard in the index. Nifty falls over 1% for the week, dragged by Asian Paints and Sun Pharma. Sensex falls over 1% for the week. Nifty Midcap 150 fall 0.8%, nearly 1% for the week, dragged by Godrej Properties and Indian Hotels. Nifty Small Cap 250 falls over 2% for the week, dragged by Jindal Saw and Sonata Software. Titan reported strong Q4 results with a 19.4% year-on-year revenue growth to 14,916 crore rupees and a 29% surge in EBITDA to 1,537 crore rupees, boosting margins to 10.3% from 9.5%. Now, net profit also rose 13% to 871 crore rupees. Titan plans to add 40 to 50 new Tanishq stores and revamp 50 to 60 existing ones in FY26, targeting 15 to 20% revenue growth and 11 to 11.5% EBIT margins. Gold loans rates are also stabilizing down to 70 to 80 basis points, while lab-grown diamond prices continue to decline, impacting wholesale and retail markets. Bharat Forge reported a muted fourth quarter earnings. Bharat Forge is up over 5% today. Now, this comes on the back of a statement by the CMD Baba Kalyani to a media channel that his team has been called to Delhi to meet PM Modi. Now, this has sparked interest in the company as they are one of the largest defense manufacturers in the country. Construction giant L&T's fourth quarter numbers met street estimates. L&T posted a robust quarter 4 with revenue up around 11%. Revenue was also driven by strong international order inflows despite softer domestic demand. Now, EBITDA rose 13.4% and margins improved to 11%. Net profit also surged 25%. FY25 revenue growth beat the 15% guidance and order inflows jumped 18%, surpassing the 10% target. Now, looking ahead, L&T raised its FY26 core EBITDA margin guidance to 8.5% and projects 15% revenue growth. Now, this is backed by a 60% jump in its order prospect pipeline. Rupee closes stronger against US dollar, settles 34 paise stronger at 85.38 against US dollar. Pharma major Biocon announces a strong set of fourth quarter numbers. Profit and revenue beat estimates. Biocon's revenue surged 13%, fueled by robust growth in biosimilars and in generics. EBITDA climbed 18%, while margins expanded to 24.4%. Now, net profit also soared 155%, boosted by an exceptional gain and lower taxes. Now, the company also greenlit a 4,500 crore rupee fundraise through securities issuance, signaling strong growth ambitions. Sula Vineyards is suffering a bit of a hangover in the fourth quarter. Falling sales and muted profits were the result of the weak demand in cities. Now, there were fewer exports as well. Retailers in Uttar Pradesh and Uttarakhand reduced stock in anticipation of new excise rules. Premium wine sales fell 3%. And budget wine sales dropped 4.5%. Wine tourism, though, grew 24% thanks to the Sula Fest 2025 and strong resorts business. Morgan Stanley keeps an equal weight rating on Tata Motors with an 853 rupee target. A UK-US trade deal allows JLR to export 1 lakh cars to the US at a 10% tariff. A relief since competitors have US factories. JLR's US sales jumped 28% in FY25, boosting its North America share to 29%, offsetting weak China sales. Now, the 1 lakh car quota covers current US sales, but future growth may face a higher 25% tariff. China remains a tough market for the auto player. Asian Paints reported a lackluster fourth quarter. Consolidated revenue is down 4.3%, missing estimates. EBITDA fell 15%, and margins are contracted to 17.2% from 19.4%. Net profit also slumped 45% to 692 crore rupees, well below the 1,075 crore rupees forecast. Now, the company noted stronger performance in industrial paints compared to decorative, with volume growth at 2.1% and value growth at 1.4%. Asian Paints is planning 2 new plants for white cement and emulsion and has opened a 1 lakh square feet design center in Mumbai. However, it expects subdued demand in quarter 1 and remains cautiously optimistic about the outlook. Some relief on the FMCG front as Britannia's fourth quarter numbers beat estimates. This is majorly on the back of lower employee cost. The revenue of the company is up 9% at 4,400 rupees. Margins have expanded 18% versus estimates of 19%. The company has also recommended a final dividend of 75 rupees per share. Macquarie maintains an underperform rating on Britannia with a target price of 4,600 rupees. Now, they estimate an 8% underlying volume growth for quarter 4, but await clarity on EBITDA margin trends. Input costs show healthy corrections recently. Canara Bank's quarter 4 results reveal a slight dip in the net interest income year-on-year, but a strong surge in other income. Operating expense edge up marginally, while operating profit sees solid growth. Lower provisions drive a significant rise in net profit compared to last year. Swiggy is a counter in focus as the company is set to publish its fourth quarter earnings later today. Analysts expect food delivery segment to see degrowth in the gross order value, while losses could persist or widen due to heavy quick commerce investments. REC ends this quarter with a mixed bag of numbers, with net interest income and profit growth in line with estimates. Profit rose over 5% on a year-to-year basis. Speaking to NDTV Profit, the management said that they are trying to bring down the cost of capital and will also reduce non-performing assets. White Oak Capital's Ashish Somaiya flags financials, healthcare, consumer discretionary as key overweights. Now, Somaiya further cautioned that even though domestic conditions have improved, investors should remain prepared for potential volatility ahead. Pidilite Industries reported a mixed Q4 with consolidated revenue up 8%, but slightly below the street estimates. EBITDA also rose close to 10%, but elevated marketing spend kept the numbers below estimates. Net profit also jumped over 40%, and the company delivered healthy volume-led growth with overall volumes up about 10%. Domestic subsidiaries also posted double-digit growth with high rural demand outpacing urban. Pidilite remains cautiously optimistic, projecting double-digit volume growth for FY26 with a capex at 3 to 5% of revenue. The company also reported strong double-digit growth in Bangladesh and aims to further drive South Asia, buoyed by robust consumer demand. Z5 saves the day for Z Entertainment in a sports-dominated quarter. Despite the media company's overall revenue dropping 11% over the previous quarter and 24% over the last year, ICICI Securities maintains a buy on the stock. ICICI Securities has set the target price of 185 rupees on the stock. Kalyan Jewellers posted fourth quarter numbers that met street estimates. Robust same-store sales growth drove up both revenue and profit by 36%. Revenue from studded jewelry surged by 48%. Motilal Oswal maintains a buy rating and sees a 22% upside on the stock. Pharma major Dr. Reddy's Labs is expected to announce its fourth quarter earnings today. Revenue is expected to rise over 15%, while EBITDA is projected to rise by 24%. Now, the growth in revenue is likely to be driven by biosimilars and key launches in India. The company's US sales is also expected to grow by 3% over the previous year due to muted sales of its cancer drug. Profit is expected to rise by 11%. State Bank of India and Yes Bank are set to hold crucial board meetings today to discuss a potential stake sale to Japan's Sumitomo Mitsui Banking Corporation, that is the SMBC, according to sources. Now, SMBC is eyeing a minority stake in Yes Bank, marking a cautious step toward a larger deal. Any agreement hinges on mandatory approval from the RBI before an open offer can be announced, now signaling a pivotal moment for Yes Bank's ownership structure. Stock exchanges NSE and BSE are on high alert, actively monitoring for cyber threats amid escalating tensions between India and Pakistan, sources have reported. Now, both exchanges are operating in round-the-clock enhanced vigilance mode, with recent discussions among market infrastructure institutions focusing on preparedness. Advisories have also been issued to trading members, underscoring the exchange's proactive stance to safeguard market operations against potential cyber risks. Now, we are learning that India at the IMF meet today. Will India likely to urge to exercise caution on bailout package to Pakistan? Remember, the second installment of $7 billion loan to Pakistan will be discussed today. Now, in this press briefing yesterday by Foreign Secretary Vikram Misri he said that directors in the World Bank will put out this point to reconsider that Pakistan should be funded or not. Loans worth $2.3 billion will be discussed today at the World Bank meet. IMF has already given clearance for loans last month itself. The Indian Telecom Department demands telcos like Jio, Airtel and Vodafone Idea ensure 24/7 network uptime amid India-Pakistan tensions. Operators must report potential downtime in Delhi NCR and maintain fuel backups like diesel generators if grids fail. Now, inter-operator call routing, that is the ICR, is activated for emergencies, and war rooms are scaled up with engineers on high alert. Telcos are instructed to notify the government of any disruptions. The Telecom Regulatory Authority of India is rolling out a bold framework to boost satellite internet, aiming to bridge the digital divide. Now, the non-geostationary orbit operators will pay 500 rupees per user annually in urban areas, while rural users are exempt. Spectrum fees are set at 4% of the adjusted gross revenue, or a minimum fee, whichever is higher, with a 5-year validity extendable by 2 years. A 30-day exit window allows operators to surrender spectrum, and the government may enforce coordination distances to resolve the disputes. Now, TRAI also proposes a unified license for all satellite telecom services, with global players like Starlink, Kuiper, OneWeb, Cestio and Telesat vying for spectrum to compete with terrestrial, mobile and fixed wireless access. TRAI also emphasizes a fair auction process to ensure a level playing field. Basmati rice prices in India have surged up to 10% in the past 2 weeks, driven by heightened India-Pakistan tensions. West Asian nations like the Saudi Arabia, Iran and Yemen are boosting imports, fearing supply disruptions, while US buyers are stocking up ahead of the potential tariff changes. Chandigarh bans hoarding of essential commodities amid India-Pakistan conflict. Chandigarh has prohibited hoarding of rice, wheat, sugar and fuel under the Essential Commodities Act. Traders must declare their current stock to the Department of Food and Supplies within 3 days. Chandigarh has imposed the ban on hoarding to safeguard public interest and maintain smooth availability of essential goods in the wake of these tense situations, according to a government notice. Manufacturers who have plants in Punjab, Rajasthan and Gujarat, which border Pakistan, have issued detailed do's and don'ts and also advised factory managers to follow the security protocol. Companies in these areas have issued safety advisories and asked employees to work remotely wherever possible. India's leading corporate houses as well as multinational companies have issued safety advisories as well. Oil marketing firm BPCL has awarded contracts to develop 100 megawatt wind farm projects. The company issued letters of award to Suzlon Energy for a 50 megawatt wind project in Madhya Pradesh. It has also issued a contract to Integrum Energy Infrastructure for a 50 megawatt project in Maharashtra. Both projects are expected to be completed and commissioned within 2 years. World Bank President Ajay Banga dismissed media speculation about the institution's involvement in the Indus Waters Treaty, asserting that its role is solely as a facilitator. We have no role to play beyond a facilitator. There's a lot of speculation in the media about how the World Bank will step in and fix the problem, but it's all bunk. The World Bank's role is merely as a facilitator, unquote. So, Mr. Banga said this on Indus Water Treaty suspension. Under cover fire by Pakistan Rangers, terrorists attempted to infiltrate Samba district in Kashmir, but India's border security forces neutralized the infiltration attempt and created extensive damages to a Pakistani post. Over 400 flights are cancelled and 24 airports across the country were shut on Thursday. This comes amid escalating tensions between India and Pakistan after the latter launched fresh missiles and drone attacks in the Indian territory. Airports that have been closed includes Srinagar, Jammu, Leh, Chandigarh, Amritsar, Ludhiana, Patiala, Bhatinda, Halwara, Pathankot, Bhuntar, Shimla, Gaggal, Dharamshala, among others. Now, several Indian airlines have also issued travel advisories urging passengers to plan accordingly and cooperate with the enhanced security checks. The Ministry of External Affairs, along with Wing Commander Vyomika Singh and Colonel Sofia Qureshi, will brief the media today at 5:30 p.m. Now, it is expected that they will give the latest updates on what happened last night and how has India retaliated on it. Cardinal Robert Prevost has been elected as the first US-born pontiff and will be known as Pope Leo XI. 6:14. Now, Leo made his first remarks as Pope from the balcony of St. Peter's Basilica in front of tens of thousands of onlookers, calling for peace and paying tribute to the late Pope Francis. The European Union's executive arm said that it would launch a dispute with the World Trade Organization over the US reciprocal tariff policy and duties on cars and car parts. Now, the European Commission further said that it had launched a public consultation on countermeasures targeting US imports worth 95 billion euros to be implemented if a trade deal is not reached with Washington. US President Donald Trump has suggested that tariff on Chinese goods may be reduced ahead of a high-stakes meeting between top trade officials from both nations. Now, speaking at the unveiling of the tariff deals with the UK, Trump referenced the import taxes of up to 145% on China, stating that you can't get any higher. It's at 145, so we know it's coming down. The upcoming Switzerland meeting is being viewed as the strongest indication yet that Washington and Beijing may finally de-escalate their trade war, which has rattled financial markets globally. Vladimir Putin has led Russia's Victory Day commemorations with the parade in Red Square and heightened security after days of Ukrainian strikes targeting the capital. China's Xi Jinping joined Putin as he told thousands of soldiers and more than 20 international leaders that Russia remembered the lessons of World War II. For the first time, a column of trucks carrying various combat drones took part in the Victory Day parade, apparently because of their wide-scale use in Ukraine. Well, viewers, that's a wrap on Market Express, but stay tuned to NDTV Profit as there's more lined up ahead on the other side.
इजी मेंटेनेंस है।
आपको मालूम है इसका फेस वॉश का खर्चा डबल है। तो देख मेरी आंखों के नीचे पहली बार तेरे को डार्क सर्कल्स हैं। एक मरे हुए मुर्गे में अगर जान डाल सकते हैं ना तो लिशियस बने।
Friendship came first or the idea came first?
Abhay, he was my friend. We also had. Okay, this time. Actually, he landed in my office with this whole meat idea.
एक्चुअली से बताया नहीं मैंने शराब पी के इसको बोला था कि ये करना है।
So you have the conversation in his office. He doesn't take it too seriously.
इसको मैंने बुलाया घर आजा भाई, दोपहर को आया अपने महंगे वीसी वाले कपड़े पहन के। दरवाजे पे घंटी बजी, वो भैया ने इसको सोन पापड़ी के डब्बे में मटन पकड़ा दिया। इसके महंगे कपड़ों पे थोड़ा वो छलक गया। तो
Was it tough initially to get people to buy into the story?
I come from actually a Baniya vegetarian family and my parents, my dad said, मैं मतलब लोगों को क्या बोलूँगा?
The best thing is if a friendship survives a business pitch, I think that should be a true test of friendship.
हमने एक दूसरे को ये लिख के वादा किया था,
अगर बीवियाँ भी लड़ लें तो हम झगड़ा नहीं कर सकते।
मर जाएंगे पटनी घाटे।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
इजी मेंटेनेंस है।
आपको मालूम है इसका फेस वॉश का खर्चा डबल है। तो देख मेरी आंखों के नीचे पहली बार तेरे को डार्क सर्कल्स हैं। एक मरे हुए मुर्गे में अगर जान डाल सकते हैं ना तो लिशियस बने।
Friendship came first or the idea came first?
Abhay, he was my friend. We also had.
The Nifty falls 1.4% over the week, while the Sensex drops over 1%. Nifty Realty is the top sectoral loser, declining nearly 7% during the week. As India-Pakistan tensions rise, the NSE and the BSE are strengthening their cybersecurity measures. Both exchanges are operating round the clock in enhanced vigilance mode to protect against potential cyber threats. April data from the Association of Mutual Funds in India shows that net inflows into equity mutual funds have fallen for the fourth straight month, largely due to market uncertainty over potential US tariffs. However, despite the decline, equity mutual funds have continued to see positive inflows. As India-Pakistan tensions rise, the nation is reinforcing defense and emergency preparedness. The defense minister reviews border security alongside top military leaders, including the Chief of Defense Staff and Tri-Forces chiefs. The State Bank of India will sell 13.19% of its shares in Yes Bank to Sumitomo Mitsui Banking Co. The BCCI in India, in a statement, says the 2025 edition of the IPL has been suspended for a week following heightened tensions between India and Pakistan. Sources say satellite communication companies like Starlink, Eutelsat, OneWeb and Jio will now be required to pay 4% of their adjusted gross revenue as spectrum fees to the Indian government. This fee is higher than what these firms had requested for. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Along the next half an hour, we're going to bring you the latest on markets as well as national and international news. So let's dive right into it. As India-Pakistan tensions rise, the NSE and the BSE are stepping up cybersecurity measures, operating round the clock in enhanced vigilance mode to safeguard market integrity. Both the exchanges have issued critical advisories to trading members, reinforcing their commitment to protecting India's financial infrastructure against potential cyber risks. Let me quickly go across to my colleague Charu for more details on the measures that are being taken. Charu, over to you.
Let's look at the stories in three parts. Firstly, the major exchanges in India, that is the Bombay Stock Exchange and the National Stock Exchange, have come out with advisories for their trading members. But what we have exclusively found out is that they are among themselves and their senior officials are also on the vigil 24/7 and they are looking if there is any cyber threat in the environment. Apart from that, one of the depositories has also released an advisory for its depository participants only, which is not in public domain, and they have mentioned that they also need to fix any gaps that are there and have to be very vigilant against any sort of misinformation and cyber threats. Apart from this, on the market regulator SEBI side, some sources have told us that most of the work has to be done from the exchanges side and any vigilance that requires needs to be established from the exchanges side mainly. But there have been some basic level mock drills and advisories on misinformation and cyber threats given to them. Apart from this, NDTV Profit also previously reported that the access of foreign individuals towards the exchange websites has been restricted amid the geopolitical tensions that are rising up. So let's see how it further escalates.
Right, and in connection with this, to strengthen cybersecurity in the financial sector, Union Finance Minister Nirmala Sitharaman will chair a review meeting today, this evening actually, to assess the preparedness of banks and financial institutions. The meeting will include representatives from key public and private banks. My colleague Shrimi joining us on the phone line to provide a preview of the meeting's agenda and key participants. Shrimi, over to you.
Yeah, so FM will chair a review meeting on cybersecurity preparedness of banks and financial institutions at 5 o'clock amid the concern that countries' critical infrastructure could be hit by, cyber attacks among this ongoing tension between India and Pakistan. So what we have been given to understand that representatives from various public and private banks, Reserve Bank of India, National Payment Corporation of India, among others, are expected to attend this meeting. They are going to discuss the measures and, certain, areas which they are going to take up, as a part of exercise of the preparedness. As you remember that, after this Operation Sindoor, all the agencies and organizations which is in charge of India critical infrastructure such as Power Ministry, financial institution, including banks and telecom operators were asked to be on, high alert after having faced a, number of cyber attacks. Even on Thursday, they received an executive order from Indian government requiring the company to block 8,000 accounts in India. So as far as banks are concerned, what we have been given to understand that banks already have started tightening their cybersecurity network to counter any potential cyber attack in response to this increasing tension. And in fact, they are ensuring that the banks stocked ATMs near the border areas with funds in order to prevent any cash shortage. So this is a developing story. We get to know more details once the meeting concludes, that what are the preparation and how they are going to have a measure in place to, combat this challenge.
Shrimi Chaudhary, thank you so much for that insight. We'll continue tracking the latest developments and updates that come in from this meeting, slated to begin in 1 hour at 5 p.m. We're going to cut across to a quick update coming in from my colleague Vishwanath. In a major development, the State Bank of India, previously the largest shareholder in Yes Bank, has announced the divestment of a 13.9% stake to Sumitomo Mitsui Banking Corporation. Vishwanath, coming to you on the phone line. Vishwanath, we understand the transaction is expected to be completed within 12 months. But what does this stake sale mean for Yes Bank's future and, of course, investor sentiment?
Right. Just a point of clarification, Sanjana, here the stake that is being sold is 13.19%. That's roughly 13.2% stake in Yes Bank that is being sold to Sumitomo Mitsui Banking Corporation. As you remember, just a few days ago, NDTV Profit had reported that SMBC was in talks to buy a minority stake in Yes Bank, and this stake sale would happen through State Bank of India's stake being sold to SMBC, and that's exactly what's happening at this point in time. This is roughly a little more than half of SBI's stake in Yes Bank that is being sold to Sumitomo Mitsui Corporation for about 8,889 crore. And that's a significant return on the investment for State Bank of India, because per share, SBI's investment was 10 rupees per share. That was the original investment, which has now risen to 21 rupees 50 paisa, which is a 7.5% premium to today's close of 20 rupees. So that's a significant move. SBI has been fielding questions from reporters for over a year now about when exactly they're going to divest the stake in Yes Bank, because that has been a point of discussion, simply because SBI was one of the lead lender in Yes Bank's rescue plan back in March of 2020. And since then, most other banks have paid their stake, but SBI continued to hold about 24% in Yes Bank. And now finally, moves are happening where SMBC will then take over 13.2% share in Yes Bank. This is, of course, in preparation for a bigger deal. The expectation is that eventually SMBC's stake in Yes Bank is going to be a majority stake, about 51%, even though there are many steps on the way there, because from 13.2 first, they will have to raise their stake to a reasonable number, after which the expectation is that they will merge the India NBFC that they hold, SMFG Credit India. It's an NBFC where SMBC holds about 75% stake. So once that merger is concluded, then SMBC's stake will again rise in Yes Bank, which will help the bank, of course, own majority stake in Yes Bank. And that will also ensure that SMBC's India plans, which have been critical for SMBC for some time now, those will take off, and finally they will have some meaningful presence in the Indian market.
Vishwanath Nair, thank you so much for those updates. This is as SMBC will take 13.19% stake in Yes Bank. Just to clarify, that's Japan-based Sumitomo Mitsui Banking Corporation to acquire this stake in Yes Bank. And it's been a turbulent week for the markets as well, with both Nifty and Sensex ending the week lower by over 1%. Realty specifically felt the pinch, emerging as the top loser for the week, dipping 7%. However, auto and IT indices jumped for the fourth week in a row. My colleague Harsh now bringing us all the details of the wrap of the market action of the day. Harsh, over to you.
You'd expect a difficult reaction from the markets today, but it wasn't so. We've shown considerable amount of resilience on a day like this. 1% lower on the Nifty for sure, but we've held 24,000. That's the one big takeaway for me. Where the broader markets were concerned, they showed a good recovery towards the end. In fact, the mid-cap index actually turned green right at the fag end of the day. The small cap index also closed at the day's high. So considerable amount of resilience in that sense. The advanced decline, the breadth showed that. And in that sense, right towards the end, there was a bit of a taper with regard to the advanced decline, where the declines reduced and the advances increased, which was obviously a positive. Now, in the sense of specific stocks on the Nifty, you had earnings, a Titan, L&T were part of those. Both of those stocks were buzzing in trade, and SBI was up on the back of a Yes Bank stake sale, which is likely to go through as per sources. You also had a few more candidates, something like a Tata Motors on the back of UK-US signing that agreement with regard to tariffs. That kind of aided Tata Motors as a stock. What didn't do well, one that really stood out, was an ICICI Bank. 3% lower, there was considerable pressure on that stock, and the Nifty Private Bank too was one of the top losers of the day. Among other losers, especially within broader markets, you saw Nifty Realty decline. Among gainers, you saw that Nifty Defense, the Nifty PSU Banking Index, which did very, very well on a day like this, despite the decline from the Nifty Private Bank and the Nifty Bank. And you saw consumer durables do well. So those couple of pockets did relatively better. Understandably so, the Nifty Realty was down nearly 3%, the top sectoral loser. But when you're zooming out and you're looking at the week gone by, it's not a bad week by any standard. The Nifty has declined less than 2%. The Nifty mid-cap and small-cap too have shown considerable resilience for the week gone by. We can have those charts, you'll get that perspective. And, overall as well, the breadth has been decently good till yesterday at the fag end of the day, when the breadth turned negative. Till that point, we've had a fairly good few days of trade. And even right towards the end, on Friday, we saw a little bit of a reversal, likely indications of that. So it's going to be a crucial Monday, especially even from a technical perspective, but to also assess and judge whether we can continue this resilience. We had Samir Arora on the channel trying and giving us perspective on what he feels with regard to markets. Listening.
You have to imagine, not for today, but for 5 days, 10 days later, there might be a very low probability that this really escalates to a, force to force or army to army kind of this thing. Right now, it is still remote targeting, and they're using, both the sides are using drones. And India anyway keeps emphasizing that we are only reacting now to what you have done or will do. Otherwise, we don't want to prolong it. So at some point, the Pakistani guys have to decide, but in general, my feeling still would be that they are now still trying to get a way out of this. And in any case, today the market is down 1.5%, and then let's say it goes down another 2% on Monday or Tuesday, and then it ends. On the third day, you will get such a vicious rally that everything will come back.
Samir Arora there giving us his perspective. Meanwhile, we also saw defense stocks witnessing strong gains today, fueled by heightened investor interest following the success of Operation Sindoor and broader geopolitical developments that were driving momentum in the sector. Let me quickly turn to my colleague Anushi for insights on market impact and investor sentiment.
It's the Defense India pack which is in focus. Strong rally that we've seen in a handful of these counters. The defense, again, index up over 3% in trade today. In fact, it's not just this one day that we're looking at these sentimental moves. on all that is happening between India and Pakistan, but if you also pull out the last 1 month, the index has seen about 15% of gains in just this 1 month period itself. Year to date also 9% of gains that we are looking at from this pack. Now let's see what all these companies are doing, what is fueling the defense rally if you are looking at. Firstly, it's the geopolitical risk that is boosting the defense spending that we've seen. Again, a lot of consideration on how the order books of these particular companies are expected to be, with more of these new orders in pipeline which are there. If we also see recent updates, there's Europe boost in defense spending as well, which would lead to benefit for some of these Indian players as well. So that is something that we should be watching out for, which again provides robust order visibility going forward. Now, if you talk about the current valuations also of some of these counters which are there, 5-year average, which was at 37 times of a multiple that we are looking at, compared to that, the current multiple is stacking in the range of 50 times is what we are seeing. So these are some of the points of consideration that we are seeing for the overall defense pack, but let's break down what each company does. So let's start off with something like an Idea Forge, which is buzzing in trade today. Now, if you talk about Idea Forge, they are mainly into the manufacturing of drones that we are seeing, or unmanned aerial vehicles as we call it. This includes the likes of Switch UAV, Netra V series that we are looking at, along with something like a Ninja UAV. Now this is mainly utilized for, if we are seeing, for long range surveillance and military mapping is something that we are looking at. Order book of this company stands at the range of 13.6 crore. This is as of the March figure that we are looking at. Next, if we move on to something like a Bharat Dynamics, the main focus is, now they are into guided missiles.
Right, Anushi, they're bringing us all of the details. And in a major policy shift, satellite communication companies like Starlink, Eutelsat, OneWeb and Jio will now be required to pay 4% of their adjusted gross revenue as spectrum fees to the Indian government. Now, this fee is significantly higher than what these firms had requested from the TRAI, as they had advocated for charges below 1%. My colleague Shrimi now joining us on the phone line with more. Shrimi, what changed? And now how does this 4% spectrum fee impact satellite communication companies' operations and their investment plans in India?
Yeah, so two important aspects here, Sanjana. We need to understand that one was related to license of these satellite players, which DoT has put out early this week, underlining the security norms. And following that, Starlink got a green light from the government to actually start satellite internet in India. Remember that other two players, OneWeb and Jio, already have licenses, and all of them now waiting for spectrum to begin the services. Now, today, TRAI, which is the telecom regulator, has put out the recommendation on pricing of the allocation of these spectrum, which is required to begin the services in India by these global players. The suggestion basically implies that they have to pay 4% of their adjusted gross revenue as spectrum fees to the government. And this implies clearly that all these firms, including Starlink, to pay higher spectrum charges in India. And this is, of course, as you mentioned, also that less than, much steeper than what they actually, asked for. This is 1%. When they were discussing the whole matter with the telecom regulator. Now, other changes and rule, if you see what TRAI recommended today, is one is very important in the point that 3,500 per megawatt annually for these companies for both fixed and mobile satellite services they are looking at. Of that, 500 rupees per user annually for fixed satellite services provided in urban areas, and companies supposed to pay these charges every quarter, and a minimum charge must be paid in advance is what TRAI is suggesting. Now, what is fixed and mobile satellite service? Is basically that whatever these stationary places, all the internet, like your home, offices, remote areas, comes under fixed satellite services, and mobile satellite services is basically internet calls, messages, etc. So both has different rates there, which TRAI recommended. They are also talking about the spectrum validity, which suggests that they will be given 5 years with a possible 2-year extension. So this spectrum will be allocated for them for 5 years with a possibility of 2-year extension. However, the companies has asked for 20 years, but that was not accepted by the telecom regulator. They clearly said that we will, review that and perhaps make some changes later. But for now, it's 5 years. And for rural and remote region also, Sanjana, the government suggesting somewhere to offer subsidies to help user afford satellite internet. So overall, this is clearing the deck for all the global players, including Starlink, and what the source is indicating us at this point of time that they are getting licensed now with the spectrum and the draft rule at place. We will see these all players starting the services from next month itself is what indication we are getting. Back to you.
Shrimi, this is a very significant and a pretty huge update because, like you said, India's 3,500 per megahertz per year and 500 rupees per user per year could now make operations more expensive for global players. So, are they likely to ask for a revision, number one? And could this be higher operating costs, possibly leading to increased service prices for customers?
See, as we understand, this is a draft recommendation which TRAI has put out today. So, of course, when there is a draft regulation, Sanjana, there are always a kind of discussion with all the stakeholders, all the telecom operators and other players which is involved in the process. So, definitely they will push for the lower prices. They want ATR to be somewhere at least 1%, if not below 1%. But as far as review is concerned, when TRAI usually come up with some suggestion on the draft regulations, particularly with a issue like spectrum, it's very rare that they tweak the decision, soon after the stakeholder consultation. However, we need to wait and watch to understand that how they're going to, see the feedback which is required for the draft regulation and how they go about it.
Absolutely, Shrimi. Thank you so much. This is TRAI's draft recommendations. Almost 2 days after green-lighting Starlink, it now appears that satellite networks such as Starlink may have to just pay a higher spectrum fee. We'll continue tracking that story and bring you all of the latest updates. But moving on, as India-Pakistan tensions rise, the nation is reinforcing defense and emergency preparedness. The defense minister reviewed border security alongside top military leaders, including the Chief of Defence Staff and Tri-Forces Chief. Prime Minister Modi also spoke with Gujarat Chief Minister to assess the state's readiness, while the Army Chief secured authorization to deploy battalions for support duties across key commands until 2028. On the civilian front, Health Minister JP Nadda examined nationwide medical preparedness, and in Delhi, authorities conducted mock air raid siren drills at the PWD headquarters, signalling heightened vigilance. And NDTV Shivarur has captured extensive damage following early morning shelling from Pakistan, showing destroyed homes and shops with smoke still rising from the debris. Let's take a look at this ground report.
After a night of one of the heaviest confrontations between India and Pakistan in the aftermath of Operation Sindoor, I'm standing here in Lagama village in Uri, where the first manifestations of Pakistan's escalation last night, as announced by the Indian Army this morning, is fully apparent. This is a row of shops that has been completely decimated in a direct shelling strike. Probably the worst damage that we've seen so far in our travels around Uri. And this happened late in the night at about 3 a.m. Once again, nobody was inside, but we hear there have been some injuries. There's still smoke rising from the debris of what were once 3 shops. A familiar, ghastly image of where the shells are impacting here near the line of control in Uri sector. But the damage is actually much worse. And I want to show you where else shells actually may have landed. There are ambulances moving to and from this place because there are so many injured people who constantly need to be picked up and taken to the hospital in Baramulla and further in the depth areas. But if you follow me down here, there are signs of even more damage because it is clear that there was more than one shell that landed last night. This is right in the middle of Lagama town in Uri sector, completely abandoned. Nobody's here anymore after last night. The first night gave them a false sense of security, thinking that, maybe the shells were either flying over their heads or not quite reaching this spot. But this is how far Pakistan is shelling even civilian areas. These images from Lagama town worrying because this would make Lagama the 8th or the 9th village that NDTV has encountered personally in terms of the damage that we've been seeing personally here. This here is now on the mountainside, built here, a row of houses under construction here. This is all that's left here. Please look at this, viewer. We will not be turning our cameras away from the suffering of the people who live in these areas who never get to leave. This is all that's left. The familiar motif of mangled metal sheets, corrugated sheets that people use as roofs, firewood, chopped pieces of furniture, and the only remnants here, livelihoods completely destroyed. These were once shops over which someone was supposed to have built a house, we are told, and this is all that's left, just splinters of wood and metal, which has become almost like a representative image of what's happening to village after village here in Uri. 3 shells, 2 locations at a span of about 50 feet, and this is the damage. 2 nights in a row, the heaviest possible shelling hitting Uri as well. How long more is it going to go on? Will there be an escalation? Will there be a de-escalation? We don't know just yet. But on NDTV, we will not be turning our gaze away from what the people here in the line of fire are suffering on a daily basis.
And that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
इजी मेंटेनेंस है।
आपको मालूम है इसका वॉश का खर्चा डबल है। तो देख मेरी आंखों के नीचे पहली बार तेरे को डाक सकते एक मरे हुए मुर्गे में अगर जान डाल सकते हैं ना तो डिलिशियस बने।
Friendship came first or the idea came first?
Abhay, he was my friend. We also had.
Was.
Okay, this time. Actually, he landed in my office with this whole neat idea.
Actually, मैं बताया नहीं, मैंने शराब पी के इसको बोला था कि ये करना है।
So you have the conversation in his office. He doesn't take it too seriously.
इसको मैंने बुलाया घर आजा भाई, दोपहर को आया अपने महंगे वीसी वाले कपड़े पहन के। दरवाजे पे घंटी बजी, वो भैया ने इसको सोन पापड़ी के डब्बे में मटन पकड़ा दिया। इसके महंगे कपड़ों पे थोड़ा वो छलक गया। तो
Was it tough initially to get people to buy into the story?
I come from actually Dania vegetarian family and my parents, my dad said, मैं मतलब लोगों को क्या बोलूँगा?
The best thing is if a friendship survives a business pitch, I think that should be a true test of friendship.
हमने एक दूसरे को ये लिख के वादा किया था,
अगर बीवियाँ भी लड़ लें तो हम झगड़ा नहीं कर सकते।
मर जाएंगे पटनी घाटे।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
इजी मेंटेनेंस है।
आपको मालूम है इसका वॉश का खर्चा डबल है। तो देख मेरी आंखों के नीचे पहली बार तेरे को डाक सकते
Hello and welcome. Thanks for tuning in. This is KYC. We're going to today look at Wonderla Holidays. It's an interesting business from a perspective that it all depends, and there's footage playing. It's an interesting business because it's just one of two listed companies in the space, and it's a very niche business to actually be in, and therefore it's a business with strong moats. It also has no debt. And it's a heavy capex business with no debt, and that's the other piece that is very, very interesting about a business like this, with a heavy capex but with no debt in that sense. But yes, that's broadly it with regard to that. Kind of explains the business model well enough, I think, that video. But let's quickly go across and understand why Wonderla first. Discretionary consumption play. Discretionary is the big theme which is playing out. New park launches that they've lined up, strong growth aspirations that the company has, and limited competition with regard to the players and competition that it has. It's only Imagica world. But in terms of what I want to know about the company, one of the key reasons is that the FY26 guidance continues to be muted on the back of a difficult FY25 that the company has had. So why that on a lower base the company is not able to demonstrate strong growth? So that's the first one. What are their plans with regard to increasing visitors? And they ventured into events, etc., which to kind of boost that number. What are their plans to ensure that that number sustains and keeps growing at a healthy clip, because that will push underlying growth, and that's the key to Wonderla's business model. All your costs are upfronted, a large part of it is upfronted. Your OPEX too, in that sense, is largely fixed, and therefore the key will be to push visitors into parks. And that's the other piece. Reasons for the weak visitor count in the last 2 years. Will those reasons sustain is something that I'd want to understand. And the fourth one is that they are introducing dynamic pricing. They're also doing better on the non-ticketing side of things, and they're doing well on their hotels business as well. So all of these ancillaries, the non-ticketing, the hotels, is where you want to see how much traction can they build around the park. It's like PVR selling snacks and popcorn over actually pushing viewers to go and watch the movie. And moreover, the non-ticketing revenue is what I want to understand. How does that take shape going forward? What makes the company bullish in the medium to the long term? Why is it that they are so bullish if the visitor count is not increasing, if the footfall is not increasing, and therefore why do they keep putting up parks if they're not able to garner that traction, is really the question I'd want to ask. New geographies that are being considered, because there are a couple of parks that are under consideration. There's also a fifth park that they're planning to launch this calendar year. The sixth piece is margins weakening. Is that a concern? And it is, because this is a strong margin business. Till Q4 last year, it was running at a 30% margin. Q4 this year, it's at 15%. Higher marketing spends, etc. But pulling down the margin, how quickly can it go back? How quickly can it recover? Is it a concern at all? Does the business model change, especially given the fact that they're going into the events business? Return ratios, what to expect? They've been around the mid-teens or maybe slightly lower than that. Can we expect a ramp up with regard to ROC if scale is to be achieved, if the visitor count goes up? And last one, CAPEX. What are the plans with regard to CAPEX? They've done an equity raise. They sit on cash of nearly 400 crore. And therefore, what plans with regard to CAPEX? Anyway, let's start off very, very quickly with first understanding about the company. Wonderla is engaged in the business of amusement parks and resorts, as you've now fully understood. So it's an amusement park come restaurant, which is food and beverage, come resorts and hotels. So hospitality come consumer discretionary. That's how one would put it. It's a prominent operator of amusement parks in the country. completed its IPO in April of 2014, so not new to exchanges. The company has 4 amusement parks currently: Bangalore, Hyderabad, Bhubaneswar and Kochi. Those are the 4 parks that they have. The company has purchased land in Chennai for a new park, and the new park will start functioning by year-end calendar year 2025. They've also done a fundraise to ensure that there's enough money in the pipeline to continue to launch new parks, and they're expecting maybe a park or 2 to be launched over the next 2 years as well. Of course, approvals for that underway. So we'll keep an eye out on that as well. Makeover of existing parks is also what they regularly do, adding new rides to try and make sure that visitors coming in get a more diverse experience and are attracted to come back again, not just for the same rides, but there are more rides and more diversity in that sense for visitors to try and enjoy. But that's the sum and substance of it. In terms of non-ticketing revenue, those are your levers to kind of push non-ticketing revenue, and this will become important when we look at the operational metrics and when I give you a breakup of how the revenue split is happening in terms of ticketing versus non-ticketing and how the growth of those are happening. So keep this in mind. This is broadly how the non-ticketing services revenue is shaped up. We'll speak to Arun K. Chittilapalli, who's the chairman and managing director at Wonderla Holidays, to get a perspective on all of that we've just spoken about. But it's time to go across and look at our KYC metrics. What will we be looking at? And we'll start off by understanding the operational metrics, which is how have footfalls, which is how is visitor count in the parks evolving. We'll look at income statement, balance sheet, operational metrics and cash flow. Thereafter, we'll look at shareholding pattern, return ratios, street cred and street coverage. We'll look at all of those. And along with street coverage, we'll also delve a little bit into valuations, because that also holds some importance where investors are concerned. So something to look out for. But let's quickly start off with the income statement. And within that income statement, we're seeing good growth with regard to top line. So your top line has shaped up fairly well over the last few years. It's delivered a 50+% CAGR on the top line number over the last 3 years CAGR I'm talking about. Margins have come off significantly over the last 3 years, so that's a bit of a concern, but just the top line growth ensures that you've done fairly well for yourself overall. Margins have gone from 17 all the way up to 50%, thereafter cooling off to 47, and FY25 has been 32. Q4 FY25 has in fact seen margins tumble and take a bit of a knock. So let's pull out the Q4 numbers in particular of FY24 versus FY25. And what we are seeing as part of that is margins have shrunk from 35.5% to just about 20%. So very sharp contraction in margins, and it'll be interesting to understand whether they can recover. There are various reasons given for this margin contraction, and I'll quickly touch upon those before we go on. The first reason is that discretionary spend in Q4 FY25 was muted. So these are some risks to the business as well, and it kind of covers the Q4 numbers. Second one is you've seen a larger focus on marketing spend and employee costs going up. Marketing spend also has increased because they've gone into the events business. They've held a couple of events at their parks to increase footfall. All good measures, mind you, but all of those hurting margins. So are they temporary? Are they permanent? Is this a permanent change with regard to how Wonderla operates? Will be a question. And organizing an event inevitably increases the recurring expenditure that the company incurs, because otherwise the park is functional as is. But if you have to hold an event, then you have various other expenses to take care of, including the performers, etc. And that kind of dilutes margins to a certain extent from what the management has suggested in the Q4 con call. So the increased expenses is what is hurting that margin number. But nonetheless, EBITDA has grown in a very nice and healthy fashion. You look at the absolute EBITDA, it's gone up 91% over the last 3 years. Even when I'm looking at the EBITDA number absolute between FY22 and FY25, as you can see on your screen, it's gone up. If you can switch over to the FY25, correct. So if you look at the number 22 to 147 is very, very healthy, but the journey there is difficult because FY23 the EBITDA was 213 crore and FY24 it was 230 crore. So actually there's been a shrink with regard to EBITDA when you're looking at each of the years, and that is where some of the concern lies, and we'll try and quiz management as to what to expect going forward on this count as well. So that's how the income statement stacks up. Some concern, no doubt, but the direction with regard to top line growth is absolutely solid and it's right. Even in terms of profitability, the direction is the right direction in which they've gone in terms of profit after tax. So fairly decent in that sense. Again, it's cooled off versus FY23 and FY24, but nonetheless, the profit direction seems just about right. Let's look at the balance sheet therefore. Now, when you're looking at the balance sheet, you look at the equity capital, it's gone up from around 1,100 crore to 1,700 crore in the last year or so. That's because one, they had an equity raise of around 500 odd crore, and then you obviously add the profit after tax for FY25 full year, and that's how you've added the 600 crore to the 1100 crore number and arrived at the 1700 crore in terms of net worth at this point. Borrowing is close to zero. This is a very low to no debt company, which is impressive because they do a lot of capex. But when you're looking at the cash and bank balance, it's sitting on a 400 crore cash balance. No surprise. Why? Because they've done an equity raise in FY25, and that aids the cash balances. Those cash balances are not fully deployed yet, and therefore how do they deploy that cash balance and how quickly do they do that will be a question. Now, very important to note here, for a 4,000 crore market cap company to have a cash balance of 400 crore is significant, and therefore that's the other piece you want to be careful about as to what they do with that cash balance. But for the moment, that's how the financial metrics look. No concern with how the balance sheet has been going about itself. There's absolutely no concern there. Let's look at operational metrics now. Now, in terms of operational metrics, again, it's crucial to understand footfalls. Now, what's happening with footfalls is that they are falling. Footfalls have actually fallen 10% FY23 versus FY24 and FY25. So from 3,311 crore come down to 3,050 crore in terms of footfall. I apologize. Footfall from 33 lakhs has come down to 30.5 lakhs. That's how the footfall has come down by. Now, in terms of park-wise footfall, that's the distribution. The park in Bhubaneswar will start to incrementally add to the footfall because this is a park which was launched in FY25. So it's starting to see an expansion in footfall even in Q4, and very sharp growth that we are seeing there. So FY26 will be the year, first full year of the Bhubaneswar park becoming operational. So you want to see as to how that park does in terms of footfall and where it goes and how it contributes to the overall footfall of the company. But this clearly is a point which is lacking. Let's look at revenue per user. And when you're seeing it 2023 versus 2024 versus 2025, revenue per user has not gone up significantly. It's gone up by just about 16-17%. And therefore your ARPU, which was at 1,250 rupees per user, has gone up to 1,450 rupees per user. No significant increase. Let's take a breakup of this as well. The breakup of this is on ticketing versus non-ticketing. And in terms of the breakup, again, very interesting metrics. The ticketing numbers haven't gone up substantially. It's the non-ticketing numbers which are showing the best growth. This is average ticketing revenue and it's location wise. If you see it, Hardly a 2, 3, 4% growth, not more than that. But when you're looking at non-ticketing, let's look at those numbers with regard to non-ticketing. And the average has seen a growth of at least 50-odd%. And therefore, a large chunk of the revenue coming from non-ticketing. And that piece is doing very, very well for itself. So non-ticketing is the big focus. Let me now quickly take you through cash flows. Interesting here because cash flows actually come off FY23 versus 24 versus 25 along expected lines. And we'll give this a thumbs down because cash flows have come off. But they're in line with profitability. So that's a positive. No receivables, no working capital requirements, none of that. The net cash flow is close to zero because a lot of the cash flow goes into investing activities and investing in new parks. Now let's look at return ratios. Return ratios have been steady in that sense over the last couple of years, around 15-odd%. Can they maintain that will be the question, but clearly not the best place to be with regard to where return ratios are. Now, return ratios technically are a neutral, largely because it's a mid-teens kind of return ratio and there's no debt. So it's largely equity, and therefore your return ratios don't look as weak for a high capex company. They're doing fairly well for themselves. If they're able to do well on the top line count, then you might well see these return ratios turn around and do very, very well. And therefore, you'll want to understand whether there's a target IRR or whether there's a target return ratio. But we'll give this one a neutral with regard to where return ratios is concerned. Let's look at shareholding very, very quickly because we're running out of time as well. So in terms of shareholding and in terms of promoter holding, it's around 62-odd% currently. That dilution that you see is purely because of the equity raise that's happened. FIs are showing a better interest in the company as part of the fundraise. We've had Custody Bank of Japan, which has put in money and now owns around a 2% stake here. There's also Value Quest India, which owned this one, but now owns it maybe through another emerging markets fund. There are DIs, Tata Mutual Fund, SBI Magnum, which own around 9% of the company, so something to look out for. Some good investors within that FI, DI bracket as well. But the public shareholding has gone up substantially. So from FY20, which was at 27,000, the public holding has gone to 58,000. Something to be careful about. Number of shareholders have gone up substantially. That's how it's shaping up on the shareholding count. We'll give this one a thumbs up, no doubt about that. Let's look, therefore, at street cred now. In terms of street cred, stocks done nothing over the last year or so, and those numbers will flash on your screen. Stocks done nothing over the last year or so. For the last 5 years, it's done quite well for itself. It's not done badly at all. It's been a 5-bagger in the last 5 years. So not bad returns in the medium term, but outside of that, in the last 1 year, it's been a bit of a problem. And that's also because the operational numbers and footfalls aren't coming through. So you want to wait and watch as to how that evolves. Last off, I want to cover valuations and street coverage. In terms of valuations, when you're looking at it, Wonderla versus Imagica. Imagica trading at a premium. FY25, trailing 12 months, surely at a premium. But even FY26 at nearly a 15% premium to Wonderla. So in that sense, it's not a very expensive stock in relative terms, but at 35 times you want better growth, right? So something to look out for again is growth. Whether it can clock that growth and re-rate sharply in terms of its price to earnings will be a question. That's how the analyst recommendations have shaped up. There's an 83% upside to what the average analyst expectation is. So again, we'll give this one a neutral because of how all of those metrics are playing out. Let's go across to Mr. Arun K. Chittilapalli, who is joining us. He's the chairman and managing director at Wonderla Holidays. Welcome, sir. So I want to start off with trying to understand how the environment is. And you've guided for a 5 to 10% footfall growth. You've not done that in the last couple of years. One, what makes you confident of that growth? And two, wouldn't you want something better in terms of that growth number? Because Bhubaneswar adds to that number, right? So just trying to get that perspective.
Thank you for having me on the show.